Good morning, everybody. Welcome back to another episode of the Market Open. We are live early today at 7:26 a.m. Because we not only have SoFi earnings that we have to discuss, which I thought was going to be the headline of today's show, but we got a lot more than just SoFi earnings to discuss across the board in the global capital equity markets. We are seeing red. MicroStrategy down 6%. Robinhood down 6.2%. Bitcoin 99,000, below 100,000 for the first time in over 2 weeks. Starbucks down 0.5%. Meta is down 3%. SMCI is down almost 10%. NVDA is down 11.5%. At one point, NVIDIA was down 15% in the pre-markets. Oracle is down 7.5%. Coinbase is down 4.5%. Amazon's down 4.5%. I mean, you pick the stock, almost everything. There's some exceptions right here, but pretty much everything is getting hit pretty badly. Tesla as well, down 4.1%. And then SoFi, which we'll talk about in just a second, is down 11.1%. Palantir as well, I think, is down 7 to 8%. Palantir is down 6.7%. So it's a bloody red pre-market. We'll talk more throughout the entire day on the Market Open on, is this a buy the dip? Is this something to be legitimately scared about? Is there a real wall of worry here? Is there a fake wall of worry? Kind of how's the market interpreting it? But it is undeniable that this is definitely the market being concerned. Definitely the market saying, wait a second, this is not one of those things that can easily fly by without us having a little bit more concern about how this is playing out. I woke up at about 5:30 today, and when I woke up, these were the first 3 notifications that I got. And I was just like, what? Like, I saw this, and this wasn't even the worst of it. This got way worse I posted this at 5:45 a.m. and by like 6:45, all of these were down another 3 to 4%. This is red. This was red. Ironically, I came downstairs. I thought my dad was going to be upset because usually when he sees red, my dad's 63. He understands actual business, not stock market mumbo jumbo. So he knows that, when things go down, you lose money. That's not a good thing. So I came downstairs and he was like, can we buy some NVIDIA right now? I've been waiting for this at 125. Let's buy the dip. And I was like, wow, he is legit turning into an investor, bro. My dad never wants to buy the dip. My dad is allergic to the dip. He likes seeing his stocks go up. And for the past year, obviously, a lot of his stocks have gone up, so he's been very happy. But he's not one of those guys that jumps into the dip. I think he's like legit becoming an investor because he was like, dude, I've been waiting for NVIDIA at 125 for a long time. And I looked at him, I was like, are you sure? He was like, yeah, let's buy it, bro. Let's do it. So I haven't bought it for him yet or bought anything myself. But I'm not going to lie. VIX right here up 43%. The urge to pull the trigger is pretty aggressive. However, we spent a good hour and a half last night discussing this DeepSeek issue. So I'm not going to go super deep into it. I mean, we'll talk more about it throughout the entire show. But the kind of core thesis here is that if China is able to train a model for 1/100th of the cost that some of these United States companies are spending to be able to train these models, does that mean the AI CapEx trade is over? And given how the market's reacting, here's my take. At 9:30, if we don't recover, this is going to get a little dicey. By 9:30, call it 9:45, in the first 15 minutes of the Market Open, if this 11% down on NVIDIA does not turn to like 4 or 5% down, then that means there's some legit concern. Because on August 5th, and I know people are comparing this to August 5th, and how could you not compare this to August 5th with the VIX up 40% in one day? In August 5th, I mean, things recovered relatively quickly. Like maybe not within the first 15 minutes, but you could see signs of even in the pre-market, things bottoming. Like the S&P, people forget, bottomed in the pre-market. It hit 507. Right now, S&P 500 down about 2.2%. It hit 507, which was a full 10.0% retracement. But that happened in the pre-markets, and then it bounced. So if these pre-market lows are not actual intraday lows, then I wonder how much more lower do we have to go? And that's why I haven't pulled the trigger on anything yet, because I'm just like, well, wait a second. How bad is it going to get, and how serious is DeepSeek? I don't think it's that serious at all. We have some equity reports that we'll read that came out this morning saying that, hey, they think this is an easy buy the dip. You got Dan Ives saying that this is a buy the dip. But if it's not a buy the dip yet, then, obviously there could be some more juicier prices around the corner. Palantir is down about 5% right now. Palantir is down 5%. Futtbucker says August exactly. August the low was right before the open. Must hold before the pre-market. Must hold pre-market low. Exactly. I think everyone, if you're just trying to get a little bit of a sense of like what's happening, how you should play this, we need to hold these pre-market lows in the pre-market. Meaning NVIDIA should not go down to below 122, which I believe was the pre-market low of this morning at 9:30. If that's the case, that means market participants across the world have entered the market in the next 2 hours, and they've decided that 122.72 is not enough pain for NVIDIA. NVIDIA has wiped out $450 billion of market cap in the past 2 hours, by the way. So it's bad. It's pretty bad. However, it's bad with a caveat. The caveat is that it might not be that serious. And I know that's crazy to say after I just said it wiped out over $500 billion market cap, but it quite literally could be a nothing burger. It's just no one knows. And the market would rather sell it and buy it higher than, hold on to their stocks if it is a something burger. And that's kind of just what we've seen historically. And that's definitely what's happening right now in the pre-markets. Okay, SoFi. Let's get into SoFi. We got the call at 8 a.m. So let's talk about what happened with SoFi. SoFi had a good quarter. It's down 11% right now, but they beat on the top and the bottom, which is what we expected them to do. They usually always beat on the top and the bottom. 739 million versus 682.2 million. So that's a beat on revenue. And then EPS 5 cents versus 4 cents expected. That's a beat. The problem is on SoFi, their guidance sucks. Like, it's not good. And the tech platform, two reasons why SoFi is down. Well, 3 reasons why SoFi is down 11%. Number one, the literal market is down 5%. So it's just a sucky day for SoFi to report. It is what it is, but it's a sucky day for them to report. Number 2, the tech platform growth is non-existent. And everyone wants to give this company a tech multiple, including myself. I would be very happy if SoFi gets a tech multiple. Unfortunately, SoFi can't get that tech multiple if they don't show the growth in the tech, which has always been the concern around SoFi. So that's another reason it's down. And then the third reason it's down is because of this full year 2025 guidance. So they are guiding for 23 to 26% growth in the top line, which is good. The street expected about 18% growth, 3.0 billion. They're guiding for about 3.275. And if they're sandbagging there, then maybe we get more than 26% growth. But revenue guidance is fine. It's just EPS guidance. The street wanted about 29 cents. They're doing 25 to 27 cents. Maybe they're sandbagging as well. But in 9 months that'll work out well for them, hopefully. But if you're gonna do this in for the full year guidance, the street's definitely gonna punish you, which makes sense why they're down 10% right now. And then Q1 2025 guidance, I think, is a little bit lower than expected as well. Only 3 cents on the low or the high side for EPS. So they're not going to probably surprise on EPS. And then revenue about 725 to 745 million, which is 25 to 28% growth. I think it's the EPS growth for fiscal year 2025, which again, EPS determines earnings growth, right? Like that's ultimately the bottom line is how companies are judged in terms of the multiple they're given. That was lower than expected. And that's why the street is not the happiest. So that's why SoFi's down. I mean, that's it. It's really, I'm curious how Noto's going to talk about this, but that's really the core thing. We can go through a lot of the other numbers, which are good. It's nice, but on a quarter like this, it's really about what is the guidance. Now, one of the things they did really good on was their loan originations, which were spectacular. Loan originations for auto, student loans, and personal loans were up. So Q4, there were 1.3 billion in student loans. Great. 5.2 billion in personal loans. That's great. And then home loans was 577 million. These 3 numbers beat pretty much every single analyst expectation. So that was good. But then the fiscal year guidance just ended up not being that good. Now, they also reported net income of 332 million for Q4 2024. That's a one-time thing. Because there's no way they're going to continue $300 million every single quarter, especially when they're guiding for about 80 million. So there's something in there that allowed them to show net income of 332 million, probably a one-time charge, but that is not exactly what meets the eye. So if anyone's seeing that number and like, oh my God, they did $300 million of profits, it's like, yes, for this quarter, not guiding for that every single quarter. And that's why the street has this down right now. Good morning. Good morning. Thank you, everybody, for being here today. SoFi beats on the top and the bottom line, but they miss pretty badly on guidance for 2025, which, again, they could be sandbagging, and this dip could be a great dip if they're actually going to grow to 34 to 35 cents, and they're only guiding for 25 cents of EPS. It's just the market can only do with what information they have available to them. And given this is the information that is available, SoFi right here down 11%. Chicken Breast, thank you for the $5 super chat. DeepSeek is a sign that open source AI is a good way to push the AI stocks. Yes, I think DeepSeek is a sign that open source AI is becoming much more real than what we thought. Doesn't mean that Nadella and Zucks are not going to spend the $150 billion that they said they were going to spend. Now, we actually do have an answer from Nadella. He didn't literally say he's still good for his $80 billion after he said he was good for his $80 billion last week, but he tweeted this, which a lot of you guys know about. I found out about yesterday for the first time ever. Jevon's paradox, or Jevon's paradox. I'm probably saying it wrong, but he tweeted, it was kind of a subtweet to the entire Wall Street. Like, it was like this, he was basically, this tweet is for Wall Street. It's not for you. It's not for me. It's for Wall Street. He said, as AI gets more efficient and accessible, we will see its use skyrocket, turning it into a commodity that we just can't get enough of. So Jevon's paradox is essentially an economic principle that occurs when technological progress increases the efficiency with which a resource is used, reducing the amount necessary for any one use, but the falling cost of use induces increase in demands that are enough that the resources increase rather than reduce. So it's kind of like economies of scale, but then the demand for those economies becomes so large that so does the scale. Governments, both historical and modern, typically expect that energy efficiency gains will lower energy consumption rather than expecting the Jevon's paradox, which increases energy consumption because it increases energy demand. So that is Nadella's argument for kind of why he's probably still good for $80 billion. But nonetheless, the street doesn't believe it. The street does not believe it. Amit, it might be time to consider that big tech is completely overboard in spending on AI just to win the AI race. Well, maybe. I mean, all right. So who thought they were going to wake up this morning to see NVIDIA down 11%? Because I didn't. And I know NVIDIA was down 5% last night. And I was like, all right, down 5%. It'll probably be down 6%, 7%. Maybe it'll be down 4% when the market opens. I did not expect the market to take it all the way back to 125 at one point 122 and say we are completely done with this. Look at Oklo energy play. Why do they have a bid? Why are they up 91% year to date? Because of increased energy demand, the perception of increased energy demand for nuclear. They're down 17%. VST, another data center play, they're down 11%. VRT, another data center energy play, they're down 15%. All of the semis, pretty much the least amount of pain in the semis is ironically AMD, which is down 3%. SMCI down 10%, NVIDIA down 11%, Marvell down 10%, Marvell down 13%, TSM down 11%, Lam Research down 5%, Dell down 7%, Micron down 6%, Broadcom down 12%. I mean, it is a bloodbath, an absolute bloodbath on the semiconductor names, but also on the Mag 7 that are kind of following NVIDIA's lead right now. Never. Yeah, a lot of you guys did not expect 12% down. I didn't expect 12% down, dude. Like, not that one. That one caught me off guard. I woke up at 5:40-ish. I think first thing I checked was my phone, and then I tweeted that picture at 5:45, and I was just looking at the notifications. I was like, what? 11%? Like, it immediately woke me up out of bed. I was just like, wait a second. This is a little, it feels a little aggressive, bro. Like, this is August 5th type of shit. Like, what's going on here? All right, so poll in the chat, overreaction or not? Poll in the chat, overreaction or not? Also, who bought the dip already? Who actually pulled the trigger on something? Put in the chat if you pulled the trigger. Chicken Breast says, cheaper models like DeepSeek is a good sign. NVIDIA will sell more hardware as more companies have access to cheaper models. NVIDIA won't lower their video card prices and the demand will surge for their cards. So this is exactly the take I had last night. And someone who works in the AI space at Robinhood, who's former Robinhood, he commented under my post, and he basically said exactly what you're saying right now. By the way, thank you for the super chat. But it was almost exactly what you're saying right now, which is that more of inference training demand based on even the reduced cost of that demand or of that inference training will create more demand, aka more GPUs, aka more CapEx, more data centers, etc. The problem is the market is thinking that there's a wrench in that thesis because of the headline. And what is the headline? The headline is DeepSeek built in $6 million. And that number is accurate, by the way. There was a lot of sources I looked at last night. That number is actually accurate. There are a lot of people saying, oh, that number is bullshit. That number is not bullshit. What might be bullshit is how many GPUs did they actually have? did they have 50,000 to 100,000? No one really knows. But it is not inaccurate that they spent $6 million on the inference training on old H800s, not even H100s, to be able to do and create a model that is almost as good from an open source perspective as GPT. So that headline, which is accurate, at least to an extent, is getting the market to think, okay, hold on. If that is true to even some degree, then this begs the question on how exactly should we be interpreting the validity of a company like OpenAI spending as much money as they're spending. 85% of you say it's an overreaction right now. 85% of you say it's an overreaction. This chart right here is kind of comparing all the models together. And as you can see, DeepSeek is performing with the benchmarks of the other models. AT&T double beat as well. Yeah, AT&T is actually green in the pre-markets. We got the Noto call in about 20 minutes. We'll listen to SoFi. But AT&T, I think they're green still. Yeah, they're green. They're up 2%. So AT&T, nice quarter, double beat on EPS and revenue. A bunch of you say I bought NVIDIA and Tesla. Peter said he got more SoFi. Got some fart coin. Yeah, fart coin should be taking a dip right now. Fart coin's down 27%. There you go. The Trump meme coin, I think, is down a little bit as well. That is down 10%, 10.8%. So all of these risk-on assets are going to get a little hit, at least right now. Okay, this is what Dan Ives said. So Ives thinks it's a great buying opportunity. Here's what he said today. He wrote, so four things. So he says, first, DeepSeek is a competitive LLM model for consumer use cases. Launching broader AI infrastructure, a whole other ballgame, and nothing with DeepSeek makes us believe anything different. It's about AGI for big tech and DeepSeek's noise. Also, no US tech companies using this tech. It's a buying opportunity, which I think is fair because no freaking US company, like definitely not Palantir, is going to incorporate a freaking Chinese. By the way, if anyone downloaded DeepSeek and asked it about China, it literally says, we will answer questions in line with the Communist Party of China as we are promoting social good. You try to ask them about Tiananmen Square, no answer. You can try it out yourself. If you actually ask it about China, it's not going to give you an answer. So there is no way in hell, there is no way in hell any US tech companies are going to use this model. But that's not really the headline here. The headline is more so, does Microsoft need to spend $80 billion? And I think that's the broader question of what's happening right here. He then says bears missed the historical rally in tech stocks last 2 years and will miss the next 2 years, constantly waiting for the black swan to end the AI revolution trade. From Fed days, rumors of NVIDIA Blackwell delays, Tokyo Black Monday. Today, no different with DeepSeek, buying opportunity. He said no US Global 2000 is going to use a Chinese startup DeepSeek to launch their AI infrastructure and use cases. At the end of the day, there is only one chip company in the world launching autonomous robotics and broader AI use cases, and that is NVIDIA. Golden buying opportunity. And then he says the bears dominate the weekend narrative and try to scare investors. This is a black swan involvement. It is actually the opposite. If inference training accelerates, it speeds up the AI revolution. Bullish for hyperscalers, NVIDIA, and use cases. DeepSeek is an impressive LLM, but that's it. And it ends there. So that is Dan Ives' thesis on what's happening right here. SoFi below 16, correct. SoFi is below 16. Amit, are you buying anything yet? No, I have not pulled the trigger on buying anything. I'll let you guys know if I buy anything. I really want to, but being a little conservative. That's okay. I spent a lot of money last week in the markets. I don't feel the need to aggressively put more money into the markets. I'd rather buy NVIDIA at 130 than 125, but have a little bit more confirmation that NVIDIA is actually going to hold these levels. And I think at 930, we're going to, and I think first of all, no one should feel pressure to buy the dip. That's don't give yourself the mental health stress of oh my God, I need to buy the dip. That's not a mature way to think about this stuff. A mature way to think about it is, hey, did you have a price target on NVIDIA that absolutely was reached? And for example, if Robinhood got to below 40 right now, I wouldn't even be thinking of buying it. But that's because I know Robinhood so well intimately. $48 is not really a dip to me, down 5%. Okay, cool, whatever. But if it went below 40, I would be aggressively buying this right now because I understand it. NVIDIA, I entered in last week at 139. Do I understand the company as well as I should? Probably not. But I'd rather buy it at 130, 131 than at 126 with having the confirmation that these levels are going to hold. And I think at 930, we're going to get real confirmation similar to August 5th on are the pre-market lows the actual pre-market lows, which maybe is the case, maybe not. I mean, we're going to see in the next 2 hours how deeply this market is going to interpret what's happening. But if you know some of these companies very well and they reached your levels, like if you were waiting for 75 and below on Palantir and it's below 75, then that's your opportunity. You know, if you were waiting for 220 on Broadcom and now it's 216, that's your opportunity. But then it begs the question, how serious were you about waiting for that opportunity? And this is the beautiful part about a dip, right? It really makes you question how much did you want a stock at these levels? And also, do you understand enough about what's going on in the macro to be able to actually pull that trigger? So I think at 9:30, when the market actually opens, not the pre-market, and we get hundreds of billions of dollars across the world stepping in or stepping out, then we're going to get a little bit of a better sense of how bad this dip is or how great of a buying opportunity this is as well. But we're going to see. We're going to see what happens. Do you think it drops lower on the market open? I have no clue, dude. I really have no clue. My take is more so if it drops lower, if the whole market drops lower at 9:30, that means we got an issue. Because again, on August 5th, which I really want to say today is August 5th, but I just don't have any clue. Looking at the VIX, it makes it feel like today is August 5th. On August 5th, we bottomed in the pre-markets. Pretty much across the board. Were there some stocks that took a little bit more of a hit when the market opened? Yes. But pretty much everything bottomed at like 8:45, 9:30, and then you really had to get in by like 10. I mean, I remember Palantir was at $20 in the pre-market. By like 10:30, Palantir was at 24. And then they had earnings and they gapped up to 30, right? So like your dip was literally that small period of time in the pre-markets, and then you have to buy at a price that was not as good as $20. You have to start buying at 24, 25. So if we see similar action to that, then I think it'll be easy to step in and deploy some cash. But if we don't see action like that and we actually see further downside momentum, it's not as easy to say that right now is a great buying opportunity. This chart is going viral right here. Let me show this chart as well. This is the typical chart that the bears will pull out today, and you'll probably see this across financial media. But this is the internet bubble compared to the Magnificent Seven, compared to the Nifty 50. And we are essentially at a 75-year high in United States stocks versus the rest of the world. And as you can see, when you look at this chart and you just compare it from multiple perspective, it does look like obviously there is some massive bubble that needs to pop because tech multiples are so high. The problem with this chart, and this is what we cover every day on the show, is that earnings growth has justified this chart significantly. Just case in point, right? Google is trading at 18 times 2026 earnings. That is not expensive. In no world is that expensive. And that's why Google makes, the market seem like it's overvalued in the short term. But if you go out to 2026 and you factor in their growth, where does that growth come from? AI, productivity gains, CapEx, buybacks, yada, yada. That's what makes it seem like, oh my God, we're living in one of the biggest AI revolutions ever, where these tech companies continue to grow. The Mag 7 continue to eat. Small caps are not going to, outperform the Mag 7 because the Mag 7 simply have too many good cash flows. They can handle any rate environment, et cetera. Therefore, and if Google's trading at 18 times 2026 earnings, holy crap, this is cheap. If NVIDIA is going to keep growing at 50% for the next couple of years, NVIDIA is cheap. If they do $5 of EPS next year or in 2025, you put a 40 multiple on that. A 40 PE on $5 of EPS is very reasonable for a company like NVIDIA. That's a $200 stock price, 40 times 50. NVIDIA's at 125, right? So it's like that chart's going to go viral today, but nonetheless, the argument the bulls have been making is that there is a reason for why stocks deserve some of the momentum that they're seeing right now. Oh boy. We are going to see how this plays out. We are going to see how this plays out. On Beneficial said, I was made for dips. Let's send it. Current VIX focuses on AI, different from August 5th. That is true. August 5th dip was more of a yen. That's a good point. August 5th was a macro event. This current decoupling of the AI trade is less about macro. It has nothing to do with macro, actually. It has everything to do with like the substantive nature of, is China going to beat the US when it comes to training, and does that lead to a CapEx decline? So it is a different form of volatility, and usually volatility is more macro driven, right? This has nothing to do with macro. I mean, the 10-year is freaking down today. This is great. The 10-year is down 4.52%. This is amazing. This is what we want to see. We want to see that 10-year get closer to 4%. So it's not macro driven at all. It's really about the substance of the AI. And then that begs the question, by the way, the dollar right here, look at the dollar trying to go back below 107, which is great. Then it begs the question, does the market actually know anything about AI? Right? Because if the market doesn't know anything about AI, then the market's being stupid right now, right? Like if the market actually doesn't understand this whole CapEx, AI, data center trade, what does it mean to train an LLM, inference training, yada, yada, then these dips are going to be the juiciest dips ever because these are not going to be dips that last. But if the market actually understands that this is a real competitive threat and it will hurt NVIDIA's earnings and by proxy, the rest of the Max 7, then maybe the market has it right. I kind of think the market has it wrong, but in about 2 hours, we'll see how much right it is or not. Does everyone want to put how much they're down in the pre-markets right now? I'm down $14,000. That'll probably turn into 30,000 when the market opens. Let's gather around the campfire and post how much we're down in the pre-markets. Oh, we got Steve calling. Let's get his take on this. Let's see what Mr. Steven Fiorillo has to say. Steve, I'm live on the market open.
Oh, interesting. Okay. I just want to tell you something. If SOFI was Palantir, it would be at 100 right now.
Well, SOFI is not Palantir, so...
And it makes you realize how overvalued Palantir is. Okay,
so I have you for 8 minutes, and then I have to listen to Noto speak. Before we get into SOFI, just raw reaction, DeepSeek. What are you thinking right now?
I don't really care because I think everybody's overreacting. I sent you, that guy said it the best way. So I can't say it any better than that tweet I sent.
So I know you say and the tweet he sent, guys, is basically someone just saying that this will create more demand. But look, I know you say you don't care, but Nvidia's down 12%. The market obviously cares.
But it doesn't change my life at all. I don't care.
I'm not saying it changes your life. I'm just saying as a market analyst, why do you think the market is so upset to the point that they take it down?
Everybody is shook. People are selling. This is like the Japanese yen trade. It'll get bought up by Wednesday.
So you think it's an August 5th again?
I think it's a nothing burger once again.
Are you buying NVIDIA today?
I have a very busy day today, so I probably won't be doing anything when I leave the house. I didn't even get to read through the entire press release for SOFI or anything. I just skimmed through it when I woke up and I was still half asleep and said, you know what? This is crazy. And the only reason it's down is because of the market sell-off.
Actually, no, that's incorrect. SoFi's down because their guidance sucked for 2025. Like, legitimately sucked.
They're sandbagging.
Yeah, well, sure, but that doesn't mean the market's not going to take them down, right?
Well, did you see their revenue beat?
Yeah, but Steve, again, it's about EPS at this point. It's not about revenue
anymore. Okay, did you see their EPS beat?
I mean, well, did you see their EPS guidance? Because that's not what the street wanted.
I don't believe it. The same way I don't believe Noto every time he comes out with guidance. He's going to do it. We got 3 beaten raises last year. He's going to do the same thing.
Look, I agree. I'm just saying it's down for a reason. It's not just the market. That's what I'm saying.
But unlike all these other people, I actually follow SoFi and know that Noto's a freaking sandbagger. And he's going to come out in Q1 with a double beat, and then guidance raise. He's going to come out in Q2, same thing. I mean, it's ridiculous. And maybe it's Noto's fault.
Yeah, but Steve, so SoFi's down 14%. I agree with everything you're saying, but the tech platform showed like no growth. Like
we need to see what he says on the conference call. And I do agree. I'm not going to defend that. He needs to win RFPs, and he needs to show growth on that. And I know it's slow, and I know that it's an uphill battle to get all these things done, and it's not going to be overnight. But he needs clarity on that. And if you don't do that, it's going to make it a little hard to evaluate as a tech company. I fully support that argument because I agree with it. I didn't say it.
Yeah, that's fair.
He needs to get clarity on that. And he's been saying that it's going to take time. He says they're involved with RFPs. But at some point, you got to show some proof.
100% agree. At some point, you got to show some proof. But, like, I don't know, dude. That guidance is not nice, and they're going to have an answer for, I mean, if they're sandbagging, they're going to have to just bullshit the call then, because, you know.
I mean, all indications lead to their sandbagging.
Okay, so we got the call in 5 minutes, but again, going back to NVIDIA, you were not stressed at all that it's down 12%. Not even one part.
No.
So the Mag 7 being down 5 to 7%, none of that is stressing you either.
Well, I'm certainly not logging into my brokerage accounts today.
Yeah, I think that's a healthy thing. That's a healthy thing.
There's no reason to see the huge move down. But you know what? It doesn't matter. Is anybody going to stop using Meta's platforms? And I hate to say no like that because it's the company name. Is anybody going to stop using Instagram or Facebook over this? Is anybody going to stop advertising over this, which is where they make the majority of their money?
Let me ask you this, Steve. Let me ask you this. Do you think the market needed a catalyst to get a dip, and they're just using this DeepSeek thing?
Oh, I think pullbacks are healthy. I just think that this is a ridiculous reason for a pullback. If we get such a violent mood swing because of a headline that doesn't change anything with these companies' earnings, that's not a real reason for a pullback. You should have a real reason for a pullback. But think about it. Is anybody going to stop using Microsoft Office or Azure or LinkedIn or anything? No. Is anybody going to stop buying from Amazon on e-commerce or stop using cloud? No. So, I mean, the problem with this is you have a headline that may be bullshit, may not be bullshit, but the bottom line is that it doesn't change anything with these companies' earnings power. It just creates around AI. And right now, I can't even tell you if AI is baked into these earnings or not because of how powerful their revenue and earnings currently being generated are. So,
well, that's the other thing. It's actually, I mean, if Meta does, let's just assume DeepSeek is correct, which I'm not, but let's assume it's totally correct. If Meta gets to save $60 billion, that's not a bad thing. Like for
no,
Meta,
it's not, because
Meta.
that goes right to buybacks and dividends.
But it sucks for NVIDIA. That's for damn sure.
The only one that would get hurt in that realm is NVIDIA, but I don't believe that that's going to happen only because even if, let's just go down the road of they're correct, okay, they still need to build more data centers for all the cloud compute that needs to happen in the future. So I don't think that Microsoft or Amazon slow down on their data centers. Maybe Meta does a little bit because they're not hosting the way these other companies are. But it doesn't change the narrative for Amazon, Alphabet, or Microsoft in cloud. The only one it would possibly affect is Meta.
I agree. And another thing that's really important, I know you said you're not going to be looking at the markets too much today, but one thing that I'm thinking of very seriously is what happens at 9:30. Because if this is August 5th, as you said, like a little bit of a repeat, the pre-market low was the bottom. And if we don't make another bottom in the pre-markets, then that's an issue at 9:30.
And remember, there's not many shares being traded right now. And people may go in who don't do anything in the pre-market. There's a lot of people that don't do anything in the pre-market. And they may be like, everything's down. This is the opportunity I've been waiting for. Maybe it gets extended out to tomorrow, but this is going to be an August 5th that gets brought up because I just don't see how this headline changes anything.
Yeah, I agree. And the timing of how it gets bought up is probably going to be something we have to look at over the next couple of days as well, if it does get bought up.
I mean, when I originally say by Wednesday it gets bought up, I mean, I don't think that this is going to materialize into a bear market or a long sell-off. I mean, you have earnings season right now from the biggest companies in the world. Meta reports this week, and everybody else reports end of the week and beginning of next week. So I am not worried at all. Like if you get a 2-day drawdown, I mean, that's a great setup going into earnings because guess what? After all these earnings calls, this thing will be a distant memory.
I agree. It is a great setup going into earnings. 1,000% agree with that. All right, Steve, we got the SoFi call. We'll talk to you later.
You're streaming it on your thing?
Yeah.
All right, I'll just listen to it there.
All right, talk later.
All right.
All right, that was Steve's take. Let's see if SoFi's live. It should be live in just 20 seconds. And we'll get started. AT&T, Verizon are up. Dividend stocks are up in the pre-market right now.
Good morning or good afternoon all. My name is Adam and I will be your conference operator today. At this time, I would like to welcome everyone to the SOFI Technologies Q4 and full year 2024 earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by the number 1 on your telephone keypad. If you would like to withdraw your question, please press star followed by 2. Thank you. With that, you may begin your conference.
Thank you and good morning. Welcome to SoFi's fourth quarter and full year 2024 earnings conference call. Joining me today to talk about our results and recent events are Anthony Noto, CEO, and Chris Lapointe, CFO. You can find the presentation accompanying our earnings release on the Investor Relations section of our website. Unless otherwise stated, we'll be referring to adjusted results for the fourth quarter and full year of 2024 versus fourth quarter and full year of 2023. Our remarks today will include forward-looking statements that are based on our current expectations and forecasts and involve risks.
Guys, pre-markets are going kind of crazy right now. NVIDIA just went to 122 to 127. It's going up, it's going down. SOFI went up 3%. It went from 1745 to 15 in a second. Some wonky stuff is happening right now in the pre-markets. I mean, look at this real quick. Look at SOFI. You guys see this? It was at 15. It's going to go to 17. Look at this. 15 to 17, 17, now back to 16. What is happening here, bro? I think the market makers are playing some games. And those games could be further to the downside or a recovery to the upside. I don't think anyone necessarily knows, but it's definitely some wonky stuff, bro, that's happening right now. NVIDIA is still right here at 125.
Upcoming Form 10-K. Any forward-looking statements that we make on this call are based on assumptions as of today. We undertake no obligation to update these statements as a result of new information or future events. And now I'd like to turn the call over to Anthony.
Thank you and good morning, everyone. 2024 was undoubtedly SOFI's best year ever. Our ability to consistently deliver durable growth and strong returns was once again the direct result of our relentless focus on innovation and brand building. I'll begin by covering our key results for 2024, which significantly exceeded our expectations heading into the year. Starting with our durable growth. Members and products are leading drivers of our performance, and we achieved record growth on both fronts. SOFI now has more than 10 million members. That's up 34% year over year and up 10x over the past 5 years. We had another record quarter of new member adds in the fourth quarter at 785,000 new members. In Q4, we also had another record quarter of new product adds at 1.1 million new products, resulting in 32% year-over-year growth to over 14.7 million. Financial services products drove over 89% of our total product growth. This reflects the deliberate diversification of our business towards more capital-light, fee-based revenue sources, which we expect to continue in 2025. Our strong member and product growth powered record revenue growth in 2024. Adjusted net revenue was $2.6 billion, up 26% year over year. Together, our financial services and technology platform segments generated $1.2 billion of revenue, up 54% year over year. These two segments accounted for 47% of our adjusted net revenue, up from 38% last year. It's safe to say SOFI is not just a lender anymore, and we continue to see significant growth opportunity across our financial services and technology platform segments. In our lending segment, adjusted net revenue grew 11% to nearly $1.5 billion, well ahead of our initial expectations of being flat to down. This strong growth was driven by record originations of over $23 billion, up 33% from the prior year. Our total fee-based revenue across our business was a record $970 million for the year, up 74% from the prior year. This was driven by strong performance from our origination fees, loan platform business, referrals, as well as interchange and brokerage. Importantly, improved monetization continues its strong contribution to growth. Financial services revenue per product increased from $59 in the fourth quarter of 2023 to $81 in the fourth quarter of 2024. That's up 37%, and we see continued upside as our newer products mature. In addition to delivering durable growth, we delivered strong returns and profitability. In 2024, adjusted EBITDA was a record at over $665 million. All three of our segments achieved record contribution profit at strong margins. In fact, financial services posted its first full year of profitability, and we are still just scratching the surface of the massive opportunity that exists. Our EBITDA margin for the year was 26%, up nearly 500 basis points year over year. This improvement was driven by an incremental EBITDA margin of 44%, well above our target of around 30%. Net income was $499 million, or $227 million, excluding non-recurring benefits related to deferred taxes, which Kris will discuss momentarily. Even without these benefits, 2024 was our first full year of GAAP profitability, and we have now delivered 5 consecutive profitable quarters. While we remain focused on achieving our long-term aspirations, we continue to deliver strong performance each day in each quarter. Earnings per share were 39 cents, or 15 cents when excluding non-recurring benefits related to deferred taxes. Tangible book value ended the year at $4.9 billion, a year-over-year increase of nearly $1.4 billion. This includes $271 million from non-recurring benefits related to deferred taxes. Our strong financial performance is the direct result of our investments in innovation and brand building. These investments attract new members and clients into our ecosystem and lead them to adopt more products over time. This fuels our growth and ultimately our returns as we scale. Looking ahead, our opportunity to scale remains massive, and it feels like it's day one of our journey. People want innovative solutions delivered seamlessly and digitally. Yet most traditional financial services firms are encumbered by physical locations, internal bureaucracy, and outdated technology. They've struggled to evolve. Since day one, technology and innovation have been part of our DNA. It's how we built and scaled products more rapidly, creating the digital one-stop shop for financial services in just 7 years. Our members often come to us for a specific product, then adopt others over time. As satisfied members do more with us, it creates a flywheel that we call our financial services productivity loop. Here's how we know it's working. In 2024, 30% of new products were opened by existing SOFI members, and nearly 40% of new members opened a second product in the first 30 days. More recent cohorts are taking a second product even faster than what we've seen in the past. This performance is a clear indication of our success in getting members to the right product and a validation of our one-stop shop model. Bringing new members into our productivity loop starts by having a trusted household brand name. A key part of our marketing strategy is working with like-minded partners that help us reach new audiences and build awareness of how we help our members get their money right. For example, we recently unveiled a first-of-its-kind partnership where our brand is presented side by side with the sports league's brand in TGL presented by SOFI, a new tech-driven golf league broadcasted live on ESPN from the new state-of-the-art SoFi Center in South Florida. Given SoFi is part of the league's brand, we get millions of impressions everywhere the TGL brand goes, allowing us to reach a broader audience over and over. Overall, our brand building efforts are yielding strong results. In 2024, our unaided brand awareness reached its highest ever level at over 7%, up nearly 170 basis points from last year. We are also innovating to strengthen and diversify our business so we can serve more members with less balance sheet risk, supporting both our growth and returns over the long term. Our loan platform business, or LPB, is one example. Over the years, we've built a powerful lending platform with strong member acquisition, underwriting, and servicing capabilities. But prior to 2024, we had two options: hold loans on our balance sheet to generate net interest income, or to sell loans to manage our balance sheet size, risk, and capital. This past year, we created greater optionality to meet the strong demands from our members and capital markets buyers through LPB. Here's how it works. We partner with buyers like Fortress to originate loans fitting their predefined criteria, and we earn fee income as we fill the orders. These loans are originated on the buyer's behalf, so they don't sit on our balance sheet. And importantly, we keep the servicing rights. This model is a game changer. It allows us to serve more members, including people that we might have otherwise declined for a variety of factors without taking on incremental risk or capital. It further diversifies our revenue with additional fee-based income, and because we keep the relationship, we have the opportunity to provide the members with additional products and services. In 2024, we originated $2.1 billion of loans through LPB, which brought our total company loan originations to $23 billion. Beyond LPB, we've continued to build and enhance products in our financial services segment. In just a few weeks, we'll introduce a variety of new benefits across our one-stop shop and a new fee-based subscription option for SOFI Plus. Our premium membership tier, SOFI Plus, has been incredibly popular, but only available to members who enroll in direct deposit. For the first time, members can access our highest APY, a 1% match on recurring invest deposits, extra cash back on SOFI travel, interest rate discounts, and more for a low monthly fee. We will provide SOFI Plus members with more than $1,000 of value annually unlocked by paying a monthly subscription or doing a monthly direct deposit. In Q4, our investments expanded access to alternative investments through partnerships with 3 new private market funds, including the Templum Cosmos Fund, which offers sole exposure to SpaceX, and through our new robo-advisor platform developed in partnership with BlackRock. Having access to alternative investments is a top priority for many retail investors and one way we're helping our members achieve their ambitions. SOFI now has 2.5 million invest products, with 70% of the growth coming from existing SOFI members. We continue to iterate on the value proposition, which is driving 2 dimensions of growth, engagement and monetization, both of which we believe will double in the intermediate term. In credit card, we continue to thoughtfully position our business for future growth. We improved our underwriting and rolled out 2 new products tailored to our members' needs, the Everyday Cash Rewards and Essential Credit Cards, helping more members earn rewards and build their credit. Our financial services segment also operates as a marketplace where we connect members to third parties and collect referral fees. For example, we make loan and banking referrals for borrowers we don't currently serve, including small and medium-sized businesses. We also refer members to partner insurance carriers through our Protect product. While still small in the context of SOFI, these referral revenue streams that are high margin grew significantly in 2024. That takes me to SOFI Money, our most successful financial services product, which serves as an example of what these other businesses can become. Since 2020, Money has scaled significantly. Products grew from 646,000 to 5.1 million products today and increased 51% just this year. Money helped drive nearly a 9x increase in revenue per product for financial services overall. Since acquiring our bank license in 2022, we've grown our deposits to $26 billion by iterating, learning, and iterating to make our product, marketing, and service better every day. For example, we know that frictionless money movement is top of mind for our members, so in 2024, we introduced Zelle and improved our self-service wire transfers. We believe Invest is the next business to follow the footsteps of Money, and we plan to allocate greater resources in 2025 to scale this business. Turning now to Tech Platform, another fee-based segment. Our Tech Platform gives a broad range of clients, from banks to fintechs to consumer brands, the ability to create, launch, and run financial products. In 2024, Tech Platform reached 168 million total accounts, up 15% year over year. Entering 2025, we are seeing strong demand from new potential partners. Let me give a few examples from the past few months that demonstrate the diversity of our client base and the strength of our offering. First, we recently were selected by the U.S. Department of Treasury for Direct Express, a prepaid debit card program that approximately 3.4 million people use to access their federal benefits. This is a testament to our Tech Platform's differentiated offering, as well as our strength and reliability. We're excited about the integration that will take place in 2025 and the financial impact that we will see in 2026. Second, we just signed a large U.S.-based financial services provider that offers short-term consumer loans, card services, check cashing, and other financial products. They've built a large, loyal, and highly active debit card portfolio over the past 2 decades and will now rely on our technology to power existing and new capabilities. Once they fully transition to our platform in early 2026, they will be a top 10 client on a revenue basis. Third, we've signed a partnership with a leading hotel rewards brand for a co-branded debit card program launching in the first half of 2025. This is a new differentiated offering that will expand our footprint among consumer brands. These deals represent more predictable revenue from larger established brands with notably higher average deal sizes. We're excited about these wins and would note that the implementation and the integration cycles will be gradual and the revenue impacts will most likely be felt in 2026. As you can see, 2024 was a tremendous year overall. Our record revenue, profit, members, products, and returns all demonstrate the success of our innovation and brand building and are a testament to the absolute grit of our team. I have never been prouder of a year-long performance than I am of 2024. Even with how great 2024 was, the future has never been brighter for SoFi than it is in 2025. The operating environment is the strongest it has been since I joined, with lower interest rates, strong employment, active capital markets, and we have a vibrant brand and the only digital one-stop shop offering in the U.S., resulting in a diversified business model that is well-positioned to capture the opportunity ahead. With that, let me turn the call over to Kris to provide more detail about the quarter and year and to share our detailed guidance for 2025.
Thank you, Anthony. 2024 was indeed our best year ever, and we finished strong with an exceptional fourth quarter. Adjusted net revenue for the quarter was a record at $739 million, up 24% year-over-year and 7% sequentially. Adjusted EBITDA was also a record at $198 million with a 27% margin. Excluding the non-recurring benefits related to deferred taxes, adjusted net income was $61 million and adjusted EPS was 5 cents. This was our fifth consecutive profitable quarter and first profitable year. As noted, our fourth quarter GAAP results included non-recurring tax benefits of $271 million. These were primarily related to the release of the majority of the valuation allowance against our deferred tax assets. Each quarter, we assess the recoverability of our net deferred assets, most of which are related to net operating loss and tax credit carryforwards from prior years. The timing of this release was due to our recent strong financial performance and forecast of continued profitability. Moving forward, we expect a normalized effective tax rate of approximately 26%, which can be impacted by future discrete tax items and mix of income. Turning now to our segment performance, starting with our non-lending segments, which comprised a record 49% of total adjusted net revenue during the quarter, reflecting the continued diversification of our business. Starting with financial services. For the fourth quarter, net revenue was $257 million, up 84% year-over-year. Contribution profit was $115 million, up 4.6x year-over-year. Contribution margin improved significantly to 45%, up from 18% last year. Net interest income for this segment was $160 million, up 47% year-over-year, which was primarily driven by growth in consumer deposits. Importantly, non-interest income grew 3.2x to $96 million in the quarter, which equates to nearly $385 million in annualized revenue. In Q4, our LPB business generated $63 million in fees, driven by $1.1 billion of personal loans originated on behalf of third parties, as well as referrals. Additionally, LPB generated $4 million in servicing cash flow, which is recorded in our lending segment. In total, our loan platform business added $67 million to our adjusted net revenue across these two segments. We are off to a strong start in Q1 as well. Our loan platform business recently agreed to initial terms with Blue Owl Capital Funds for up to $5 billion of personal loans over 2 years. Once finalized, this arrangement will represent our largest LPB agreement to date. In addition to our LPB revenue, we continue to see healthy growth in interchange, up 63% year-over-year, driven by $14 billion in total annualized spend in the quarter across money and credit card. Shifting to our tech platform. For the fourth quarter, we delivered net revenue of $103 million, up 6% year-over-year. Contribution profit was $32 million at a contribution margin of 31%. Revenue growth was driven by continued monetization of existing clients, along with new deals signed in new client segments. Our recent client wins have been more diverse, including major consumer and commercial brands, as well as large enterprises in Latin America. Turning now to our lending segment. For the fourth quarter, adjusted net revenue was $423 million, up 22% from the same period last year. Contribution profit was $246 million, with a 58% adjusted margin. These strong results were primarily driven by growth in net interest income, which increased 31% year-over-year to $345 million. This included a 23% increase in average interest earning assets and a 68 basis point decrease in cost of funds, which was mostly offset by a 62 basis point decrease in average yields. During the quarter, we achieved record loan originations of $7.2 billion, up 66% year over year. Personal loan originations were a record at $5.3 billion, of which $1.1 billion was originated on behalf of third parties through LPB. Collectively, personal loan originations were up 63% year over year. Student and home loan lending both had their best quarter since 2021. Student loan originations were $1.3 billion, up 71% from the same period last year. Home loan originations were $577 million, an 87% year-over-year increase. The fourth quarter was our best quarter of capital markets activity since going public. Overall, we sold or transferred through LPB over $3.4 billion of personal loans, home loans, and secured loans. In terms of personal loans, we closed $950 million of sales in whole loan form at a blended execution of 105.5%. We also closed a $525 million private ABS transaction that included significantly lower WAC collateral relative to our balance sheet at an execution of 102.3%. All deals had similar structures to other recent personal loan sales, with cash proceeds at or near par, and the majority of the premium consisting of contractual servicing fees that are capitalized. These sales included a small loss share provision that is above our base assumption of losses and immaterial relative to the exposure we would have otherwise had if we held the loans. In terms of home loan sales, we closed $507 million at a blended execution of 100.7%. Additionally, we sold $90 million of late-stage delinquent personal loans. By selling these loans, we're able to generate positive incremental value over time versus selling after they charge off, both from our improved recovery capabilities and by maintaining servicing. Finally, we sold $243 million of secured loans at a par execution, while also executing $199 million of new secured financing. Net-net, inclusive of all new issuances, paydowns, and loans sold in period, our secured loan balance decreased by $189 million sequentially. Turning to credit performance, the health of our consumer remains strong. Our personal loan borrowers have a weighted average income of $158,000 and a weighted average FICO score of 744, while our student loan borrowers have a weighted average income of $134,000 with a weighted average FICO score of 765. Our credit trends continue to improve after seeing delinquencies peak in the first quarter of 2024. For personal loans, the on-balance sheet 90-day delinquency rate was 55 basis points in the quarter, a slight decrease from 57 basis points in Q3. The annualized charge-off rate declined to 3.37% versus 3.52% in the prior quarter. Had we not sold any late-stage delinquencies, we estimate that including recoveries, we would have had an all-in annualized net charge-off rate for personal loans of approximately 4.9% versus 5.0% last quarter. For student loans, the on-balance sheet 90-day student loan delinquency rate remained flat sequentially at 12 basis points, while our annualized charge-off rate decreased 7 basis points to 62 basis points from 69 basis points last quarter. The data continues to support our 7 to 8% maximum life of loan loss assumptions for personal loans, in line with our underwriting tolerance, although we continue to trend below these levels. Our recent vintages, originated from Q4 2022 to Q1 2024, have net cumulative losses of 3.8%, with 45% unpaid principal balance remaining. This is well below the 5.25% observed at the same point in time for the 2017 vintage, the last vintage that approached our 7 to 8% tolerance. The gap between the newer cohort curve and the 2017 cohort curve widened by 15 basis points, demonstrating continued improvement. Additionally, looking at our Q1 2020 through Q3 2024 originations, 58% of principal has already been paid down, with 6.5% in net cumulative losses. Therefore, for life of loan losses on this entire cohort of loans to reach 8%, the charge-off rate on the remaining 42% of unpaid principal would need to exceed 10%. This would be well above past levels, further underscoring our confidence in achieving loss rates below our 8% tolerance. Turning to our fair value marks and key assumptions. As a reminder, we mark our loans at fair value each quarter, which considers a number of factors, including the weighted average coupon, the constant default rate, the conditional prepayment rate, and the discount rate comprised of benchmark rates and spreads. At the end of the fourth quarter, our personal loans were marked at 104.9%, down 80 basis points from the end of the prior quarter. This change was a function of the discount rate increasing by 51 basis points to 5.29%, mostly due to the underlying benchmark rate increasing by 63 basis points, partially offset by 12 basis points from spreads tightening. As we've previously noted, both of these changes are empirical based on the actual market data, not assumptions. Additionally, any fair value impacts that resulted from interest rates increasing were offset nearly 1-for-1 by hedge gains. Furthermore, we saw a 10 basis point decrease in the weighted average coupon. Slightly offsetting those negative impacts, we had a slight decrease in our conditional prepayment rate from 26.1% to 26.0%, which has an immaterial impact on the overall change in the mark. When a borrower prepays, we are still capturing the principal, and the impact to the value of the asset is only based on the premium above par at a given point in time, which is very small relative to the principal outstanding. At the end of the fourth quarter, our student loans are marked at 104.1%, down 133 basis points from the end of the prior quarter. This change was a function of the discount rate increasing by 41 basis points to 4.4%, driven by the underlying benchmark rate increasing by 76 basis points, partially offset by 35 basis points from spreads tightening. Additionally, we saw a 28 basis point increase in the conditional prepayment rate from 10.7% to 11.0%. There were no material changes to the weighted average coupon rate or the conditional prepayment rate. Turning to our balance sheet, where we remain very well capitalized. In the fourth quarter, total assets grew by $1.9 billion, driven by approximately $910 million of loan growth, approximately $830 million of growth in other assets, and approximately $80 million of growth in cash, cash equivalents, and investment securities. Total liabilities grew by $1.5 billion. This was driven by member deposit growth of $2.6 billion quarter over quarter, while non-member deposits were reduced by $1.2 billion. Total deposits reached nearly $26 billion in the quarter. Over the past year, our strong organic deposit growth has further strengthened our balance sheet. Currently, there is a 193 basis point difference between the interest we pay on deposits and the interest we pay on warehouse lines, which translates to approximately $500 million in annualized interest expense savings from growing our deposit base over the past year. We continue to benefit from the mix shift towards deposit funding, along with our ability to sustain healthy deposit versus lending betas. As a result, we reported an average net interest margin of 5.91% for the quarter, up 34 basis points sequentially. This is a function of maintaining asset yields and reducing our overall cost of deposits. This continues to be in line with our expectation of maintaining NIM above 5% for the foreseeable future. In terms of our regulatory capital ratios, our total capital ratio of 16.2% at year-end remains comfortably above the regulatory minimum of 10.5%. Tangible book value grew $465 million sequentially to $4.9 billion, including the non-recurring benefits related to deferred taxes. While these are non-recurring benefits, it is value retained in the business. Tangible book value per share at year-end is $4.47, up from $3.61 a year ago. Looking forward to 2025, after a year of bolstering our capital base, reaching GAAP profitability, as well as the scale required to drive continued profitability, we want to better tilt our incremental revenue growth toward investment. We have significant untapped addressable markets in front of us, and we have proven that the more we invest, the more we produce durable growth and strong returns. In 2025, we plan to manage towards an incremental EBITDA margin of around 30% as we reinvest in the business to drive that durable growth of 25% again in 2025 and ultimately strong returns well into the future. Let me finish by providing our outlook for 2025, starting with the macro assumptions that underpin our financial guide. In line with market expectations, our assumptions are as follows. An interest rate outlook consistent with the forward curve and just north of 1.5 rate cuts, GDP expansion of 1 to 2%, normalization of unemployment in the 5% range, and continuation of normalized credit spreads across capital markets and stabilization of consumer credit. Now for our specific guidance. For the full year 2025, we expect to add at least 2.8 million members, which represents at least 28% year-over-year growth. We expect adjusted net revenue of $3.20 to $3.275 billion, which equates to year-over-year growth of approximately 23 to 26%. We expect an adjusted EBITDA of $845 to $865 million, which equates to an incremental EBITDA margin of approximately 30%, in line with our investment philosophy that I just outlined. We expect adjusted GAAP net income in the range of $285 to $305 million, which equates to an incremental margin of 20% when excluding the 2024 net gain of $63 million related to the exchange of a portion of our 2026 convertible notes for equity. We expect adjusted GAAP EPS in the range of 25 to 27 cents per share. As I mentioned, this guidance assumes a tax rate of 26%, which we currently believe to be our effective tax rate in 2025. We expect growth in tangible book value of $550 to $575 million for the year, and to end the year with a total capital ratio above 15%. For the first quarter of 2025, we expect to deliver adjusted net revenue of $725 to $745 million, adjusted EBITDA of $175 to $185 million, GAAP net income of $30 to $40 million, and GAAP EPS of 3 cents. It's important to note two items when comparing Q1 2025 to Q4 2024. First, we expect to have a 26% effective tax rate versus an immaterial impact from taxes on pre-tax income prior to releasing our valuation allowance. This translates to approximately $15 million of expected taxes in Q1. Second, each year we have seasonal payroll taxes during the first 2.5 quarters of the year. This translates to approximately $10 million of incremental operating expenses in each of the first 2 quarters. Looking beyond 2025, we now expect to exceed our medium-term guidance of delivering 20 to 25% compounded annual revenue growth through 2026, and we remain confident in delivering 2026 EPS in the range of 55 to 80 cents per share. Moreover, we are well positioned to deliver 20 to 25% annual EPS growth beyond 2026. Overall, 2024 has been a remarkable year for SoFi. We are proud of the strong results we delivered and remain confident in our ability to build on this momentum as we move into the year ahead. With that, let's begin the Q&A.
All right, here we go.
At this time, I would like to one on your telephone keypad. Please keep in mind we'll only take one question per person at a time. Please rejoin the queue for any additional questions. And our first question comes from Kyle Peterson from Needham & Co. Kyle, please go ahead. Your line is open.
Great. Thanks, guys. Good morning. Appreciate you taking the question. Want to start, on the funding side of the equation that really helped in NIM this quarter. You guys added quite a few deposits. It looks like you've taken a little more action on the deposit side in terms of lowering APYs compared to some of your competitors, but are still growing at a really nice clip here. So just want to see if you could give any more color on how you guys have been able to drive back the costs a little more than some peers, despite the perception that we might be in a higher for longer type of environment than it looked like even 3 or 4 months ago.
Yeah, I'm not sure I understand the question, so clarify if we don't get it right. I think the first part of your question was we've lowered interest rates on our APY for SoFi Money, and what impact has that had, and how do we think about our funding costs overall and maintaining them? First, on the APY, we want to have a top-tier APY. It's an important element of our value proposition. SoFi Money has been a phenomenal product. It's the gold standard of what we're going to do with each one of our businesses. When we started, we had negative unit economics. Then we got the variable profitability, and then from there we scaled the variable profitability above our contribution, our cost to the positive contribution margin. And now it's really cranking, and we're acquiring a significant number of customers. Obviously, the payback period is not instant, so we're funding that within the business and still driving really high margin. We are seeing really strong trends in growth with our APY changes that we've made, both in terms of members and deposits. And we think we can maintain really strong member growth, even if our deposit growth slows as we think about managing our assets and liabilities in the balance sheet and our funding costs. I'll let Kris add some additional color on the funding side.
Yeah, absolutely. So what I would say is we're now currently at the point where we're close to our long-term funding target of 85 to 90%. That's been a rate that we've talked about consistently over the course of the last few years. So while else being equal, we'd like to grow deposits at a similar pace to our overall loans, which we expect to be in the single-digit billions in 2025, which will be slightly less than what we did in 2024. However, as Anthony just noted, if we're seeing exceptionally strong member demand, we can grow a bit faster and deploy that funding through incremental loans or other assets. Additionally, we have other ways to obviously manage deposits on the balance sheet through pricing and other means. Finally, the only other point I would note is that we're still expecting really strong member growth north of 28%, and that's going to be a function of the continued momentum that we're seeing in money, but also an acceleration in credit card, invest, and other financial services products.
And I would just make one other point about SoFi Money and its role strategically in our overall strategy. It's the tip of the sword, so to speak, in the first product many of our members take, and then they gain that trust and reliability with SoFi, and then they take on other products. So the lifetime value from a Money member grows over time as they use more products and services, which is also a consideration when we think about that product. The last thing I'd say is what we've seen is that the value prop of SoFi Money is much more than the APY. Having Zelle is really critical. People want a safe, secure way to be able to send money person to person. We also provide person-to-person payments via just a phone number or email, in addition to bill pay, free overdraft, the 2-day early paycheck, and we'll continue to add other features and functionalities to make that really valuable. The reason for SoFi Plus and the subscription is to actually provide more than $1,000 of value annually through a subscription of $9.99 or through direct deposit. And so that value prop will just continue to increase because we have lower costs, better margins that we can reinvest in greater appeal.
The next question comes from Dan Dolev from Mizuho. Dan, your line is open. Please go ahead.
Hey guys, great results here. And I was going to ask you a question about the lending platform, but we are getting a lot of questions this morning from investors regarding your medium-term EPS guidance. So maybe it's really great to see you reiterate the guidance. But now, given that you're leaning into investments, can you give us some examples of like operating leverage items that you have that would maybe increase the confidence on investor side that EPS target can be actually beaten? That would be great.
Yeah, so I'm going to take a step back and elevate out for a second to give people perspective. We think the winning formula is to drive durable growth and strong returns, and we do that by driving innovation and brand building. We couldn't be more confident in the long-term margins of the business. What we said historically is that our EBITDA margin long-term will be 30%, and our net income margin long-term will be 20%. And we believe we can drive to a very high ROE, well above other financial institutions with those margins and our high fee-based business, as well as we think about the capital elements of the business. In 2023, we had set guidance with a 30% incremental EBITDA margin. We said our margins long-term would be 30%. So in that time period, we wanted to show evidence of that and manage the balance of growth and profitability by delivering a 30% incremental margin. If you do that over time, asymptotically, your margin becomes 30%. In 2024, we took a very conservative stance at the same point last year relative to others based on interest rates, the economy, inflation, geopolitical, et cetera. And because we took that very conservative stance, we drove margin expansion at the expense of revenue growth. And we delivered well more than 30% incremental EBITDA margins, which is evidence that we can do that and maintain growth, having just grown 25%, which is well above the revenue expectations that we established last year in January. So we couldn't be more confident that our long-term margins are 30% for EBITDA and 20% for net income. And in 2025, we're just tilting the balance back to where we were in 23, which is a 30% incremental EBITDA margin, because that allows us to ensure we're investing today to to drive durable growth beyond today into the future in revenue, in products, and in members. The thing that's most important about our guidance, which we just provided, is our revenue expectations are higher in 25 than the street had and what we had previously had, and our revenue expectations for growth into 26 are now higher as well. And that's possible because of the resource we have to invest in the business and the open opportunity in front of us. So couldn't be more confident in a long-term outlook for the company from a margin standpoint, and want to make sure we're taking a long-term view to drive revenue growth for as long as we can. And when it slows, then we'll drive the margin growth.
The next question comes from Terry Ma from Barclays. Terry, your line is open. Please go ahead.
Hey, thank you. Good morning. I just want to ask about the lending business overall. Your originations in the fourth quarter are quite a bit ahead of our estimates. So I'm just curious, how are you thinking about the lending business in 2025 with respect to originations and balance sheet growth? And then also, what's kind of contemplated in your guide with respect to the loan platform business?
Yep, absolutely. In terms of the overall revenue growth for our lending business, what we expect for 2025 is that we're going to grow low double digits to teens as we continue to see strong borrower demand across both our personal and student loans, and we start to scale our home loans business in a more meaningful way. We now have our back-end fulfillment capabilities in place, and we have a full suite of products that we're able to work with. And then in terms of our medium-term guide for the lending business, we're still on track to hit that mid-teens growth compounded 2023 to 2026. As I mentioned before, as it relates to our balance sheet, we're expecting to grow the balance sheet modestly in terms of single-digit billions. But that doesn't mean that we won't be able to grow other parts of the business at a more rapid pace through all of our fee-based income streams. In terms of how we're thinking about the loan platform business going forward, we couldn't be more optimistic about it. We believe the business is just getting started today. We have that $2 billion agreement that we signed with Fortress last quarter, and that relationship continues to expand. And we also agreed to terms for a $5 billion two-year deal with Blue Owl Capital Funds, as well as having commitments for the rest of 2025 with other partners, including top investment banks, as well as private equity funds. We're obviously one of the very few partners who has the marketing and operational capabilities to deliver assets at scale with the characteristics and return profile that investors are seeking. So really good momentum and demand that we're seeing from loan buyers there.
The next question comes from John Hecht of Jefferies. John, your line is open. Please go ahead.
Morning, guys. Thanks very much for taking my question. I guess just a little bit of a tack on from the last response, Kris. The loan platform business, obviously really strong results, really good growth, but also pretty supportive capital markets. How do you guys think about that in a more volatile interest rate or a volatile kind of capital markets environment?
Sure. Thanks, John. So what I would say is we have good visibility into the appetite for our paper, as well as loan buyer demand is remaining extremely strong. As I just mentioned, we have commitments for the rest of 2025 from Fortress, Blue Owl, and some of the others that I mentioned. More broadly speaking, though, we've built a resilient, diversified business with multiple avenues for borrower loan demand, including holding loans on our balance sheet, selling loans either through whole loan format or through ABS structures, and referring loans to third parties. So we're really confident that we'll be able to efficiently monetize the demand that we're seeing from borrowers today. Additionally, we have other ways that we can drive fee income growth. You'll continue to see strong growth in interchange, which ended up increasing 63% this quarter. Also, the brokerage business, as we continue to improve our monetization with Invest, and then fees related to tech platform and fees from our new SOFI Plus offering that Anthony discussed during the prepared remarks.
And one of the things that we broke out in our prepared remarks, in case anyone missed it, is that we're now providing a perspective on what our total fee-based revenue was across all of our businesses. And for the year, it was $970 million, which was up 74%. And again, that's driven by origination fees, loan platform business, referrals, as well as interchange and brokerage. And for those that may not be familiar with the accounting, the loan platform business is cash upfront as opposed to gain on sale accounting. So it has an additional characteristic to it that's very favorable for us, especially on the credit and capital side.
The next question comes from Mihir Bhatia from Bank of America. Mihir, your line is open. Please go ahead.
Good morning. Thank you for taking my question. I was just wondering if you could provide, as we think about 2025, maybe provide a little bit more on your expectations at a segment level, both from a revenue, but also a contribution margin standpoint. Particularly curious about the financial services segment, where I think Anthony, you said might be in the invest business, there's going to be some investment there. So just trying to understand how those evolve next year. Thank you.
Absolutely. So overall, we're expecting 23 to 26% revenue growth this year. We now expect to exceed our medium-term guidance that we laid out at the beginning of last year of 20 to 25% compounded annual growth. So we're really optimistic about the opportunity that we have ahead of us. In terms of the specific segment level guidance for financial services, we're expecting very strong growth in the range of 60 to 65% as we continue to grow products and overall monetization. We're currently trending well ahead of our medium-term 23 to 26 guide of 50% annually, and now we expect closer to around 65% over that same period. For lending, as I just mentioned, we're expecting to grow 2025 low double digits to teens as we continue to see good demand both on the personal loans and student loan side, and we start scaling home loans. In terms of the medium-term guide for lending, we're still on track for the mid-teens growth 2023 through 2026. And then for tech platform, we expect to grow 2025 low double digits to teens. And given that lead times and implementation cycles have been longer than expected, we now expect to grow revenue at a mid-teens CAGR from 2023 to 2026. In terms of the margin profile, you can expect financial services, we're at about a 45% margin and $81 of annualized revenue per product. We're still under monetized in invest, so there's opportunity, and we're starting to scale our loan platform business, which is generating margins around 50%, slightly north of that. So you could expect to see continued margin expansion in that business. Within lending, we've been consistently in the mid-50s to mid-60s range. You could expect that trend to persist going forward. And then from a tech platform perspective, we expect healthy margins in the 30% range in the medium term.
And then just elaborating on the investments that we're going to make in financial services, we announced, obviously launching at the end of this month, SOFI Plus. That's going to expand the availability of this great value equation of more than $1,000 in annual value to more people, especially those that may not have direct deposit capabilities because they're self-employed, but also other people that are younger and aren't actually in the workforce today. It's a great value for the price point on a monthly basis, and you more than recoup your subscription fee for the year. So that will have a significant amount of investment. In addition to that, we really want to accelerate our growth and invest. We think it's the next business like money to follow the same path. It's well on its way, but it's still really early days. We've seen great growth in all the key metrics there in terms of account openings, fundings, average deposits per account, average assets per account, and our monetization is also improving there. So we'll continue to get those dual drivers of growth. In addition to that, we've invested in small, medium business capabilities in 2024. We fully integrated the application process into our app, the SOFI app, and we're using partners to fulfill that demand for loans, and that's grown quite nicely. Similar approach to our insurance business, which we call Protect, home, auto, and life, also a big contributor and one we want to grow much faster. That saw really good growth in 24, small relative to SOFI overall, but a big area for us. And then last, our credit card business will be very methodical about our approach there. We think we have the right formula, but it is a business that you have to really manage methodically given the J-curve of investment. And so that will continue to be losing significant amounts of money in the tens of millions of dollars range. So significant investment to make sure we have continuous S-curves of growth beyond 2025. And the formula is really working. We said on the call that 30% of our products are from existing members and 40% of our members take a second product within 30 days. So we want that flywheel to keep flying.
The next question comes from Reggie Smith from JP Morgan. Reggie, your line is open. Please go ahead.
Hey, good morning. Thanks for taking the question. I wanted to dig into the loan platform business a little bit. I think you guys said that those are primarily loans that did not meet SOFI standards, at least today. Was curious if this could become a channel where you do sell loans that are higher quality to partners. And then secondarily, do you charge origination fees on those platform loans? Thank you.
Yeah, well, let me answer the first part, and then I'll turn it over to Kris. It should be clear to everyone that we are actually selling loans that are high quality, but we're also selling loans that are outside our credit box, and they are also high quality. So there are two things that cause us to do the loan platform business. One, someone wants a credit profile that's actually within our credit box, but it's at volumes that we wouldn't otherwise produce. And so once we have the commitment from them, we'll go out and originate that volume, leveraging our origination platform, our underwriting platform, marketing, and servicing platform, and get paid a fee for that. So there's two things that drive it. One, someone will want volume above what we would actually produce ourselves and look to sell. That's within our credit box. And two, things are outside of our credit box. So it's both of those criteria. And in our view, they're all high quality. Some of them are more high quality, i.e. prime profile, which is what our profile is. I'll turn over to Kris on the fee side.
Yeah, in terms of how we think about structuring these deals, all of the deals where we're doing originations on behalf of third parties consist of two components. We have the flat fee per loan that we receive upfront at time of transfer. We not only get the flat fee from those that we are originating on behalf of, but we also charge origination fees for a portion of the loans that we're originating. And then we also get a modest servicing fee that gets capitalized at the time of transfer. Both of those are recognized under non-interest income.
The next question comes from Andrew Jeffrey from William Blair. Andrew, your line is open. Please go ahead.
Hi, good morning. Appreciate you taking the question. Anthony, great to see the mix shift in revenue and the rise in fees as a percent of the total. Can you, sort of looking longer term, talk about perhaps where you'd like to see fees as a percent of the total, given your long-term ROE aspirations, and what the composition of that fee-based business might look like, say, either in an intermediate term time frame or even a little longer time frame?
Yeah, it's really hard to give you a specific number given it's being driven by 5 different sources of revenue. We would want it to be very significant. We recognize that it's capital light, it's less credit risk, obviously, and it's cash up front, so it's high. It's also high ROE. We want to grow it as large as we can. One of the things that we contemplate is, could we push all of our lending into the loan platform business over time? And I'm not opposed to that at all. The economics are very attractive. The velocity is much higher. The capital is lower. You have a lighter balance sheet. It would really support high ROE. Listen, we're students of the industry, and we see what drives high multiples of whether it's revenue or earnings or book value, whatever the multiple may be. It's high ROE. So we have, I think, a great mix of businesses that we've told you will have a high ROE. The more we can drive fee revenue, the more visible that will become to you. So it was $970 million in the year. I hope it continues to increase as a percent of the mix, which I think it will, based on our outlook. So you'll continue to see an increase in the benefits that I just mentioned.
The next question comes from Jeff Adelson from Morgan Stanley. Jeff, your line is open. Please go ahead.
Hey, good morning, Anthony and Kris. You've talked a lot already about the opportunity in SoFi Invest to follow in the footsteps of SoFi Money, and it sounds like the SoFi Plus enhancements are a key part of that strategy. But any other specifics into your plans to really ramp up that business? Like, is it really just about allocating more marketing and generating more awareness, or are there any other features there we should be expecting? And maybe just talk a little bit about sizing the monetization. Like, I think you're only doing on a quarterly basis about $6 million of brokerage revenues there. And then just sort of related to that, does that include any potential plans for maybe a re-entry into crypto, just given the current administration's thinking around that? Thank you.
So first, I would say the same thing about Invest as the rest of our business. The biggest gate to our growth is awareness and becoming a household trusted brand name. And so we're super focused on driving unaided brand awareness for the business overall and for each one of the products. And SoFi Invest itself, 70% of SoFi Invest products in growth in a quarter are coming from existing members. So the biggest driver for SoFi Invest is investing in broader awareness to our existing members, but also outside the platform. And so it's a great value proposition. We're differentiating on fast, on selection, on content and convenience, and we'll keep iterating on those 4 variables, as well as our products working better together. But the biggest driver of growth, given we do have a really attractive value prop, is driving more awareness of the product, both to members and non-members. You know, we have over 10 million members now. You can see how many products we have on Invest. We haven't even penetrated our member base the way that I think we can, in addition to going outside the walls. But we will continue to add more and more selection. You know, this quarter we added more alternative assets. Alternative assets were originally launched at the beginning of 24. It had a pretty big impact on the growth of both accounts, funded accounts, and AUM, because it's like a grocery store. People come in to get the milk and they see everything else is there. And so it has an indirect benefit that's really paid dividends. And so we'll continue to invest in that business, both directly as well as part of SoFi Plus. And there's a lot of features and functionality we don't offer today that will continue to add value and differentiation. And then on your question on crypto, listen, when we architected SoFi Invest, one of our differentiators was we wanted SoFi Invest to be a one-stop shop on its own. So we launched with no commission equities. We pioneered fractional shares. We created ETFs at a $10 price point because we wanted our members to have a diverse portfolio they can invest in a dollar cost way, and $10 was a great price point to do that in S&P 500 types of index ETFs. In addition to that, we have our robo accounts. We pioneered IPOs in a turnkey way. We've added alternative assets. When we launched, we really debated, do we need crypto? Do we not need crypto? We went out to our member base back in 2018, did a survey of our member base, and they absolutely wanted crypto, and we provided it in a safe and sound way and a responsible way. As the regulation changes, we will be incredibly aggressive tied to crypto and be in as many businesses as we can be across the entire platform. Previously, we were just doing trading. You can see us go well beyond that, depending on the regulation, including custody and clearing, trading platforms, asset-backed lending, and so many other areas. So we hope the administration and the regulators come up with clarity on what the outlook will be, but we will move as aggressively as anyone else once that is determined.
At this time, I would like to turn the call back over to Anthony Noto for closing remarks.
Thank you, and thank you for everyone for joining the call today. Over the past 7 years, we faced challenge after challenge in external environment impacting our business, our members, and our team. And each time, through our innovation and tenacity, we were able to run to daily and come out even stronger than before. The result is a more diversified, resilient, battle-tested business, and most critically, a gritty team that finds a way to win. As I said before, we love hard. Hard is the path to durability. Hard is the path to differentiation. And hard is the path to being the absolute best. We enter 2025 with the best business environment we've had in my time at SoFi. But regardless of that outlook, rest assured, we are battle ready. And while I'm confident our best days are yet to come, you should rest assured we will work harder and smarter than ever before to be the best in everything we do and to continue to build the SoFi way. Thank you for your interest and support in our great company.
Goodbye. This concludes today's conference call. You may now disconnect.
All right, there you go. We are finished with SoFi earnings. Let's pull up what we've got on SoFi. So that last answer right there about crypto, I thought was actually pretty good. That's what we wanted to see. Market wanted to know, hey, wait a second, is crypto actually going to be something you guys aggressively try to pursue and bring back to the platform? And Noto said, yeah. Noto said, we're ready. Whenever you guys are ready to let us do crypto, we're going to do crypto. And so that was kind of that was not the only thing I wanted to hear from the Q&A, but that was one of the main things I wanted to hear. It looks like he answered that question pretty well, but it's going to be up to the Trump administration and the SEC on how quick banks can officially get back into it. SoFi right here down 8.5%. It was at 1501 at about 8:15. And throughout the course of the call, they reaffirmed their 2026 EPS guidance. And I guess the reaffirmation of that 2026 EPS guidance took them back to 1640, which was, I guess, the dip on SoFi, 1501. And then it bounced to 1630. Now, maybe we still drop below when the markets open at 930. But that seemed to be at least the depths of the low in the call, and then the reaffirmation of 2026 guidance, which was, I think, about 67 cents of EPS. That's what the market needed to hear to go a bit higher. All right, so we've got 30 minutes until the market opens. If you are just joining, thank you for being here. Let's give a little recap on what happened last night, what happened this morning, and why it's causing your portfolio to look a little ugly right now. And then we'll go deeper into everything else we got going on. So for those that have missed it, there is a new Chinese model called DeepSeek. That Chinese AI model is what is causing a massive wall of worry that might be healthy for the broader markets, might actually be catastrophic for the markets. We're going to find out in the next couple of weeks. My gut feeling is that this is healthy. This is good. Sort of wall of worry that the market has to climb, not something that is cataclysmic. But nonetheless, there is a Chinese model that costs about $6 to $10 million to train. That doesn't mean they spent $6 to $10 million on all of their CapEx, on all of their GPUs, but their actual inference training costs were around $10 million. And because of that model's ability to be A, an open source model, B, a model that people have actually been able to use over the past 6 days. It was open source 6 days ago. That is why we are seeing so much hoopla, because now equity markets are like, all right, wait a second. If these models cost this little to produce, not in terms of its entirety of the CapEx, but in regards to the inference training that is required to get to a GPT-04 or GPT-4 or GPT-01 type of level, which is what we're seeing in the results that you're seeing on the screen right here, then does NVIDIA deserve to get hundreds of billions of dollars over the next couple of years? Do the hyperscalers actually have to spend as much as they're spending on CapEx right now? That is the sort of core basic argument that's going on right now. And that's why equities are down about 15%. You know, what's so funny? It's so esoteric because like the yen carry trade, no one understood it. And like all of us were researching like FX currency rates between the Japanese yen and the US dollar. No one is an expert on LLMs. I for damn sure am not an expert on LLMs. I think I know them at a very high level, but I would not say I'm an expert on inference training or compute or anything. And now this like market dip, this is why, you know, being in the stock market generally makes you a little bit more smarter because you have to study so much of this stuff. It's forcing us to realize how much do these LLMs matter in regards to the necessity to spend as much money in order to train them. Which ones are real, which ones are not real? What is the debate between open source, proprietary models, et cetera? But it's forcing us to learn a brand new thing and go a lot more deeper to try to figure out if the market can sustain the levels that it's at based on the previous knowledge that we had before. Having said that, my take is that this is stupid, completely stupid. I don't think that this is going to be a black swan moment. I think the market needed a dip. We just had all-time highs. Trump got inaugurated. I mean, things were going pretty damn good for the past 2 weeks. CPI came in a lot lower than expected, and I think the market needed a real dip, and today it got its dip. Here's what analysts are saying on NVIDIA. JP Morgan suggests the AI investment cycle might be overhyped. DeepSeek's efficiency could lead to a more efficient future. Jefferies proposes 2 strategies post-DeepSeek: continue investing in computing power or focus on efficiency, potentially reducing 2026 AI capex. Bernstein believes the panic is overblown, maintains outperform ratings on NVIDIA and Broadcom. Citibank acknowledges a challenge to U.S. dominance, but emphasizes the advantage of access to advanced chips, maintaining a buy on NVIDIA, aka more inference, more compute, more demand for NVIDIA. Raymond James suggests that if DeepSeek's innovations are adopted, training costs could decrease, questioning the need for large GPU clusters. And then Cantor Fitzgerald sees DeepSeek's developments as bullish for compute demand, suggesting increased rather than decreased need for GPUs, advocating to buy NVIDIA on any dips. So some Wall Street banks are saying, hey, this is a buy the dip. And then you got some other Wall Street banks saying, actually, this is something that you need to pay attention to. And the lack of continuity in terms of how Wall Street is thinking about this. For example, JP Morgan thinking, hey, maybe there is a concern here, versus someone like Stacey from Bernstein, who is, you know, one of the best NVIDIA analysts, saying this is stupid, buy the dip. At 9:30 in 25 minutes, we are going to see how those narratives compete with each other. Because I think right now, and this is kind of what's stopping me from really getting excited to buy the dip in the pre-markets, I just have no clue, dude. I just have no clue. August 5th was a yen carry trade that ended up becoming a macro event that was actually not that big of a deal at the end of the day. This is a little different. This is not a macro-driven event. NVIDIA right here at 127 down 10.9%. This is a existential potential gut check to the nature of if CapEx needs to be spent at the levels that it's currently being spent. Now, my gut feeling on this gut check is that, yes, that money does need to be spent. And quite frankly, I don't have a lot of reasons other than Jensen and Zucks are saying they're spending $150 billion for a reason. And they're much smarter than me. They're much smarter than investors, quite frankly. And they would not be spending in the, Nadella 80 billion and Zuck 65 billion if they didn't need to. Right? So if they're spending that much money, I imagine that they know that there might be innovations across the world, but those innovations across the world are not a reason to deny the amount of CapEx they need to spend for AI compute, for building the next open source model, etc. So my gut feeling is that this is going to be a nothing burger, but no one actually fully knows. And if you genuinely believe it's a nothing burger, this is a buy the dip. If you want to see how the market reacts, then that's when you kind of wait until markets open. The Qs are down 3.4%. IWM's down 0.5%. Tesla's down 3.2%. Broadcom down 11%. Micron down 7%. One thing is for sure, if this is a nothing burger, then the semis are the dip to buy, right? Because the semis are giving you a real dip. Like Max 7, you're getting 3 to 4% down. SoFi's down a little bit. HUD's down a little bit. But really, the semis are down almost 10% across the board. ASML down 8.4. Broadcom down 10.5. NVIDIA down 10.8. And so if we're really seeing a dip that's worth buying, I would imagine it's more in the semis. Thomas says, has Zucks doubled down on the 60 billion over the weekend? I wouldn't be surprised if on the call he mentions they're reviewing CapEx spend. So that's a good point. If Mark Zuckerberg on Wednesday in the Meta earnings conference call says we are reviewing the amount of CapEx we're going to spend, and he doesn't like definitively and enthusiastically say, yeah, we're spending 65 billion and our guidance is unchanged, we plan to spend this much money. Like if there is any bit of hesitation in how much he's going to spend, I think it's going to get very interesting, because this is not a market, given the multiples that we're trading at, where you can hesitate on CapEx demand. One of the reasons we went to all-time highs on Friday is because Zucks came out and said on Threads that he plans to spend 60 to 65 billion. And that got the market excited. That got me excited. I was like, okay, cool. So AI CapEx trade so far is intact. If that changes, then I think we're going to have some issues. So yeah, if he says that NVIDIA tanks, I agree. We're going to have to see kind of how that plays out. Now, here's what Nadella said about this. Nadella tweeted, Javon's paradox strikes again. As AI gets more efficient and accessible, we will use it to skyrocket, turning it into a commodity we just can't get enough of. So I learned about Javon's paradox this morning. And essentially, this is the idea that as you use something, there becomes economies of scale and the price to use it goes down and it becomes a commodity because multiple people start to take margin away from the incumbent that created the innovation in the first place. The reason that hasn't happened with NVIDIA is because they've had a 30-year head start on building these GPUs. But even if it becomes commoditized, we use so much more of it that the overall demand around that industry continues to go higher. I kind of think of it like oil and gas, right? At one point, there was only a couple companies making oil and gas, the Rockefellers of the world. And then a lot of companies started drilling for oil and gas. And the price of oil and gas came down substantially. But the reason ExxonMobil still makes tens of billions of dollars of profit a year is because everyone needs oil. You get on a flight, you need oil. You get in your car, you need oil. Like we still need oil. Every business uses oil. And so the demand for oil went up, even if the price for oil went down, meaning the oil providers still benefited. They don't benefit as much as they did 30 years ago, but nonetheless, they still have viable business models that are required. In this case, the semiconductor stocks might be in that same situation where, yes, the cost of compute goes down dramatically, but because we need so much more of it, because no one can imagine their life without a Tesla that's self-driving them or any car that's self-driving them. No one can imagine their life without robotics. No one can imagine their life without more chatbot assistants that are helping you in your day-to-day lives. All of that requires compute. All of that requires AI. All of that inevitably requires more GPUs, which means all of that requires more spend on NVIDIA. But the market is confused on if that actually is going to be the case. And that is why we're seeing a bit of a dippy dip that we have not seen in about 3 weeks. I mean, last time we got this dip was Christmas Eve, and NVIDIA was the same price it's at right now, 126, but NVIDIA wasn't down 11% that day. NVIDIA was down like 4%. This is like an erasure of $450 billion in market cap. And that's why I think it's a bit more aggressive in terms of what we are seeing right now. Mark, thank you for the $10 super chat. He says, I'm down $45,000 right now. It's okay though. I have 5,000 shares of Palantir at $14. NVIDIA, 1,100 shares at $50. Yeah, I mean, look, if you have amazing averages and amazing cost bases like Mark does on Palantir and NVIDIA, or any stock where it's significantly lower than where the price is even after a 10% decline, this is probably not something you're super stressed about, especially if you don't think NVIDIA is like dying as a company and the whole AI trade isn't over. But if you've been waiting to get in and find an opportunity, Palantir right here down 5.9%. I think that's when people's ears perk up to see if there's an opportunity. AT&T, they beat on EPS and revenue. They're up 3.39%. That is good for the consumer, good for the broader economy. Verizon followed them last week, so we got AT&T up a little bit. ExxonMobil's up about 0.27%. Oracle, which is in rumors of acquiring TikTok, that news broke on Saturday night. They were actually up last night in the overnight markets, but then the bloodbath happened at 4 a.m. today, and Oracle fell 8.6%. But if Oracle gets TikTok, that's 170 million users they have control over, which would be a very special asset to have access to. But that news is getting overshadowed by the NVIDIA news that we're seeing right now. MicroStrategy's down 3.9%. Bitcoin's at 100.3. Starbucks down about 1%. Meta's down 3.4%. Meta did recover to 638 like 10 minutes ago. Now Meta's back to 625. SMCI down 9.1%. Alibaba in China is actually up right now. So China's benefiting off all this decline, but US tech stocks in particular are getting hit today. Now, here's an interesting theory. Here's an interesting theory that a friend of the channel, Chris Camillo, tweeted today, which I wonder what everyone thinks about this. But the company that open sourced the DeepSeek model is not a tech company. It's a hedge fund. We talked about this last night on the Sunday's Future Show. It's a hedge fund, which is even crazier, right? Because it's like, how is a hedge fund getting the talent and the GPUs necessary to build a competitive model with OpenAI? That's why a lot of people are freaking out. They're just like, what is going on here? Is like A, how do they have that much technology? Have we underestimated China? B, is the technology that hard to produce? And are we overestimating OpenAI? So here's what Chris Camillo said today. What do you think the likelihood of DeepSeek's $7 billion hedge fund parent is shorting NVIDIA and consider this into their decision to open source their model while emphasizing its $5 million training cost? It's a hell of an argument. DeepSeek's parent company is a hedge fund. Imagine they put out this news a week ago about their new open source model. They're emphasizing the $5 million training cost, making sure that that gets all the headlines. And then simultaneously, they go short NVIDIA. The logical conclusion here is that if Chinese hedge funds, outside of just DeepSeek's hedge fund, but a lot of the other ones that are in China, knew about the DeepSeek news coming out, they went short last week, and today they can cover their shorts for a massive profit. We're talking about billions of dollars of profit, and then go long after covering their short. Then this would be an absolutely wild way for China to get exposure to tech companies at an incredible discount in the United States. As Andy says, it's all rigged. I mean, like, dude, if that's happening, if that actually ends up playing out, that would be wild. I guess we'll find out, in the future if that happens or not. But that is what is one theory that could be happening here right now. I just think 12% down is kind of crazy, bro. When I woke up and I saw 12% down on NVIDIA, I was like, what? Really? Like, that's just like, I did not expect that at all. Now, Elon's calling bullshit on this. So Elon, Mark Benioff, CEO of Salesforce, he tweeted this morning kind of the same thing that Alex Karp and Palantir have been talking about. By the way, my quick thoughts on, does this affect Palantir? It affects Palantir because Palantir is bucketed as an AI growth stock. It's very high beta. So obviously, if the market falls, Palantir is going to take a hit. However, Palantir has been saying this for a long time. The ontology and the business use case of the model is what matters, not the model. And if you're a Palantir investor, at least for the past year, even if the past 6 months you got into Palantir, that's kind of their thesis. It's never been about the model. It's always been about the purpose of utilizing the model. So Mark Benioff says, DeepSeek is now the #1 on the App Store, surpassing ChatGPT. No NVIDIA supercomputers or $100 million needed. The real treasure of AI isn't the UI or the model. They become commodities. The true value lies in the data and the metadata, the oxygen fueling AI's potential. The future is fortune. It's in our data, deep gold. And then someone asks him, Mark, do you take the claims that this was done on a shoestring at face value, aka that they didn't need a ton of GPUs to make this happen? And Elon says no. And he says LMAO, no. Elon basically saying this is a joke, right? Elon saying obviously they had a ton of GPUs that allowed them to be able to do this, and that's how they are getting this done. Now, how do we know that they had a ton of GPUs? Well, we had the Scale AI CEO at Davos last week basically imply that he's hearing that DeepSeek had 50,000 GPUs to actually be able to get this done. Okay, weirdly, you guys couldn't hear it. I don't know why you guys can't hear it. That's being stupid. Let me try it one more time. Let me know if you guys can't hear it. Let's try this right here. Let's try. All right, let me know if you guys can't hear it again.
You know, the Chinese labs, they have more H100s than people think. You know,
and these are the highest powered NVIDIA chips that they were not supposed to have.
Yes. My understanding is that DeepSeek has about 50,000 H100s, which they can't talk about, obviously, because it is against the export controls that the United States has put in place. And I think it is true that, you know, I think they have more chips than other people expect, but also on a go-forward basis, they are going to be limited by the chip controls and the export controls that we have in place. You know, you
know what happened, bro? I probably searched too much DeepSeek on my computer yesterday, and the freaking Chinese, they found a way already. They're already in my computer. Can we talk about the fact that everyone's downloading a Chinese model and entering all their freaking questions into it? Like, how is that? Like, that's blowing my mind that we're just happily entering all of our deepest and darkest questions to a freaking Chinese model, and we're all cool with it, right? But nonetheless, the Scale AI CEO is basically saying, hey, like, no, the only reason they're able to do this is because they have so much compute power. Here's an example of trying to ask this DeepSeek model a question. Look at what happens when they ask about something controversial. So they start asking, what famous picture has a man with grocery bags in front of tanks? And then you can see the DeepSeek model is trying to talk a little bit more about Tiananmen Square, and then it goes, sorry, that's beyond my current scope. Let's talk about something else. That's kind of wild, right? Like, it tries to bring up some history around China, and then immediately, boom, it says, sorry, that's beyond my current scope. Let's talk about something else. Like, we talk about bias in AI models, and I know GPT and Gemini have some biases or whatever, but like, dude, this thing like literally is self-censoring the ability to even talk about controversial parts of China's history. So that's another reason this dip seems kind of stupid. Who the hell's using this DeepSeek model, open sourced by the Chinese government, in any actual business or operational use case? The answer is no one. However, the reason the market is dipping is because that's not the headline, even though conventional wisdom would say like no one's going to use DeepSeek. The headline is, if it was trained on less than 10 million bucks, even if they had access to all these GPUs, that is what the market's afraid about when it comes to the cost of inference compute going down substantially. But then again, you weigh Nadella's argument, and Nadella's argument is like, it doesn't matter because AI compute is going to be so important to everyone's lives that demand's just going to go up. So these are the conflicting narratives that are kind of being played against each other right now. And that's why we're kind of seeing the dip that we are getting currently right now. It is #1 in the App Store as well. So just like everyone got into TikTok, everyone is, or at least everyone in the United States, 170 million users, there are people that are now downloading this and utilizing it to some degree. So that is kind of how this is playing out. Sachin says the Scale AI CEO word should be treated with some salt. His company is actually falling behind in the AI race, and he is raising funds at a premium valuation, and he needs to raise more. DeepSeek sign isn't good. That's a good point. That is a good point. And him downplaying the level of GPUs that they're using probably is, another reason why or him upplaying the level of GPUs that they're doing is not necessarily good for his business in terms of where he sits in the AI stack. And that could be a reason that he's hyping up right now. SoFi almost back below 16. Slight recovery from 15, but still at 1605. It's now 1601, 1 cent away from going back below 15. Here's my thing on the dip. August 5th, we bottomed in the pre-markets. August 5th, we bottomed in the pre-markets. If we do not get a bottom in the pre-markets, I don't think we've seen a bottom today. S&P right now is down 2.1%. If we further go down to more than 2.17% and it's not a quick bounce back up, then I think we've got some more pain. So as you can see right here, August 5th, you see that right there on Webull, 507. Some brokerages will show you the exact amount, but 507, August 5th, this, I don't have the exact time, but from what I understand, it was around like 8 a.m. This was in the pre-market. That was a 10% retracement from the top of July 16th. And then immediately we rebounded. And then we had some more dips along the way, but we never saw 507 again. Right now we're at 594, which is a lot different than 507. To say that 594 is the absolute bottom over the next couple months is a little hard, just given how much it's basically at all-time highs. But at least on the intraday, we would need to hold that 594 and not go to like 585, 575, where we have support on the S&P for us to say that there is a meaningful bottom here. So 930, that's what I'm going to be watching the most. I did not buy anything yet. I am very interested in selling puts on a lot of these names. I would love to sell puts on NVIDIA at 115. I would love to sell puts on SoFi at around 12. Love to sell puts on Hood at 38, 39, 40. But I want to see how bad it gets. I think in these moments, patience is more important than greed. In these moments, unless your stock that you like, if you really want an Amazon below 230 and it's at 226 and you've been waiting for that moment, then you buy and you probably feel happy about that buy. But if you don't really know if Amazon at 226 is a great deal and you're waiting to see how the market reacts, I'd rather buy Amazon at 230 than 226 and miss out on that $4 and feel more comfortable that I think things are stabilizing versus buying into a falling knife. It's really based on your own risk appetite. Like SMCI down 10%. Am I buying that dip? No, because I don't know anything about SMCI. Right? And like just because something's down 10% doesn't mean you buy it. But if you've been waiting for SMCI below 30, this is your opportunity. And so you really have to ask yourself, just what is your personal risk tolerance? What is your level of cash that's on the side? And how much opportunity do you want to engage in when it comes to these dips? One thing I will say today, if you've got any covered calls in the market, today's the day they print, because all of the call buyers are going to get smacked today because calls will probably be down 20 to 40%, which is great for option sellers. And that is the beauty of covered calls as a hedge on days when things get pretty bad. Shout out to Derek for the $100 super chat. Black Swan. This definitely feels like a black swan. This definitely feels like a black swan today. Thank you, Derek, for being here. Thank you for the $100 super chat. I feel like Derek's going to buy something today. We know Derek loves these dips. He's going to buy something. He's going to buy something. All right, so what are you guys buying? We got 7 minutes until the market opens. What are you guys buying? What's on your list? Put it in the chat. What's on your list? And I'll put a poll to see who's buying, who's not. 81% of you in the previous poll said that this is an overreaction off of 4,500 votes. So a significant percentage of you guys said this is stupid. Buy the dip poll. Let's see. I'm ready to sell some puts, bro. We get some juicy dips. I am happy to collect some premium. This is the day, by the way, to sell puts. We had a whole options class on Saturday for those that checked it out. Thank you for everyone who was there. A lot of you guys had some good feedback on it, but this is the day. Why is this the day? Because on a massive red day, we're talking about 10% across the board, down on everything, 5 to 10%. That's when put premiums go up. So if you are bullish on SoFi and you don't want to buy it at 16, you want to buy it at 14, and we'll take a look when the option chain comes out this morning, someone will pay a lot more than what they were paying on Friday for that put on 14, because SoFi fell from 18 to 16. So that put became more valuable, which means you can collect more premium when you sell that put. And so the question is just going to be where things ends up opening at 9:30 to determine what these put premiums look like. Kramer's on SoFi Live. All right, let's get Kramer's take. Let's see if he's killing SoFi on this take. I see a lot of NVIDIAs in the chat. I see a lot of SoFis in the chat. I see some Palantirs, some Hoods, some Teslas. Bunch of different names that we've been talking about for a while. Here's a quick take on SoFi. Then we got the market open in just 5 minutes.
And potentially talk SoFi. Right. Now, SoFi is Anthony Noto. He's made a major turn. The stock used to be much lower. The shorts were all over it. He just delivered consistent. He's flipped the model to be a little more financial service and a little less banking. He does report this morning. Now, people are going to say, wait a second, it must have been a miss. No, the actual quarter was good. It must be the forecast. Only one line, the EBITDA was light. People were looking for 905 million, and they came at 845. My problem here, David, is why would I sell it over a forecast and not the fact that it's doing quite well? And the answer is DeepSeek. In other words,
it's just getting caught up in that.
Because
it's not because it's had such a great year and a great move. Obviously,
it's the kind of the secondary of like, well, wait a second, have we overstayed our welcome in a red hot stock? And I think, David, the red hot stocks today are trading as a unit. And SoFi is being caught up in that. Now, do I want to buy SoFi? It just had such a big move. That's the problem. We've had stocks that have such big moves. Why do we just?
All right. So Kramer pretty much saying that, hey, SoFi is already up 100%, so maybe not the best buy, but nonetheless, it's getting bucketed in with the AI CapEx trade. I think he's correct to an extent. So I think SoFi is down. Wow, NVIDIA, 12.2%. We got 4 minutes until the market opens. All eyes are going to be on NVIDIA when the market opens. But I think SoFi is down because today was the worst day ever to report in earnings for 2025. However, guidance was not good for SoFi on EPS. 2026 guidance was good. 2025 guidance was not that good. Is that a reason for it to be down 10%? No. Maybe down 2 or 3%. I think the exaggeration is coming from the AI CapEx phenomena that we're seeing happen right now. But this could get worse, right? This is just like the nature of how psychology plays when markets end up getting this bad. I don't think today's the day to sell, though. That's the difference between August 5th. August 5th, no one knew what the hell was happening with these with the yen carry trade. Right? Like no one knew what was happening and people were legit scared. People were getting margin called. It was later in the year. So a lot of people had gains. They wanted to protect their gains. This is January 27th. A lot of people have kind of matured in some of the stocks they've invested in. I mean, if you've been buying NVIDIA for the past 5 months, you're probably a little unfazed by some of these dips. However, no one really knows now if this GPU thing is real or not in terms of like the demand for compute. But my gut feeling is that it's not as big of a deal as the market would be implying it's a big deal for, which is why this is not a day to sell. This is a day to hold, maybe buy the dip, and potentially for me sell puts. But I will definitely not be unloading any positions today. I mean, there's nothing I'm looking at my portfolio where like, yeah, I definitely have to take a loss here just to save my money. Whereas August 5th, people were legit taking losses, bro. People were legit selling stuff even if they were down on it, just because of how scared they were that everything was going to collapse. I don't know if today that is exactly going to be the same case. I see a lot of NVIDIAs in the chat. A lot of NVIDIAs. Okay, so it seems like that's going to be one that people get into. One thing that is really cool, though, if you have money on the sidelines, I mean, these are the days that you have money, right? These are the days that you save some money for. Thankfully, I closed out my hood position in terms of the puts I had sold on it on Friday. That was actually, like, thinking back on it, that was a hell of a move, bro. Because if I had not closed that position, that would not be that fun. So I had $45 puts that were in the money that I sold when hood was 40. So I made about 15 grand in 3 weeks. These were very aggressive in the money puts on hood. I only did it because I had a deep feeling that Q4 would crush. But on Friday, like it was at like 320. I was like, you know what? There's no point of waiting another month for 20%, for another 4 grand. So I closed that, got 135,000 back in collateral, which now I can use to buy the dip if I want to buy the dip. So that was a good move on Friday. And I know a lot of other people took a little bit of profits on Friday, closed some positions as they were going up. And in general, if you've just been patient and you've had cash on the side, then this is going to be one of those days to see if it's an opportunity to officially deploy. So here we go. This is why we hold on to cash. This is why we invest. Most of your friends and family will never be in this position. They will never have this anxiety, but they will also never feel the joy of stocks going up 10% in a day. This is why we invest for these reasons, for these moments. And today is another one of these moments. 9:30 Monday, January 27th. The stock market is now open. Wake your ass up. Here we go. NVIDIA opens down 12.5%. 12.5% on NVIDIA. not getting any reprieve, not really moving any different from there. 124.05, 124.02. It looks like it's about to go below 124, 12.8% on NVIDIA. S&P down 2%. You got a big green candle on the S&P. Big green candle on the S&P. S&P still down 2%, but it's green from the pre-market. SoFi down below 16, 11%. Down below 16 on SoFi. Apple is green. Wow. Market said, all right, we'll sell off GPUs, we'll buy iPhones. Apple goes green. Robinhood down 5.4%. AT&T, they beat on the top and the bottom. They're up 4%. Vertiv, energy infrastructure, down 21%. Vistra, Nancy bought this last week. Energy infrastructure for data centers, down 19.5%. ExxonMobil is green. SMH is down 7.4%. That is the semiconductor ETF. Tesla is down 2.9%. Tesla actually not getting hit that bad. I mean, 2% is not that crazy. Tesla's been getting hit over the past couple of weeks. So Tesla down 3%, not horrible. The Qs are down 3%. Broadcom, wow, down 14%. So Broadcom following NVIDIA getting hit. Oklo, energy data infrastructure might not be needed from a nuclear perspective if that much compute is not needed. That's why Oklo is down 21%. Also, Oklo doesn't even have any earnings, but Oklo right there was up 91% year to date. Now it is up 70% year to date. MicroStrategy is down 2.3%. Amazon's down 2.7%. Bitcoin 101. Bitcoin getting a little bit of a bid in recovery. American Express down 1%. IBM down 1.4%. Meta is down 1%. Wow, Meta basically going back to all-time highs on Meta. Meta was at 645 on Friday. Meta fell to 605 in the morning. Meta is now at 640. Down about 1%. Nike, 73.91. Alibaba is green, up 1.6%. Ulta Beauty, Elf Beauty are down. Snapchat's down 2%. Grab is down 2.8%. Rocket Lab down 3.4%, although Rocket Lab's still up 30% from last week. So Rocket Lab had a great week last week, down 3.4% of the day. Nubank is down 1.7%. NVIDIA kind of catching a bid. A little bit of a green candle, 126.5, but still down 11.2% on NVIDIA. TSM is down 23%. Really? TSM? No, it's down 10%. Down 10%. 23% was a little aggressive. It's down 10%. TSM down 10%. So far, dips are getting bought, even if markets are still red. Dips are getting bought. Look at SoFi rebounding back above 16. Hood back above 49. Hood being a champ. SMH down 7%. Palantir still down 6%. Palantir was up last week nicely, so that's not too bad. Covered calls, I'm getting notifications from Robinhood, are absolutely printing. Covered calls are doing great. So if you have covered calls, those are not doing too bad. Those should be printing. In general, my portfolio, and you guys can put in the chat as well, is down 25,000. It was down 14,000 in the morning. It's down at 25,000 now. So a little bit of a red day, but some of these names are covering. And again, covered calls absolutely printing today and not doing too bad. Vistra's down 20%. See, that's a dip I want to, like, I just don't know enough about Vistra, but like, this is a dip that gets exciting, dude. Energy infrastructure play, it's a little bit more under the radar when it comes to data centers. That down 20% seems a bit more exciting than even NVIDIA down 10%. But even NVIDIA, dude, 123 to 128, it's picking up some steam. Market's not letting it sit there for too long. I know we're only 3 minutes into it, but still. Vertiv down 18.4%. The Qs down 3%. Broadcom picking up steam as well. That was down 15%. Now it's down 11%. Now it's down 11%. Pepsi and United Health are up. So those are more of the value plays. Pepsi right there. Yeah, Pepsi up 2.3%. UNH up 2.5%. Is the Dow Jones up because of UNH? The Dow Jones is almost green. It's down 1/3%, which is kind of nothing on a day like this. That's one of their largest holdings is UNH. Also, NVIDIA is in the Dow Jones, so that's probably taking it down a little bit. IWM's down 0.71%. Where's the S&P? Wow, S&P 1.75. It was down 2.5 in the pre-market. So far, pre-markets have been the bottom. So far, pre-markets have been the bottom, which is really good for us to keep this broader bull market intact. The VIX is up 41%. So VIX is green, 45%. Not really August 5th levels of being up 600%, but up 45% is definitely, you could argue, panic and fear, which tends to be the best time to buy. Robinhood 48.95, Palantir 74, NVIDIA 127. Hit 128, got rejected at 128, back to 127.5. Let's see if it can develop a little bit of support there at 127. TSM still down 7.9%. Wow, TSM was down 15%. Then it was down 10%. Now it's down 8%. Let's look at the rest of the semis. SMCI Went from down 10% to down 7%. Intel's flat. ASML still down 8%. Broadcom down 12%. Qualcomm down 2%. TSM down 8%. Marvell down 13%. Dell down 6%. Micron, I know a lot of people like this one. This one's down 7%. And then ARM Holdings lost all of its gains from last week. This one is down 8% on the day. Enphase is green. Interesting. Why is Enphase green? That's interesting. So Enphase goes green. Fear and greed. Let me check that. That's a good point. Let's check that. We've got to be in greed, or sorry, fear, I would imagine. Yeah, we're in fear. We were at neutral on Friday, so we went all the way back to fear, which makes sense, down 2% on the S&P. So currently right now we are in fear. Wow, AT&T catching a bid, bro. AT&T doesn't move that often. AT&T, nice dividend on AT&T and 5% green day, while everything else is red off of beating on the top and the bottom line. 6% now up on AT&T. Where's AMD? AMD, I think, is down 3%. AMD is down 4.8%, 116. It sucks for AMD because AMD was actually starting to break out even a little bit at 125 last week. And 115, I believe, is the bottom on AMD over the past month. Maybe 114.5, something like that. So 113.2, that was the bottom, 113.2. That was on January 13th. That's when we saw a little bit of a market bottom before Trump and then CPI came in. Now we're back to 116 right here. S&P 500 down 1.7%. NVIDIA still down 11. So 127 couldn't get support. Back to 126. This is why buying the dip is hard, bro. You think you get the bottom and you don't. Obviously 126, 127, 128, like $1 or $2 doesn't make a difference, but you just never know. You just never know when things are changing, when things are going green. We still have a lot more hours left in the day. Volume on NVIDIA, wow, 127 million shares in the first 7 minutes have been traded across the world on NVIDIA. Palantir volume, 13 million, down 5.6%. What is SoFi's volume? SoFi, 1565, 27 million shares have been traded. SoFi down 12.72%. SMCI does not report today. They report on February 4th. SMCI is on February 4th. All right, put in the chat what you bought. Put in the chat what you bought. I see some people already saying they bought some stuff. Put in the chat if you bought anything so far. Someone said they bought some Rocket Lab. Some people bought some NVIDIA. Coca-Cola's up 2% as well right now. What else? Some people got some Grab, ASML, NVIDIA, MVIS, QQQ puts, 131. I don't hate that if you're selling those. SoFi, 9 shares of NVIDIA. SoFi right here still down. Enphase is green. AT&T is green. United Health is green. Pepsi is green. Coca-Cola is green. Berkshire Hathaway, are they green? Berkshire Hathaway is probably green. They are green, and that's because Apple's also green. Berkshire Hathaway up 0.5%. Apple is up 1.3. Why do you guys think Apple's green? You think it was just like the market was done with the Apple sell-off? I mean, Apple doesn't really spend on CapEx like a Meta or a Microsoft does, so I guess it doesn't affect them that much. But still, the street's kind of ignoring all the lack of iPhone sales estimates they cared about last week. Let's check the quantum names. How are those guys doing? Red, but not as crazy red. I mean, like they're down, but they're down about 5 to 8%, which is normal. I mean, their spec names already, but that's in tune with the rest of the market. You know, a lot of the rest of the market's down about 5% on average. So yeah, it's nothing too crazy. It's not like they're down 30% or 40% or anything insane. So there is a bid on the quantum names to not tank them as badly as they were a couple of weeks ago. In terms of our spec portfolio, Archer's down 5%, SoundHound's down 8%, MicroStrategy down 3.4%. Oh, Sailor bought another 11,000 Bitcoin this morning, or 10,000 Bitcoin at 105,000 a coin. So he paid about 1.1 billion, but he did buy more Bitcoin today. Color's down 7%. Oklow's down 21%. That one's getting hit the worst. And then nuclear energy stocks, NNE, also, wow, down 19%, giving back all of the gains they got last week. SMR as well, down 18.9%. This is crazy, bro. The market's really punishing the nuclear energy plays because they think data centers and CapEx means less energy demand. Kind of wild. Meta's tanking, really? Meta was just at 640. Did we have no support on Meta? Wow, 632. I wouldn't say that's tanking yet because it was at 605 in the pre-markets, but it's definitely not holding up to the 640s. Again, Zucks and Nadella, they have earnings calls on Wednesday. They're going to be asked about China, and I would hope it's the first question they get asked in the Q&A because we got to put this to bed, and they have to have an answer. Also, Jensen, I mean, look, I think Jensen probably needs to say something about what's going on with DeepSeek. right? Because if DeepSeek really did illegally get access to hundreds of thousands of GPUs, I would imagine Jensen knows about it. And maybe Jensen sent them to Singapore and then Singapore sent them to China, right? There's some way that they got access to those GPUs if they were able to really create a competitive model. If they didn't, that's very scary because then how the hell do they do this? But if they did, then Jensen kind of needs to come out and say, maybe they did get access to models. He could plausibly deny how he knows they got access to models. But if he could say, well, the only way they could do this is if they had our chips, and we don't know how they got our chips, but somehow they got our chips, then that could also maybe quell some fears about all the doubts that are going on right now about NVIDIA. This is when we need Jensen to be as active as Elon on Twitter, bro. Like we need a Jensen tweet. You know what Palantir should tweet today? Palantir should tweet. If I was running Palantir Social, I would be like, told you bitches, it's the ontology. That's what I would tweet if I was Palantir. Because Palantir's been saying this whole spend on compute to make better models has been stupid for the past year and a half. And not stupid as in we don't need better models, but rather the value, the market cap of an OpenAI at 150 billion to create a commodity. Palantir's been saying this is like dumb. This doesn't make any sense. And today we are kind of seeing the manifestation of that in some of these stocks. Troy says they are illegally purchased by companies in different countries that China can use. So Jensen wouldn't know if China is using chips in X country, for example. Well, if I was Jensen, I would come out and say that. If I was Jensen, I would say, look, there is no way in hell DeepSeek did what they did without a ton of our chips. I don't know how they got those chips, but they had to use our chips. And I think the street would be very happy because they would be like, all right, at least we know we can trust Jensen on this idea that it's not China innovation. It's China lying about how many chips they had. Now, granted, even if they only had 50,000 H100s, the problem is Microsoft has 450,000. And if they're able to do what Microsoft's able to do and OpenAI is able to do with 1/10 of the chips, that's where the actual innovation is. And I don't think anyone has a full answer to know if that's accurate or not. And that's why the market's questioning, is this CapEx trade still on? NVIDIA giving up 126 back to 125. So it peaked at 128.4, got rejected, no support at 127, and now trying to hold on to 125.8 as we get into the market open. Robinhood right here, below 49, 48.80. Vertiv still down 23%. SMH down 7%. Tesla back to 400. Tesla, nice little recovery. Not too bad. Micron down 8%, Oklo down 18%. Energy infrastructure and semis are getting hit the worst today. Even SoFi back above 16. Everything else is actually, it's getting hit, but it's not getting hit 10 to 15% like the rest of these names. What do you think about DJT? Let's take a look at DJT. DJT is down 7%. No thoughts on DJT. It trades kind of with Trump's brand. So if he does something good, it goes up. If he does something weird, it goes down. Or if the market just doesn't like Trump on a certain day. So I think DJT kind of trades like the Trump meme coin. But it is a growth stock, high beta, so it's probably going to go down if the broader market takes a hit. Apple green right here, 226.8. Apple continues to be green. Well, here are my SoFi spreads. Here's an update on that. These guys are down 17% today. So they were up like 18,000 on Friday. Now we're up 13,000. A nice 10% in the stock declining. We'll do that for you. Covered calls are doing well, though. Covered calls are doing well. I had some covered calls on Google. Those are up 30%. Nothing too crazy, but they're up 30%. I had some covered calls on Amazon. Those are up a little bit. So again, I'm going to be looking a little bit later at seeing what these put premiums look like to sell puts. But overall, if you had covered calls, those are not doing horrible right now. But really, it doesn't even feel like August 5th. Like, it doesn't feel like mass panic or mass pain. It feels like if you're heavily in the semis, if like 80% of your portfolio is in the semis, you're feeling it today. But if you're an index investor, if you're in the S&P, you're down 1.6%. Okay. If you're in Hood, Hood went from 38 to 51 in a matter of 8 days. Like, it's at 49. Okay. SMH is down 7%. That sucks. Tesla's been declining for the past couple of days. But if you've been in Tesla since the 150 lows, even the 250 Robotaxi sell the news event in October, you're doing very well on Tesla, right? So unless you bought Tesla at literally 480 a month ago, it doesn't feel as August 50 as I would think it would feel. It felt more like that in the pre-markets. Amit, can you explain those Hood cash card puts you showed? You bought out the money cash card puts, then they went in the money. So I bought in the money cash card puts, meaning, Hood was 40. I took a strike for 45. So my Hood put was in the money because the stock was under 45. And then they became out of the money once Hood got above 45. And so it's kind of going synthetically long. When you write a put on a stock where the strike price is above the underlying price, that means you're bullish that the price will go up. And if it goes up, the premium return. So I got 11% in 3 weeks, where on average, you get 2 to 3% a month. It's 3 times the average on a cash trade put. It was a lot better. But you can only do that on a stock where you think there's a catalyst coming up. And for me, I thought the catalyst was Q4 earnings was going to be really good. And we didn't even have Q4 earnings yet. And the market decided that Hood is worth $50, right? So because it was up 77%, there was no point of waiting another month and taking the risk going into earnings for another $4,000. And so I was able to profit $15K off of the $135K I used in collateral. Again, I wouldn't normally do that. Usually you do a put strike that is much below the underlying price to be safe. But if you want to be aggressive on a company you intimately know, it's not a horrible strategy. You just have to be ready to buy those shares if you get assigned. And if I did get assigned, my average would be 38.5 because I got $7 a premium from a $45 strike, which I'm more than happy buying Hood at $38.50. NVIDIA getting back to 127, a little bit of a reclaim right there, now down 10.6%. ExxonMobil's up 0.5%, Vertiv still down 23%. Tesla recovering almost fully, only down 1.3%. That's at 401. Broadcom still down 12.8%. And then Palantir as well, still down 5.2% on the day. Oh boy. Oh boy. Oh boy. Oh boy. It doesn't feel that bad. It doesn't feel that bad, right? It really, I mean, outside of the semis, it's not that crazy. 81% of you said you were buying the dip today on the poll. It doesn't feel that crazy, bro. It doesn't feel that bad at all. It's like it's not August 5th, and maybe we get a 10:30 slam and it gets really bad, but so far feels okay. The Art of Teaching, thank you for the super chat, says, isn't it far more likely that DeepSeek stole US IP and or are lying about the numbers? This is China we're talking about. Yes, that is a potential thing. However, some of the research I looked at this morning looks like it was not them stealing. It was more so them training on Llama and using some of Meta's open source models, which isn't stealing, right? Because Meta open sourced it, to be able to build their own open source stuff. So is there a part of stealing involved in this? Possibly. And obviously it's hard to trust China, but there's also a lot of truth to the fact that they just were really good at using the short amount of resources they had when the export controls went in place to build some pretty strong foundation models. Now, the question becomes, how many GPUs did they actually have? Because no one has the answers to that. And how good are the models? And the one thing we can verify is the models are good. If you go on Twitter and you look at what people are saying about DeepSeek outside of all the China censorship stuff, you can run it locally on your computer and people are saying it's as good as a GPT. And because it's that good, that's another reason the market's freaking out right now. Because it brings up a much bigger debate outside of just like China versus the US, but about open source. And who's the winner there? It's a company called Meta, because Meta's constantly, for the past couple of months, been on this open source train where they've really denied the validity of needing proprietary models, which is what Anthropic and GPT's moat, if you would say, is built on. And so the debate might not be US versus China. The debate might just be open source versus closed source. And in that case, I don't know how OpenAI justifies a $150 billion valuation. That's going to be the hard part. Here's a funny thing that I just noticed this morning. Tesla's about to go green, but look at this tweet. This is something I wish I caught a while ago, and I didn't catch it. But Andrei Karpathy, who is one of the former heads of AI at Tesla, look at what he tweeted on December 26th. On December 26th, this guy told us what was happening. And his opinion in the world of AI obviously is very important. Look at what he tweeted. December 26th, DeepSeek, Chinese AI company, making it look easy today with an open weights release of a frontier-grade LLM trained on a joke of a budget, $6 million. I mean, that's the headline today, January 27th. But this guy tweeted this December 26th. And then he says, does this mean you don't need large GPUs cluster for frontier LLMs? No, but you have to ensure that you're not wasteful with what you have. And this looks like a nice demonstration that there's still a lot to get through with both data and algorithms. Very nice and detailed tech report too, reading through. So he's not denying that you don't need a ton of GPUs, but he is saying you have to be a lot more efficient with your GPUs. And if you have to be a lot more efficient, maybe that takes down a little bit of the AI CapEx spend. And that's why the market is also feeling a little scared about how much will actually get spent. Did you go through SoFi earnings? Yes, we listened to the call. SoFi was good, beat on the top and the bottom line. They were not good in terms of 2024 guidance or 2025 guidance. They were good on 2026 reaffirmation of guidance. And that's why SoFi is down 11.3% right here. The street wanted about 35 cents of EPS. They brought in 29 cents for 2025. And that's why SoFi's down. Now, granted, they're probably sandbagging, but still, that is the reason they're down right now. Robinhood 49.50, not bad. So Hood getting a little bit of recovery right here, down 3%, 49.50. Bitcoin as well, about to go to 102. So as growth stocks take a little bit of a hit, crypto is not necessarily agreeing that it needs to fall as much as some of these growth names. Granted, Bitcoin was at 107 last week and it went all the way down to 97 last night, but nice recovery from 97 to 101. I mean, that's a really healthy recovery, showing a nice little strength of support there at 100,000. Isn't this typical China, though? Use inferior products to create in a hurry? Yes, which is another reason people are wondering why the hell is the market so upset. Like, I mean, we heard the joke about this being Temu AI, but that's kind of the thing, bro. It's a good model, but is it a model that is going to be used in major corporations, major governments, major enterprises? No, like that's just not the case. But again, I have to keep hedging that statement with the idea that it's not about the quality of the model. It's about the fact that to train that model, the costs were so low, and that's the headline that's getting the market confused about what's happening currently right now. Okay, let's look at some put premiums. Let's see what we got, and let's see if we can sell some puts. Let's start off with SoFi. What is the market willing to pay me if I sell some puts on SoFi? So we're going to go to trade options. We're going to go to our options chain. I like going a month out, so February 28th. Earnings is already done. Puts are up across the board, 60 to 70%. As you can see, that happens when stocks fall dramatically. And as a put seller on a stock you are bullish on, that should be rather exciting. So the 1350 put is paying 26 cents. So we would take 26 divided by 1350. How did I get 1350? 13.5 times 100. That's 100 shares I'm obligated to buy. So $1,350 of collateral. And then 26 cents a share times 100 is $26. So 26 divided by 1350. My ROI in 30 days would be 1.9%, about 2%. Not horrible. I don't hate that. Not a lot of places where you can get 2% on your money in 28 days. Is Hood flying? Hood 49.73. Not too bad on Hoodie. So I'm going to sell a couple of those. Let's get started with that. So we're going to sell 10 of those. Nothing too crazy. And we will see if the market is willing to give us 1350. So we'll sell those. And we got filled. So we got paid $250 of credit off $13,500 of collateral. Again, some people may look at that and be like, you're risking $13,500 for $250. I get it. That's one mentality to think of option selling. My mentality is I'm getting $250 off $13,500, which is 2% of my money. Number two, if it actually does get to $13.50, I get to buy these shares basically at $13.20. And I'm more than happy to buy SoFi 1,000 shares at $13.20. And so that's kind of the mentality you need to have if you're selling puts on certain names that you're bullish on. And if the market wants to give me 1350, then give me 1350. We'll see if that ends up happening. TMDX is up 5%. TMDX. Okay, so that one's recovering. That's interesting. That's a growth name, and that's recovering. Meta as well, starting to recover. Is NVIDIA recovering even a little bit? NVIDIA, are we holding 127? Yeah, 127, down 10.9%. All right, so let's look at NVIDIA now. Let's look at something juicier. NVIDIA put premiums. Let's go to February 28th. This is, I think, either right before or right after their earnings. I think either way, it's like around that time. I don't hate NVIDIA at 110. At 110, that's not crazy. At 110, that's a delta of 0.2, which is not a horrible delta. 0.3 is what people like to do. 0.2, 0.25 is a little bit more conservative. It's paying $3 right now, so I would have to put up 10,000 in collateral, or 10,100 in collateral divided by 300. That would give me a return of 2.9%. That's 3%. I don't hate it, and I definitely don't hate buying NVIDIA at 110. So there you go. We're going to sell that put as well. We're going to sell two puts on that. So this is, let's see how much money we can get out of this. Or we're getting more. We're getting more as NVIDIA is dropping 126. All right, so let's do this. We're going to get about Tesla's strong right now. Yeah, Tesla's recovering. So we're going to use 22,000 in collateral, and we're going to get about $610 for the right, or sorry, for the obligation. Buyers have the right, sellers have the obligation. For the obligation to buy NVIDIA at $110 on February 28th. Okay, there you go. We got filled on NVIDIA. There you go. 3% return in a month on NVIDIA, 2% return on a month on SoFi. So there we go. We'll look at some other plays in a second, but those are my first two plays for the day. Got a little bit of money on NVIDIA, a little bit of money here on SoFi. Apple right here, 226, that's green. NVIDIA, 126.85, that's down 11%. SoFi right here at 16. So the actual adjusted cost basis on NVIDIA would be 107 because we subtract 110 minus the premium I got, which is $3. Which I don't hate, dude. Buying NVIDIA at 107, if I had to buy, I'm fine with that. I think even with all this DeepSeek stuff, I still think there is a bull case for NVIDIA. If it falls to, at that point, that would be like, what, a 32 PE? I think that would be okay. Meta right here, 637, Palantir 75.77, Hood 49.67. Hood not really giving people a dip. And then Apple at 226 right now. Tesla, where is Tesla? Tesla 404. Hard to sell puts on Tesla today as Tesla goes green. Currently right now. SMCI has earnings on February 4th, not today. SMCI has earnings on February 4th. What else do we have? IWM, small caps, are those green today? Small caps are green. Wow, IWM goes green. Dude, small caps should not be going green on a day like this. Not at all. Not a small, actually the only reason they're going green is because the market's rotating, right? Like usually when large caps fall, small caps fall with them because the whole market gets scared about everything. But today's a little bit of a reversal. Large caps are still red, even though they're recovering. There's a green candle right there, 502 to 515 on the NASDAQ. S&P as well, almost going green. Still down about 1%, but it was down 2%. Now down 1.5. But money decides to flow into small caps and rotate. Maybe this was what was needed to get a little bit of rotation out of large caps. We've been hearing this whole rotation trade. Maybe you needed a little bit of a catalyst, and today's the day. It's a little bit of a rebalance out of tech. I agree. At least for now. Tem is up. So this was Nancy's play. Tempest AI, 54.34. That's up 5.7%. Yeah, dude. If we're still up 5% on Tempest after being up 40% last week, that's pretty risk on, in my opinion. That's pretty freaking risk on. That is not bearish. Tempest AI should not be up 6% today off of a Nancy pump if we're going risk off right here. We're going to get new home sales for December in 2 minutes in the United States. And then we're going to get new home sales month over month. The market wants 670,000 new homes to be sold. We're going to get that number in about 2 minutes. So in 2 minutes, we'll see if that has any impact on the broader market. I'm Beneficial said I bought a basket of dividend stocks Friday and Thursday. Well, that was great timing. Dividend stocks are doing great today. I mean, they're some of the only names that are green. SoFi down 9%. A lot of these dividend names getting some love. Verizon right here, that's green. AT&T is green. TFC is green. Schwab dividend ETF should probably be super green today. Yep, that's up about 0.78%. So definitely the divvies getting some green. Broadcom still down 12%. And NVIDIA still trying to maintain 126.9, just below 127. Brett said he placed the 125 NVIDIA 221 put. Okay, so you wrote an at the money put, essentially. So what premium did you get on that, Brett? So if you did a 125 at the money put for 221, you're getting $600, dude. Not bad. $600. So if we do the math on that, 600 divided by 12,500. 12,500 would be your collateral. 125 times 100. 600 would be the options premium. That's a 4.8% return in about 3 weeks. And again, that's not horrible. And the downside is that you get to buy NVIDIA at $119 adjusted cost basis, 125 minus 6. Which, again, this is why I like selling options. If you are bullish on NVIDIA, you don't have to buy it right here at 128. You could get paid to wait. And if it gets to 125, you get to buy it at 119. with your adjusted cost basis. If it never gets there, all right, you just rinse and repeat, and you get to use that money to then make a return later in the future. And you can keep doing it on the same stock, on NVIDIA, until you get assigned. Wow, Hood above 50. Holy crap. Robin Hood does not care, baby. Oh my. See, where this is not bearish, dude. This is not bearish. I mean, it's really hard to get super bearish on the market when Hoodie, which is a proxy on the market, goes green. Hard to be super bearish here. Please check MSTR. Where's MSTR? MSTR is 353, down 0.32%. NVIDIA 126.5, SoFi 1627, Meta 637. Wow, Robinhood actually getting above 50 right now. Apple catching a little bit of a bid. AMD down 4.3%. Enphase up 1.85. Dow Jones almost going green. Vistra still down 19% on the day. S&P down 1.59. PayPal just went green. Wow, PayPal. Yeah, 89.12. PayPal just went green. IONQ only down 1%. The quantum names, dude, this is not bearish. Quantum should not be this resilient. Look at that. IONQ barely down. D-Wave down 5%. Rigetti down 3%. That's nothing for the quantum names. That's nothing. Rocket Lab 3%. That's nothing for Rocket Lab. This looks like it's getting bought, dude. This looks like it's getting bought. MicroStrategy just went green. MicroStrategy is very close to going green. 353 right now. It's true though. Quantum shouldn't be this resilient, bro. If it's a panic, oh my God, sell everything. You know, market's topping. It's time to get the hell out. Quantum should not be down 1%. It should be down like 80%. Like, because truly, like any stock with no earnings should get destroyed right now if the market is thinking this is the black swan that takes out the bull run. That's not really what it feels like. At least not right now. David says, when you sell a put, do you use your stocks in the account as collateral, or do you need that much cash in the account for collateral? You need the actual cash. So that's why it's called a cash secured put. For a covered call, you need your shares as collateral. But for puts, you actually need the value of your strike price times 100 shares, always times 100, times the number of contracts. You need that much collateral in the brokerage to actually qualify for the premium that you're going to generate from the put. Verizon up 1.6, PayPal 89, MicroStrategy 353. Let's see how the suits are thinking of this stuff. Let's see what their reaction is. CNBC must be very excited they can put the red banner up today. And dude, they had a green banner like 2 weeks ago. And literally their banners are always black or blue. It was so green they had to have a green banner. That's how green it was. And so today we might get the opposite. Real quick, new home sales. It's a beat. It's a beat. 698,000. Wow. Versus 640,000. Dude, a lot of people are buying homes, bro. Look at this. The market thought we would have negative 3.5% growth in the month of December. We came in at positive 3.6%. Why is the housing market so damn hot? Like this is incredible. This is absolutely incredible. We saw some news on Friday as well about his existing home sales were up 200,000 versus market expectations. That's incredible. SaaS names are good today as well. Yeah, Datadog. Some of the where's CRM? Salesforce goes green. Salesforce goes green. Datadog goes green. Palantir still red, but having a nice green candle right there. Down only 3%. It was down 7%. So some of the SaaS names catching up to a lot of this pain as well. Wow, this is incredible. Let's get an update on those new home sales and prices, but that's definitely not super bearish for the housing market.
Numbers somewhere in the 675,000 camp. Those are seasonally adjusted annualized units. We come in better. A whisker under 700,000, 698,000. That's the best rate since September of last year. And a positive revision in the rearview mirror, 664,000 becomes 674,000. This was largely expected, a rebound, but do remember, The month of December was not friendly for 30-year mortgage rates or interest rates in general if you were looking to finance a home. December saw interest rates climb in the 10-year, and they basically, in the 30-year mortgage fixed arena, saw mortgages above 7% pretty much for the entire month. For a dig deeper into this number, let's head east to Diana Olick. Diana?
Rick, it's really interesting that we got a beat on this number. Remember, new home sales are based on signed contracts during the month. So it's the most current indicator that we get of what's going on in the market. And as Rick said, we did see mortgage rates go up over 7% from just below 7% in December. Interesting that back in October, when we went from that low in mortgage rates and shot way up over 7%, we saw new home sales come down sharply. We did not see that in December. There's been this talk of a new normal in the market. We also are seeing inventory supply come down from 8.9 months supply to 8.5 months supply, and prices are still holding. $427,000 was the median price of a newly built home sold. In December, that was up 2% year over year. So what's going on? Well, the builders are buying down mortgage rates. They continue to use incentives, even though their sentiment has gone up very little. They are still concerned about what's going on for their costs, and that was why we got that downgrade that you all just talked about.
And that makes sense because KBH had a great earnings last week as well. So builders buying back the mortgage rates, that is definitely a argument for why demand is continuing to pick up and why people might just not care that much about their rate. If they know rates are coming down, they'll refinance and they'd rather get a good property and a place to live versus be out of the housing market like most people have been for the past couple of years since really interest rates spiked in 2022. So you got some people probably saying, you know what, enough is enough. We know rates will eventually come down and we're going to start buying it. Tesla right here down 1%. NVIDIA still getting hit, bro. NVIDIA can't find its bottom yet. NVIDIA can't find its bottom. 125.18. Chris says, call me if you get a chance. Chris, I will get you on the phone right now. Let's get your take on potentially August 5th, 2.0. And let's see what Chris has to say about all of this. NVIDIA right here, 125.09, down about 12.3% right here, currently right now. Chris, good morning. How are you?
Good, man. Dude, I spent this entire weekend literally reading DeepSeek, all this bullshit just to figure out, like, okay, what are the current threats? What are the current opportunities? You know, you ever done a SWOT analysis?
Yeah, strengths, weakness, opportunities.
Yeah. So I was doing a SWOT analysis on these guys. And I was just like, okay, who are going to be the beneficiaries? Who are going to be the losers?
Dude, you really went back to first principles. You really did a SWOT analysis just to figure this whole thing out.
Yeah. I mean, that's one of the best ways when it comes to like figuring out investing, like when something becomes disruptive, to figure out who the players are that are going to benefit, who are the ones that are, probably going to lose out, and, figuring out how to navigate this whole thing. So, I mean, from my analysis, I think there's like 3 or 4 categories of companies that are going to benefit tremendously. I think the main beneficiaries, believe it or not, are going to be the hyperscalers. Like Google, Amazon, even Microsoft. Well, maybe not as much to Microsoft because they put in a lot of money into OpenAI. But like, let's say right now, you have a workload, right? Like you're basically a cloud provider. You are spending all this money on CapEx. So you're like, oh my God, look, I'm spending all this money on CapEx. So I need to basically get all these workloads on my cloud, and for the eventual payback. Now the thing is, if you make inferencing super cheap, what that does is make more people actually utilize services, right? So the thing is, for these guys like AWS, they don't care. They're like, okay, you want to run AI workloads? Here you go. Here's the model. As the model becomes cheaper, fine, whatever. People are just going to run more. So you're essentially generating more and more business. So from my perspective, I think the cloud providers don't have anything to worry about. They're going to make a ton of money on inferencing. And so the sell-off in the cloud providers doesn't necessarily make a lot of sense to me. And yeah.
But going back to the SWOT analysis, is DeepSeek actually a threat to NVIDIA? What is your conclusion so far on that?
I mean, it'll compress NVIDIA's margins. That's the biggest thing. Like the demand for more CapEx. Like right now, if you remember, like literally like 48 hours ago, you got Sam Altman in the White House with what's his face, with Mayoshi-san, and we're going to spend $1 trillion on Stargate and all this other stuff, right? Yeah, I don't think that's necessary right this minute. Like, you could probably elongate your CapEx cycle now, you know?
Right.
So to get the same kind of like results, you don't have to have crazy levels of AI spend right now in terms of like hardware. So it's just, this has become like the prospect of AI is it's becoming more efficient, right? Efficiency breeds more demand anyway. That's just how things work. The challenge that you run into is that it compresses your margins in the short term. And so this is where NVIDIA will be ultimately, it's not going to be that they're going to be a loser in this, but it just means that their margin is going to be compressed. They're not the only game, well, they are still the only game in town for a lot of things, but you don't necessarily need as many resources to get the job done.
Are you in particular looking for Zucks and Nadella to double down on earnings this week on their CapEx spend? And if you hear them say, we are reconsidering the amount of CapEx we need, do you think that's an immediate telltale about what's going to happen with NVIDIA?
I mean, dude, Satya literally said last week, we're good for the amount of money we're spending. If that wasn't a clue to you on where CapEx is, like, he could have said, no, we're going to expand our CapEx. But no, he's like, we're good. Like, we're not going to join OpenAI in this, like, what's it called? Like, everlasting quest for more and more spend. You know, like, you need an ROI on this thing. So right now, if the costs have dropped so much, like, you know, the total return is not going to be the greatest until like people really step up a ton of more demand. So I think the cloud providers are going to benefit from less CapEx, and basically they'll be able to use that CapEx savings towards probably things like share buybacks, you know, and things like that.
So that would be bullish for all the Mag 7 except NVIDIA, if that plays out, essentially.
Yeah. I mean, that's what I'm thinking anyway. Like, if the biggest beneficiaries are, like I said, going to be the Mag 7, who are basically going to have to, not have to, but basically can limit their CapEx going forward, you know? And yeah.
Okay, so here's another question. If the DeepSeek thing is using a ton of GPUs that we don't know about, let's say they actually use the million GPUs, and, you know, right now everyone thinks it's like 10,000. Could that make this a nothing burger? Because then it does mean that NVIDIA is needed more and more.
I don't think so. The challenge here is that you're going to have a lot less people willing to throw money at companies like OpenAI. Now, why is that? It's because if OpenAI can create something and spend hundreds of billions of dollars, and then some Chinese company can replicate it for a lot less.
Yeah.
It's like, what am I throwing money at this thing for? Especially if it's open source and you're basically going to, you know, I don't want to say copy, but you're going to out-innovate the thing that was spent so much money on. So OpenAI needs to figure out from a business model perspective, like how they're going to be able to protect their moat. And that's the thing. Like, with technology, the only thing that makes you valuable is your moat.
Do you think OpenAI has a moat?
I mean, it changes every day, man. I don't know. That's how technology is. Right now, I don't see OpenAI having that big of a moat because of, like I said, look at what the results are. You know, so I don't know. I don't think that OpenAI's moat just shrunk a lot. I would just say that. Like, the Chinese have basically proven that the moat, they can shrink it with good fashion, innovation, and technology.
Yeah, and it's definitely a wake-up call, I would imagine, to the United States that we can't take the Chinese for granted. Even if they are stealing some of our IP, even if they're, you know, whatever they're doing, if it's working to the extent that they can replicate GPT, even if it's not as good, but still pretty damn good for an open source model, it's a wake-up call to all of us.
It's not just like, the problem isn't that like the Chinese are competing. The problem is the Chinese are basically like, they're basically copying and then giving it away for free. Like, imagine right now, like, you spent $100 billion creating a product and then someone copies it and makes it free. Like, that fucks you over, you know? And the thing is, like, you can't even blame the other guy because the motivation is, well, you know what? I can just basically, you know, just screw you over, you know? So, yeah. So that's the key right now, where can OpenAI develop something that gives it a unique ability to put a giant moat around it, and then it can't be penetrated? And that doesn't seem to be the case right now. So yeah.
All right. So what are you buying, bro? It's a red day. I know you're a sniper. Are you sitting pretty, or are you sniping at anything?
I think I'm going to double down on Google, because I think Google has a lot of business outside of just this, just this AI thing, and the valuations are very attractive for Google. And also, eventually, the workloads are definitely going to be moving here and there. The other thing is Google has really been stepping up on creating products around AI, and they have their own custom silicon. So to me, I look at them and I'm like, they stand to benefit. And also future generations of hardware, they're going to be more efficient and everything else. So my thing is, if AI becomes commoditized, that's fine. But then where are all those inferencing workloads going to run on? Well, they're going to run on Azure. They're going to run on AWS. They're going to run on Google.
Right.
So that's where you want to be. So regardless of how much open source, basically innovates the shit out of things and lowers the price on things, the net benefit is that more people and more things are going to use AI. Right now, I can see 100 different things in my house that if it was integrated with AI, because now it's it's a little bit easier to do. It'd be nice. Bro, Alexa's stupid as hell, man. Do you have an Alexa?
I do. I never use it though.
Dude, it's dumb as fuck, man. You could ask it even the most simplest questions, and it's stupid. So my thing is, hey, why don't y'all integrate that into Alexa now? Because the cost of inferencing just became super cheap. So before it would have cost you a lot of money. So maybe you wanted to not put as much stuff into Alexa. Now, you should make all these Alexas AI powered and smart.
So what I'm hearing from you is that if we take this to its most logical extreme in terms of what's happening with DeepSeek, the biggest loser are all the semis, but the hyperscalers are the winners.
Yeah, I wouldn't say every single one of them, but yeah, I think the hyperscalers long term are winners, and especially shareholders of hyperscalers are long term winners, because once again, the capex can be more measured going forward. It doesn't have to be $100 billion a year,
Yeah.
So if you can reduce down your capex, look at the capex numbers on Google. Look at the capex numbers on Microsoft. Look at the capex numbers on AWS. They are spending a ton of money to get these chips. Now they could say, you know what, maybe we don't need as many chips right now.
And the downstream effect is if Microsoft's only spending 50, Zucks doesn't feel like he needs to spend 70, right?
Right, exactly. And it's kind of one of those things. Remember in 2021, where Google was spending money on personnel because Microsoft was spending money on, and then so Zuck was spending money on more people. And then all of a sudden, all of them realized, wait a second, maybe we don't need as many people. All of them started firing people and became more efficient, right? So I would say it's very likely that we eventually see some announcements throughout this year that maybe CapEx spending is going to level off and actually start making its way down. And if that happens, bro, more free cash flow goes into
But what I'm confused about is if Nadella said and Zuck said they're good for 150 billion last week, do you think DeepSeek could really change that tone in 7 days?
I don't know. It depends on what they forecast the market to be like going forward.
Yeah.
I mean, these guys are smart guys. Okay, they're not dumb people. So they see innovations like this come around, they're gonna be like, wait a second, what are you saying? How much is this going to benefit me, and how much is this? So automatically in their brain, they're thinking, wait a second, I'm spending how much in CapEx to get what results?
Yeah.
So I think everyone is throwing the baby out with the bathwater, and this is the time. I wouldn't say 100% to pick up everything, but just know that these companies have revenue streams outside of AI.
Yep.
Right. So Microsoft has a ton of revenue outside of AI. AWS, same situation. Google, same situation. So they're not wholly dependent on AI. Now, you could say that there's some PE compression that could happen among some of the hyperscalers because it's like, oh, well, future growth is going to be a little bit more limited. So that could be something to, keep in mind. But some of the PEs on the companies are pretty attractive, like especially Google. Google's PE is actually very attractive relative to its earnings, you know? So I'd say you have to be selective on which ones you want to be with. I don't think you're gonna go wrong with things like the two that I'd probably like recommend is Amazon and Google. I don't think they're gonna have any challenges whatsoever. Even Meta is not gonna have any challenges with this. Microsoft may take a bit of a hit only because they spent so much money on OpenAI. And the thing is, some of the valuation on Microsoft might be because of that. So if you look at the PE on Microsoft, it's I think it was in the 40s from when I saw it last time. So the thing is, some of the hype around Microsoft might come from its partnership with OpenAI. But if OpenAI's valuation proposition starts to move downward, that means that people may not be as bullish on Microsoft.
Is there any price on NVIDIA that makes you a buyer?
I don't know, man. Like this is where one, I'm gonna have to wait till Jensen comes out and talks about certain things. Maybe like the next generation of GPUs are gonna be a lot more energy efficient, meaning the cost of inferencing is gonna go down significantly. I don't know. The moat that NVIDIA had was, in my opinion, okay, and this is something that you should ask Jose about, which is NVIDIA's primary moat was in training, right? Not necessarily in inferencing. I mean, yeah, they do a pretty good job in inferencing too, but it's not as efficient to do it that way, like
right.
from a cost perspective. Training, literally, that was like NVIDIA's bread and butter. So the question is, if there's going to be a lot less training requirements, what does that mean for NVIDIA? And that's something that we'll just have to watch and see what happens. There's one last piece to this that's a little bit that's worth talking about. The one downside that the hyperscalers will run into a little bit is that you can actually use AI workloads on PCs at home.
Yeah, there were videos of people using open source DeepSeek models on their computers at home.
Right. So I don't know if that's gonna create a personal computing revolution again, right? So I don't first of all, you need an end product. And you need software and everything else. Because I mean, right now, do you really see yourself let me buy a computer so I can, do analytical work on it? So the use cases are a lot more limited, but it also means that you can do the stuff at home yourself, and you don't necessarily need to, have a giant super cluster with one of the hyperscalers.
Well, what's also scary about this is that all of these AI startups that raised tens of millions of dollars, some of them hundreds of millions of dollars, that are not Perplexity, great example, right? That's a $9 billion company doing 50 million in revenue, and they are built on top of GPT. Yeah. GPT is a proprietary model. If anyone can build Perplexity, which is just a search engine on top of an open source LLM, because GPT is just, it's not as competitive, or it's just as competitive with DeepSeek or whatever, where's the moat in Perplexity, right?
I don't know, man. That's a good question. These are the kinds of things that are all being discussed in the Silicon Valley right now. I mean, the one thing that I'm a little bit excited about, and I don't know if you've seen the demos on this, but it's agents. Did you see that? And that's something that OpenAI actually demonstrated, which is fucking freaky.
Yeah.
Where basically you can just tell an agent, book me a flight, and it'll basically go and browse the internet and find a flight that matches what you're looking for. All that. Remember what we spoke about last time? That is true. And that's the kind of stuff that makes, for me, I look at it and I'm like, man, that's a really good use case. Where basically I have an agent that's doing the work for me, where all I have to do is just ask it a simple question and it does all the stuff in the background.
So now if the models that conduct the agents can be open source, then you don't need GPT. Your point is that's an issue.
I mean, like I said, this is one of those things that I don't know, man. These are things that we're only going to discover going forward. But I think the number of use cases are going up tremendously now because of this innovation. Because if you lower the cost of something, it's like cell phones. Remember, cell phones in the 1980s and 90s used to be super expensive. And then over time, they became cheaper and faster and better. And then everyone had a cell phone, So my thing is, eventually we'll get to the point where everyone's got AI agents and assistants and everything else. You know what my biggest fear is, and this is going to be a little bit out of the investing in the technical field. I feel like agents are going to make us dumb as fuck.
Probably.
You know, if you take away a person's ability to think and do stuff, bro, you are going to make a lot of dumb people. So as an example, did you ever see the movie Idiocracy?
I did not.
Okay, it's a really funny movie, but one of the things is like AI replaces so many things that what eventually happens is that you forget how to do stuff. And instead, you're learning how to prompt stuff instead, right? So it's like a coder. Like you could just ask it to code you something and boom, it's right there. And it's like, oh yeah, I'm good to go, you know? And so if you think about it in the terms of like other things, it's like, if you were able to ask an agent, book me a flight from New York to LA, 7 p.m. to 10, right? If you get used to that and somehow one day you don't necessarily need to book a flight, like, you know, if the AI agent isn't available, you won't know how to book a flight because all you knew how to do was just ask the agent to do it for you.
Yeah.
Right?
Yeah.
So my thing is, if you keep using agents, like eventually you will become really bad at them. So here's an example of something like that in everyone's world. Everyone right now, I know for a fact, especially if you're in the chat and you can say yes or no, you have become worse at spelling because you've had autocorrect. So every time you're typing something, you're like, blah, 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 blah. But then the autocorrect comes in and says, okay, no, this is the spelling of something. I used to be really, really good at spelling. Now I'm not as good. And sometimes I have to think to myself, like, wait, how do I spell this thing again? Because I got so used to the autocorrect on the spelling.
Dude, I've become horrible at basic arithmetics. Like I'll ask ChatGPT for like, you know, some simple math. I'm like, dude, I should be able to do this, but
I mean,
you know,
this is one of the things. I mean, it's not to say that we're becoming dumber. It's just we're becoming more and more dependent on these outside technologies where some of these things we should just be able to do it ourselves, you know?
Yeah. Okay, Kris, last question for you. SMCI, is this a buy the dip down 6% or you kind of hold off and wait for the results?
Bro, that's the one that's killing me right now, dude. That I don't know, fuck, man. SMCI is gonna definitely be negatively impacted, you know, at least from valuation perspective, from this fallout. The challenge is, unlike NVIDIA at least has like a moat on something. Like SMCI doesn't have a moat. I mean, well, technically their moat is in their liquid cooling, right? So liquid cooling, they're pretty dominant on it. But then they also have all these fraud allegations and everything else. And so, you know, what little hope there was that SMCI could come back strong, like, dude, like it's just one bad thing after another, you know?
Yeah, I mean, look, well, if this is an overreaction to DeepSeek and SMCI is not an accounting fraud, I think they gap up on earnings. But
okay, so that's the other problem. Their earnings hasn't come out yet, right?
Yeah.
They got until February 25th, and then they get delisted if they don't finish their audit and all that other stuff. So that's one challenge. So you've got accounting challenges that are going to depress your stock price, right? But now you've got another problem, which is future demand from CapEx.
Yeah.
If you reduce down CapEx, bro, NVIDIA is going to take a hit for sure. But SMCI is going to take an even bigger hit, you know?
Yeah.
So that's where I'd say SMCI, I'm still working my way through it to figure out, like, okay, like what could this possible valuation be? What are the responses of NVIDIA? What are the responses of the hyperscalers? If the hyperscalers start saying, we're cutting back on CapEx, bro, I am out of SMCI. I'm not even going to try to like, oh my God, no, there's a turnaround story here. No. That's it. Just cut your losses, call it a day, you know?
Yeah.
But if there's, you know, certain talk of the hyperscalers saying, well, we've seen demand spikes and we're going to reinvest more money. I mean, you know, SMCI does have some unique value propositions that could make it worth putting some money into. I think if there is a rally on SMCI from from their reporting and everything else, I might just take like a really big chunk of the money that I've put into them and just get the fuck out and just be like, look, this just seems too risky for the value proposition, you know? Because to me, it's all about risk. Like, why chance it? Why, like, you already knew that you were in a bad situation. and you were hoping that that bad situation gets resolved. But now all of a sudden, now you got another bad situation just hit you.
Well, the market's definitely agreeing with you here. Meta is at all-time highs at 650, and NVIDIA's at 123. It's incredible.
Yeah,
That's
well,
incredible.
there you go. Because I mean, Meta's got open source, man. Open source may be the way to go.
Yeah.
Oh, look, boom! It's actually recovered nicely. All right, cool. What about Googs? How's Googs doing?
Goog's at 195. It's interesting. Yeah, I think Meta's getting the open source bid because Gemini is not open source either. So
Anyone who's got proprietary is getting hit right now, but even Google is starting to come back a little bit. So that's good to see.
Yeah.
It's not a lot, but it's there. And Microsoft, yeah.
Overall, it doesn't, and the guys, there's Chris's Twitter in the chat. You can follow him there. It doesn't feel like August 5th to you, does it?
I mean, that was an existential threat, like economy-wise. That's a big difference than this. This is just different than that. So, yeah, I think it's different. Yeah. That whole thing was just the economy was tanking because of the whole the carry trade, which is not necessarily the case. This is like uniquely impacting one sector, but then it might also impact one particular piece of that sector. So hardware is where most of the damage might be from all of this.
Right.
Not necessarily the software and everything else. Like, I think some of the software names are actually rallying.
Yeah,
because
Salesforce is green. Salesforce is up 3%.
Yeah, because the thing is, like, they'll be able to, create products and run them cheaper and sell them to people, So, and if you look at Benioff, he actually tweeted some positive shit about this because he knew the value proposition. He's like, oh, dude, inferencing is becoming cheaper. I can run a model. I can create a product, have a model run, offer this like at a reasonable price to the end consumer. Like,
dude, literally everyone benefits. Startups, it's NVIDIA. That's the only one that's like, all right, are we at 10 p.m. at the party, as Dan Ives says, or is it at 3:50?
Yeah. Oracle's taking a pretty big hit too, man. Oracle's down 8% today, and they're staying down. Yeah, people. I think the news is already out on the hyperscalers. That's why the hyperscalers are starting to recover, but the hardware guys are still in the dumps.
Yeah.
Interesting.
All right, Kris. Thanks for joining. We appreciate your thoughts. We'll talk to you later this week.
Even Palantir's recovering.
Yeah, it was down 7%, now down 3%. So it's really just the semis that are really the ones taking it on the chin today.
Yeah. So I'd say software is the place you want to kind of be, man. The software people are going to make a good amount of money because now one of the biggest endpoint, like the input costs are going to go down. And that means that they're going to be able to sell more products. So it's like, imagine right now you had a software product that you had to charge a client, like let's say $100 a seat, because $70 of that was going towards inferencing, right? If you were able to lower that down, let's say the cost of inferencing down to, I don't know, 95%, so let's say like $5 a seat. Now that means that you could probably sell your product for like $20 a head, like to a seat, get the same margin, technically speaking, because you're still getting $20, like $20, let's say 25. You're able to sell it to more people now. Right. Because now the total cost is going to be just that $5 you paid for inferencing. So now the value proposition to the end clients is going to be like 10x. Whereas before they're like, hey, maybe we'll only get 5 seats for the software product. Now you could say, well, you know what, we're able to lower the cost down to only $20, $25 a seat, and basically get 100 seats.
Yeah, margins go up. There's more disposable income to spend on that stuff. Agreed.
Yeah. That's the way I'd see it. So that's why software is probably going to do well in this whole thing. So we'll see.
Yeah.
All right, brother.
All right, Kris. Good stuff. Talk to you later. Bye. So apparently there was an earthquake that some of you guys felt. I didn't feel anything in Jersey. It looks like it was in New Hampshire and Maine. Felt some of it. Some people in New York said they didn't feel anything. I didn't feel anything in Jersey at all. I feel like I would have said something while I was on the phone with Kris, but did not feel it at all. Yeah, we're way more worried about our portfolios than some freaking earthquake, bro. We're trying to figure out what's happening with stocks. So NVIDIA right here, not catching a bid. This is incredible, dude. Meta goes green NVIDIA goes red. I mean, talk about the market picking sides right here. And Meta's not just going green. Meta's going all-time highs type of green as NVIDIA gets back to below where it was on Christmas Eve. It's pretty incredible. Pretty freaking incredible. Again, covered calls doing good today. If you had some puts, they're doing good. Salesforce looks like Benioff pumped it up nicely today. Up 3% on the idea that compute doesn't matter when it comes to business results. I think that's why Palantir is recovering a little bit as well. Robinhood holding on tight, 48.50. That's not bad, dude. This thing was below 38 less than 2 weeks ago. So kind of holding on to their levels. And then SoFi a little bit above 16.22. I think I sold my puts when it was 15.80. So we're probably up a little bit on those puts, down 9.3% still on the day. Google right here down 2% as well on the day. Nike's up. Nike's green. Nike is green. Nike is green. 2.3. Wow. It looks like value stocks. Hershey's, Nike's, Coca-Cola, Berkshire Hathaway. All of these names are getting a bid as growth stocks take a hit. Apple, although it's not a value stock, being treated like a value stock, up 2.4%. Berkshire's up 1%. AMD's down 4%. AT&T's up 5.3%. Enphase, I still don't know why that's up, but Enphase up 1.63. And then the oil or the nuclear names getting destroyed. SMR down 23%. Oklo down 25%. Uber's green as well. Uber is slightly green, 0.5%. 69 on Uber. Enphase is up because nuclear is down. That actually makes sense. That is fair. That actually makes a lot of sense. So I guess market's doing a little bit of rotation in the energy sector from nuclear to solar. DeepSeek won't answer questions about Tiananmen Square. Yeah, if you ask it anything about China, dude, it gets very defensive. And last night I quite literally asked it, are you working with the CCP? And it gave me a response that was like, every product that comes out of China is in congruence with the social values of the Communist Party, and we are made in the technology that the country is proud of, or something like that. And I was like, okay, so like I said, has China ever killed its own people? And it gave me some bullshit response. And then I asked ChatGPT, has China ever killed its own people? And ChatGPT was like, yep, here's when they killed their own people. So obviously this thing cannot be used in any meaningful corporate setting. It is filled with Chinese propaganda embedded throughout the nature of the model. However, if you ask it anything else besides China, you get some pretty damn good responses. And the fear in the market right now is how the hell were they able to do that without as many GPUs? Now we have Bernstein that just wrote a report on this. So let's read through what Bernstein said, because they came out today with a ton of stuff. Let's read a couple paragraphs of this, but this is what Bernstein said on NVIDIA. Okay. Late last week, a set of new open source AI models from Chinese company DeepSeek took the investment community by storm. And according to many often hysterical hot takes we saw, the implications range anywhere from that's really interesting to this is the death knell of the AI infrastructure complex as we know it. We have spent a good portion of the weekend going through DeepSeek's surprisingly detailed papers. And while we absolutely do not claim to be AI experts, we still feel that we have at least semi-informed layperson's level of understanding. We are still digging in, but we wanted to put some quick, high-level, mostly non-technical thoughts out on the paper. In short, we believe that 1, DeepSeek did not build OpenAI for $5 million. Number 2, the models look fantastic, but we don't think they are miracles. And number 3, the resulting Twitterverse panic over the weekend seems overblown. Did DeepSeek really build OpenAI for $5 million? Of course not. There are actually 2 model families in discussion. The first is DeepSeek V3, a large language model, which through a number of optimizations and clever techniques can provide similar or better performance versus other large foundational models, but requires a small fraction of the compute resources trained. And DeepSeek actually used a cluster of 2,048 NVIDIA H800 GPUs for training in 2 months, which is where you get the $5 million number from. The second family is DeepSeek R1, which uses reinforcement learning, RL, and other innovations applied to the V3-based model to greatly improve performance and reasoning, competing favorably with OpenAI's O1 reasoning model and others. It is this model that seems to be causing most of the angst as a result. DeepSeek's R1 paper did not quantify the additional resources that were required to develop the R1 model. Presumably, they were substantial as well. So the market's kind of saying here, or at least Bernstein is saying right here, hey, the R1 model that everyone's excited about, that probably used a lot more GPUs than expected. And no one's really talking about that fact. Everyone's only talking about the 6 million that were in the original V3 model. We'll read further from what they say in a second, but the rest of the report goes on to essentially say compute and demand is still going to be in, or compute training and storage is still going to be in demand. And this model does not undercut that overarching thesis, which we have to take with a grain of salt from the banks. All the banks have hyped up NVIDIA like a lot. These banks, like they've sold the NVIDIA thesis to their clients for the past couple of years now. 1630 on SoFi, down 8%. And if they're wrong on this, let's just say some people are getting fired like soon. So definitely they do not want to be wrong on the NVIDIA thesis right here. But also, again, I don't think DeepSeek's destroying NVIDIA. NVIDIA right here down 12.9%, Palantir down 4%. ServiceNow hitting all-time highs. Again, another software player. That's up 3.2%, 1161 on the day. Meta still at all-time highs, not slowing down at 650. 655. Wow. This thing was 606 in the morning, bro. 606 in the morning. What's making Meta go through a heavy bounce? It's probably what Kris referenced, which is open source models are getting a pedestal or being put on a pedestal right now because of DeepSeek. And why would you buy Microsoft that paid $15 billion to own half of OpenAI if you could buy Meta that did not pay $15 billion to get a proprietary model, but use $15 billion to train an open source model, and they never have to spend that much money to buy anything proprietary in the future? I mean, it makes sense. You know, maybe that thesis is necessarily not exactly accurate, and we'll find out over the next coming months, but the bull case on Microsoft owning half of a proprietary model that's worth $150 billion. That means Microsoft, and I might be wrong on the exact percentages, but if Microsoft owns 50% of OpenAI, Microsoft owns $75 billion of OpenAI, if OpenAI is worth $150 billion. Again, that number might not be exactly accurate, but in a ballpark. If OpenAI ends up being worth zero, that $75 billion on paper goes to zero, and the $13 billion they spent giving to OpenAI also goes to zero. Now, is OpenAI going to zero? No. But is OpenAI going above $150 billion? I think on a day like today, it would be very hard to get the venture capitalist community to easily respond to an email about investing in OpenAI, because this would be a day where they're a bit confused about exactly what OpenAI's value proposition is, especially if Meta can make a model that's just as good and it's open source. SMCI right here down 6%, Microsoft down 2.4%, NVIDIA down 12.74%, Palantir down 4% right now. Wow, IONQ's up 2%. Look at that. Some of these risk-on assets continuing to get some love. Maybe quantum, some of the quantum people think that it's a threat to NVIDIA long-term. Maybe that could also be another thing piling on to NVIDIA. And that's why we're seeing quantum go a little green here right now. SoFi guidance was good for 2025, or good for 2026, not good for 2025. That's why SoFi is down. But also SoFi is probably sandbagging. Tyler said he sold a $27 put on Rocket Lab. Let's check the premium you got on that. So Rocket Lab's basically at 30. You sold a $27 put, 2/7. So that's 14 days. Wow. No. I was looking at calls. I was like, they're giving you $370. They're giving you 71 cents. Okay, that's reasonable. 71 divided by 2,700. Yeah, 2.6%. That's not horrible. 14 days, 2.6% is not horrible. SMCI is not today. SMCI, let me make sure. SMCI is, February 4th, guys. SMCI is February 4th. Not today. Palantir is next week on Monday. And then this week, this is the earnings calendar. We have Tesla, Microsoft, Meta, JPow on Wednesday. T-Mobile, ASML in the morning. That's going to be important on Wednesday. ASML for the semis. And then Tesla, Microsoft, Meta. IBM that day as well. You got JPow that day. And then the rest of the week, we have Starbucks. We have MasterCard, UPS, ExxonMobil. So far, and then we have Apple and Visa. And then Intel. So far, 75% of companies have beat on earnings, which has been incredible. That trend needs to continue. Justin, DeepSeek has restricted registration to China mobile phone numbers. Huh. Interesting. Let me see if I can get that headline. Yeah, DeepSeek has restricted registration to its services, only allowing users who have a mainland China phone number. Wait, really? Wait, so no one else can get on it? Hold on. Let me try. Let's see. Let me try right now. It's in the App Store. Okay, so let's see if I can. I'm going to download it and then see if I can log into it. I would imagine you're still able to use it. Let's see. Let's see right now if I can get on. If they just went dark on the US markets, I think you can still sign in with Google though. You can try the web interface. Let me see if I can sign in with Google. Let me see if it signs in with Google. No, wow! Holy crap! Wait, this is bullish because we don't have to worry about this stupid DeepSeek. Look at this shit, bro. It's gonna say no. Look at this. Look at this. Login failed. Account service encountered an exception. This has got to be bullish, right? We're done. No, I used Apple. I used Google. I didn't use my phone number. I used Google. But is this a DeepSeek thing or is this like are their servers down? Is that the reason? Are they using like certain servers that are not, or is this a DeepSeek thing? I think it's a DeepSeek thing. It looks like that's, they need more GPU. Oh my God. They need more GPUs. Oh, I'm going to quote that. That's a good one right now. Hold on. I'm going to quote that. That's my quote. I'm stealing that comment as a quote. Thank you for that comment. That's a good one. Just tried signing up and they said, and it said service failed. Looks like they need some more GPUs. LOL. Dude. Yo, that's wild, bro. Or are they limiting it because they're like, wait a second, we don't want all these American users anymore. We want, like, I don't know, what's either their servers failed or they can't handle the demand, or they only want Chinese people using it. Maybe they got so many questions about like what's happening in China and stuff, and they were like, this is too much of a threat to security or whatever. Because a lot of people are asking it some pretty harsh questions about China, and this thing keeps spazzing out. The USA did not ban them. No, that cannot happen. That's not possible. We have to do that via constitutional, we have to do that through a congressional action, or Apple has to ban them. Apple would never do it. Apple's too in bed with the CCP to do that. And Congress didn't pass anything. So this is a China thing. Adam says, so you were trying to say the brightest minds of the Mac 7 couldn't figure out how to spend millions instead of billions to train AI. I don't buy this. Mac 7 have armies of teams researching this. That's another thing. The Mac 7 have so many freaking researchers and PhDs. The idea that China is able to take 200 employees inside of a hedge fund and make something that's better than Apple, Microsoft, Meta, Amazon combined is kind of insane. It's possible. It's just a little insane to assume that's true. Microsoft right here down 3%. NVDA is still down 12.8. NVIDIA not getting any recovery. SoFi getting a little recovery, 1650. SoFi right there at 7.5%. Looks like the 1030 dip got bought up, correct? Okay, who bought the dip? Who bought the dip? Put in the chat. 55% of you said out of 1,500 votes, you guys have started to buy the dip. Who bought the dip and what did you buy? Who bought it and what did you buy? NVIDIA is still the only thing. Oh, Snappy. So I did buy 400 shares of Snapchat on Friday. Honestly, I bought it because the chart looks, I kind of like the look of the chart, bro. The look of the chart, it looks like this thing is either going to $8 or $15. And I really don't think after earnings, they're going back to 8. Could that happen? Given that's happened a billion times, yes. But I do think, in particular, my only fundamental due diligence on this is that their Snapchat Plus program is actually growing really well. They have freaking 12 million people signed up to it. So I felt that 1070 was a bottom, especially because last time we got below 10 was in September 11th at $9. And since then, we've bounced almost every time from 10. So the very basic TA led me to buy 400 shares for a swing trade on Friday. That's at 11 right now. So that's doing okay. They have earnings, I think, in a week. But outside of that, a lot of Meta's at freaking 650. Incredible. That's great. That was at 6:05 in the morning. Robinhood's about to go back to 49. Palantir at 76. SoFi 1650. NVIDIA still stuck at 124. John bought some AMD. Jasmine bought some NVIDIA, 123.50. Okay. Remember, 123 is NVIDIA's $3 trillion market cap. If it goes below 123, it is worth less than $3 trillion. So that is the sort of technical level on NVIDIA that always kind of allows it to bounce. And Jason has talked about this many times, that going below 3 trillion is where the market tends to buy up NVIDIA. Judith bought 1,000 SoFi at 16. Nathaniel bought some Oklo calls. Mohammed bought NVIDIA and SMH. David bought 400 shares of AMD. Grant bought some more SoFi. Looks like SoFi and NVIDIA and AMD are the main ones. Davis bought some Tesla today. Okay. All right. So it looks like people are buying the dip. Scott sold some SMCI 24 puts at $1.40 premium. That's not horrible. 140 divided by 2,400. That is a 6% return. So not too bad as long as SMCI doesn't get hit on earnings. Beneficial said, I bought some SoFi and closed 100 hood covered calls for profit. VST, so that's not bad. 100 SoFi, I think you got it like $15 too. That's not too bad. That hopefully is the bottom. VST still down with NVIDIA. VST and VRT, these are Nancy buys. Still down 25% until NVIDIA recovers. It looks like those aren't recovering. And all of the semis also continue to get destroyed outside of Intel, which is flat, and then On Semiconductor, which is green. AMD still down 4.5%. Energy infrastructure, I think, is also down on the day. Energy, yeah. Enbridge, ET, Next Decade, and KMI, all of them down about 4 to 5% on the day, as the market's thinking there's going to be a little bit less demand for AI. Doug said about 200 shares of SoFi, 100 shares of RDW, 100 shares of Hood, 1 cash curve put on Hood, and 100 shares of KMI. All right, people are buying the dip. People are buying the dip. At least you guys are buying the dip. Meta new all-time highs is wild, bro. That's freaking wild. The fact that the market's given Meta an all-time high, it makes sense, but that's wild. Open source for the win. Open source for the win. Bobby, thank you for the super chat. I bought the Butthole Coin dip. Incredible. Let's actually check on Butthole Coin. It actually recovered. It's still down 17%. But if you got the bottom, then you got a little bit of that dip. Where's Fart Coin? Let's check that again. Fart Coin still down 27% on the day. Some of the altcoins still getting hit. Yes, those are real coins for those that are new and don't know that those coins are out there. Okay, let's get a little bit of an update from the suits, see what they're saying as well, and then we'll keep going from there.
Just crystallizes these existing concerns. We all probably knew you were going to hit some kind of wall of when you've invested too much, or maybe the brute force approach to just simply building more data centers was going to give diminishing returns. I do think it's presented itself as a really interesting test of the market's ability to differentiate.
Oh, hold on. We got Dallas Fed Manufacturing Index real quick. Let's look at this. The Dallas Fed's Texas Manufacturing Activity Index rose 7 points to 12.2 in January 2025, the highest, wow, since October 2021. New orders hit their highest since April 2022. While capacity utilization and shipments also improved, business conditions reached multi-year highs, with the General Business Activity Index jumping to 14.1 and the Company Outlook Index at 18.7. That's pretty incredible. That's great. That's really good. It's kind of for inflation. Kind of good news is bad news, but if the market's not hung up on that narrative anymore, that's incredible. The highest since October 2021. That means manufacturing is back in America. And money is definitely being allocated into new resources, new industries, new manufacturing, and obviously new imports and exports if the manufacturing activity index is as high as it was back in 2021.
And it's passing that test so far this morning. Drops in yields has usually helped the majority of stocks. Breadth has gone inverse to yields all year. Yields were going up. That's pressured the average stock. That's reversing right now. I showed at 8 a.m., banks massively outperforming big tech over the last few months. That's been the market's kind of preferred mode of just rotating around. Now, the problem is AI in one form or another is like a third of the S&P market cap. I mean, if you want to talk about where the earnings momentum is coming from. And so it's not the whole reason for the bull market, but it was the main accelerant. It was the main reason we didn't have a 10% pullback last year. It was the main reason you got 20% back-to-back years while the average company had like flattish earnings. So I think right now you have to kind of pivot around and say, is the rest of the market and the real economy in good enough shape that we're going to be able to support the market here? So far, a tentative yes, I think, is the way to think about it. Bigger question is, whether this is just a recognition moment that the overinvestment risk that people have had in the back of their minds is now going to fixate us for a long time to come. And you have a, Cisco, EMC, late 90s thing where there was a time when you didn't think you could have enough broadband capacity or networking equipment or storage. And then it became, well, the internet's still going to be huge, even bigger than we thought. You don't need as much of the stuff.
Yeah, I think that's an important concept, because the question of our confidence in these stocks is really important here, in the sense that for so long they've been saying, just trust us. We know we're spending a lot, but we can't afford not to spend a lot. The money will come, the realization will come, and also we can't miss out on this. We can't afford to miss out on this. There's no price tag we could put on that. It feels like today that whole idea is being kind of thrown to the wind. And what does that mean for the confidence and the trust element between these big tech companies?
Around the edges, it is. I mean, in the direct hardware-related areas, it absolutely is. And the idea that we're going to be insatiable in terms of energy demand and all the rest of it, that is where you have a little bit of an unwind. I think there's probably a moment where if Microsoft said, look, we're kind of at our limit, we think we're going to be able to kind of make these gains in other ways, I think the market would be fine with that ultimately.
Well, they may have already kind of
exactly
to a certain extent, given they were not 100%. A part of the Stargate partnership. So, I mean, 80 billion is plenty. And Nadella obviously said that last week in terms of their spend on Azure this year. But to your point, Michael, they are not part of Stargate.
Exactly.
And OpenAI needed even more.
Exactly. And so maybe, you're kind of viewing that from the other angle of somebody says we're in deep enough at this point. What's been fascinating about this, I've been talking about this for like a year. The formula was everybody buys as much NVIDIA GPUs as is available. Okay. And for this year, the numbers are $200 billion in NVIDIA revenue. Most of that coming from this data center demand. 100 billion of that falls to the bottom line of NVIDIA. The market puts a 32 multiple on the 100 billion. There's your $3.2 trillion market cap. Meanwhile, the companies spending the money also get the credit in their valuation for spending smart, and they don't get penalized for all this. So it was like this feedback loop of just sort of everybody getting credit for doing this, and that inflated the market. Now, is there any shame in NVIDIA trading down to a 28 multiple right now on that 100 billion? No, of course not. It's fine. It's still a generous thing. So that's what we're doing, is just adjusting how much we're going to pay in the moment, given the uncertainties of how durable the spending boom is.
Okay, so again, Tesla's going green, Meta's going all-time highs, which is incredible. NVIDIA, wow, dude, NVIDIA's about to break 123. Oh my goodness. Again, 123 means NVIDIA goes below a $3 trillion company. 8 cents away from the market saying NVIDIA is not worth $3 trillion anymore. That's kind of wild. That is kind of wild. Tesla's not green anymore. Where's Tesla? Tesla, yeah, it's down 1%. It was green for like a minute at 406, now at 402. The only dip that's really worked out amazingly today is Meta. I mean, I guess SoFi, if you really got the bottom at 15, but that's still down 8%. Maybe Palantir if you were up early in the morning, but like Meta's the one that has really worked out. Robinhood, Robinhood got to, what was the lowest on Hood today? The lowest on Hood today, I think was like 40. Yeah, Hood. I mean, Hood hasn't really given a dip. 40, I guess 46. But again, you had 45.97, but you have to be awake in the morning. If you just woke up and bought anything and it is still green, it's Meta. You could have bought pretty much any time this morning and you're green. But Tesla is not there. Can we get Jose on this afternoon? I will ask him. This was the only day he said he couldn't do Monday. So definitely we'll get him tomorrow. I'll ask if he's free in the afternoon. But the one day he said he couldn't do this week was Monday. So we will we'll see if we can get him later today. SoFi earnings already happened, David. It happened in the morning. It was good. It just wasn't great. And that's why stock's down. Also, I mean, look, it like at the end of the day, dude, it just sucks to be SoFi. To report on a day like this, it sucks, right? Like, it just sucks. It would be suck to be any company reporting on a day like this. This is just one of the worst days in 2025, at least, to report on, because the market's wondering if AI is even real right now. Where's NVIDIA? Where is NVIDIA? NVIDIA below 123 is going to be something, dude. Wow, just there you go. 122.97. NVIDIA gives up being a $3 trillion company. That's gone. NVIDIA, well, it's still slightly above 3 trillion, but probably another 0.5% gets it below 3 trillion. Oh my. Oh my, oh my, oh my. Yo, put in the chat if you have NVIDIA in your portfolio. Put in the chat if you own NVIDIA. How many people own NVIDIA? And if you want to also put your average in there. I'm a shareholder of NVIDIA. How much am I down? Dude, how much am I bag holding? I bought last week at the beautiful price of $139. I'm down $1,600 on my NVIDIA. 100 shares, down 1,600. So your boy's bag holding some NVIDIA here. Who knows, man? Who knows? Is this the dip or is it not? Wow, a lot of you got NVIDIA. A lot of you guys got NVIDIA. Yeah, decent amount of people. Pretty much everyone's average is 100 to 120. That's what I'm looking like. Some people got it in the 130s, but 100 to 120s on NVIDIA. If you bought at 139, 123 is great, right? Yeah, of course. That's always how it goes. 123. So it rebounded really quickly off 123. I mean, it's still there, but it didn't stay below 123 for too long. Now we'll see today if that one gets hit. SoFi 1633, Tesla 403. Tesla again rebounding as well. And then Meta, just the star of the show today, 658 on Meta. Incredible. Incredible. Look, here's the thing. I don't think any of us felt scared about NVIDIA earnings last week. Everyone pretty felt confident that, I mean, NVIDIA was almost at 150 last week, that they would crush earnings. There is no way, in my opinion, NVIDIA doesn't crush earnings and do, what they need to do, unless Zucks and Nadella on their earnings call say, we're going to reduce our CapEx spend. But I really, really, really doubt they're going to say that if last week they said they're spending $150 billion. I mean, we would need to see an aggressive reversal based on a Chinese model that we don't even know the facts about in terms of how China made that model for them to say we're going to stop spending on CapEx. And I'm just calling BS on that. I don't think that's going to happen. I think that'll be the first question on earnings, and Zucks will be like, look, China's cool, but we need to spend our money to be able to build what we need to build. Unless in the next 5 days, all of the PhDs at Meta have a closed door meeting with Zucks and they're like, bro, you don't need to spend that much more money. If that happens and Zuckerberg says on the earnings call, yeah, we're going to reduce our CapEx spend, all hell's going to break loose for NVIDIA. All hell is going to break loose for NVIDIA. I just think the probability of that is like 10% in my mind. 90% is they're going to keep spending. It'd be very, very surprising if they change from that angle. Tess says NVIDIA isn't going anywhere, but it will not continue to grow as it has. It's got a lot of headwinds coming up. This earnings is from prior results. Check next quarter. Yeah, look, that's fair. I mean, the comps are getting a lot harder on NVIDIA. A lot harder on NVIDIA. Wow, 122.2. Dude, 14%. Yeah, now we're below 3 trillion. Now we are below 3 trillion. NVIDIA is officially below 3 trillion. Last time we were at 122 was last time we were there. It's been a minute, bro. Last time we were there was October 1st. October 1st, we were at 118. October 1st. So it's been a good 4 months since we've seen these levels. Lowest in 4 months. Lowest in 4 months. Last earnings, it didn't get to 122. Well, when was last earnings? Last earnings was in November. No, it was above that. It was like 125, I think was the bottom on last earnings. 153 we were at a couple of weeks ago. Meta right here, 658. Meta still green currently on the day. Yeah, you really have to zoom out for 123. You really have to zoom out for 123. Okay, let's keep getting some other perspectives, and then we'll go from there. See what else people are saying on this. Okay, let's pull this up, and then we'll keep going.
It's good to be here, David.
You know, you say that the opportunity set is the best you've seen in 3 decades that you've been managing this strategy. Why is that?
Yeah, so I've been managing the strategy since the summer of 1996. And I have not seen better opportunities than I see today. And there's a couple of reasons. One, you know, a lot of talk about AI data centers and the effect of natural gas. I also love to talk about propane, because when you think about energy dominance from the United States, propane, okay, our country is responsible for 46% of the world's propane exports. And Enterprise Products is the leading independent supplier to the world with a 15% market share. Right behind them, Energy Transfer and Targa Resources.
I would bet those 3 are then in your portfolio. I would be right to
Yes.
guess that, I assume.
You better believe it. I've owned Enterprise Products and Energy Transfer for a really long time. Targa Resources, we just began buying.
Okay, so that's more on the energy infrastructure play. Try to get some more coverage right here on NVIDIA. That did sound like a gunshot, right? Sounded like a gunshot in the background. Wow, NVIDIA below 122. Dude, this is madness. This is madness. This is really, really intense. Krupa says, Amit, is your options video on Saturday good for beginners? I don't want anything. I just want to learn. Yes, it is really good for beginners. I got a lot of good feedback on it. It was 3 hours. I do not think you will ever have to buy a course on options if you watch that video, at least for the basics. More advanced stuff is different, but for the basics, I think it should get the job done for pretty much everybody. But goodness gracious, dude, 121.72 on NVIDIA. This is aggressive. This is aggressive. Here, let's get some more coverage on DeepSeek. This is bad, bro. This is like 15%. When has NVIDIA had 15% down? 121.5 just broke through 123. When has NVIDIA had a 15% down day? Last time I think this happened was not August. August 5th was one of them, but it was, do you guys remember there was a March dip? Or it was an April dip. It was April 2024. I remember because I bought $1 of NVIDIA at like $70 or something, right? It was like that. It fell from 900 to 700 or something. But I haven't seen, and that was only 10%. That was not 15%, which is what we're seeing right now.
About DeepSeek's latest AI model being more efficient while running on a lot less advanced NVIDIA chips. Released last week, it's already being called what is a major breakthrough as the app shows its work, its reasoning, it answers users' prompts. I, by the way, was spent basically all weekend playing with it. It is the #1 app, I believe, on Apple right now. The product overtaking ChatGPT today as that on the App Store that way. DeepSeek, which was created by a Chinese hedge fund manager, also capturing the attention of leaders, as we mentioned at the World Economic Forum last week in Davos.
We should take the development out of China very, very seriously.
What we found is that DeepSeek, which is the leading Chinese AI lab, their model is actually the top performing or roughly on par with the best American models.
If the United States can't lead in this technology, we're going to be in a very bad place geopolitically.
Now, you can take a look right now at the AI-related stocks. So NVIDIA, ARM, AMD, Microsoft, Meta, interestingly, on that list, given it's open source. We got to talk about the open source, closed source bit of this as well. And then
That's a shocker to see NVIDIA down by more than 12% right now.
Absolutely. And then you have global chip stocks also in the red across the board, ASML Holdings and others. There is the question, I will say, Alexander Wang made the point last week, and it's become sort of the question mark about all of this, which is, you know, he suggested on our air that it is possible that they were using some of the highest performing NVIDIA chips, perhaps as many as 50,000 of them, to build this model. Now, and they weren't supposed to have those chips.
Right.
If
So
that's
if that's
true,
not the size.
The dynamic is different. If it's not true, then maybe all bets are off. It's possible, by the way, even if it is true, meaning even if they use those chips to create this, or at least partially to create this, it is still a significantly more efficient and better model. I think everybody agrees that right this moment, I mean, I don't know if did you get to play? It is mind-blowing.
It looks really great. I mean, it feels like it's open source, so people can test this out themselves.
But I can tell you all the tests that I do just to see whether I think the writing is better, whether I think that it can answer certain questions. I mean, it was not only faster, it was more human. The reasoning is shocking. I mean, there were moments where I was like, "Oh my God, we are so much." You could feel the step change as a person. I will also say, as exciting as it was, there was an element where I became scared because I thought, "Oh, I had the opportunity to talk to all these people last week, and they all said the future's here, and da 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 da." And then you sort of see it, and you go, "Oh, okay, I feel you in a different sort of visceral way." So yes, I think this is all happening at a level that when you mark your sort of AI history timeline in life, I think this past week, today, and everything else will be on it.
I think Mark Andreessen put it really succinctly and really smartly when he said that this feels like the Sputnik moment for the AI race, where
NVIDIA is down below 121, just recovered 121. It was at 120.80. My goodness, $500 billion of shareholder value destroyed, gone, up in flames. This is why all your friends say that the stock market is a scam, because of shit like this. Because of shit like this, bro. That's where people are like, yep, I knew it. Markets are a scam. It's all rigged. My goodness. SMCI must be getting hit right here. Yep, SMCI down 11%. Wow. All right, so is 120 the bottom on NVIDIA? Is 120 the bottom? Dude, who was short NVIDIA? That's the question. Were the Chinese short NVIDIA? Someone had to know this was happening. There's no way someone didn't know that short NVIDIA was going to be the trade this week. The question is who? Who was able to capitalize off all this? You know what's wild? You know what's so wild, guys? The reason I did not buy NVIDIA for the past 2 years, and I've said this publicly many times, I had a whole debate with Tanner on Hood Weekly 2 weeks ago, was because of this whole cyclicality thing. And like, I had a big ass debate and I was like, dude, I just don't know, and then finally a week ago, I was like, screw it. It's time to buy NVIDIA. And I decided to buy in at the beautiful price of $139. So it's just like the intuition I had for so long. Could have waited another week before I went back on my intuition, because my intuition essentially is being manifested through this DeepSeek news today, which is that NVIDIA is cyclical. They're not going to have the demand. At some point, there's not going to be enough GPUs needed, and that the models will become commoditized, and therefore NVIDIA doesn't really need to be a multi-$10 trillion company. However, then you look at what Jensen says in the CES keynote, and I started watching more highlights of that, and I was like, these guys are not going away. Like, we know these guys are not going away. And if DeepSeek is a bunch of BS, this has to be one of the best buying opportunities, but I think the market's confused on if it is a bunch of BS or not. I personally still feel it's a bunch of BS. There's no way in hell a Chinese model is going to dethrone the entire nature of AI CapEx spend. Like, yeah, I definitely didn't think I got the bottom at 139. That's for sure. Like, I was pretty sure, okay, I'm just buying to buy, because sometimes you got to buy to normalize the buying, and then I'll DCA. But I didn't know if we were heading all the way back to 120. But here we are. Here we are on NVIDIA. Also, I saw Pelosi buy. Yeah, I saw Pelosi, and I was like, all right, so Pelosi's in this thing again at 140. So, I mean, is it that crazy? I mean, that's our saving grace, right? There's no way Pelosi knew that China had a competing model, because if she knew that shit, she wouldn't be buying NVIDIA. But who knows, man? At this point, maybe Pelosi gets this one wrong. Who knows? Noto's on CNBC. Okay, let's go to CNBC. Let's see what Noto's saying. Again, I don't know, dude. I still think I still think this is not the end of the NVIDIA story at all. It's just the market's acting like it. But it would be hard to believe that the NVIDIA story is completely done on this. Let's pull up Noto on CNBC right now.
Take a look at SoFi today, down 9.5. Despite reporting a beat on the top and the bottom lines in Q4, the company said it saw its best quarter of student and home loan originations since 2021, although guidance did come in mixed for the year ahead. Joining us this morning, a first on CNBC interview, SoFi's CEO, Anthony Noto. Anthony, great to have you. I guess the tape is a little squirrely today. I wonder what you make of the reaction.
Hey, thanks for having me, Carl. We had a record-breaking quarter in the fourth quarter of 24 and a record-breaking year. Record revenue up 25% year over year for the year and the quarter, over 30% product growth and member growth, also really strong margins and returns. So we continue to focus on durable growth, ensuring that we continue to drive strong returns. And we're doing that through brand building and innovation. The business is the best it's been, and I think the best is yet to come in 2025. We actually not only beat revenue and earnings in the quarter, but we raised 2025 revenue above consensus by about 10%. I think the thing that the market's reacting to is our EPS is slightly below where the street was. And that's primarily because we want to make sure we're investing in the business for the long term and not just driving profitability in the near term. So we're committed to 30% incremental EBITDA margins, which is where we were in 23. 24 was a conservative year in which we drove to GAAP profitability for the first full year. And now we're tilting back more towards investment so that we can grow the top line for this foreseeable future over 20%. We actually took our guidance of the CAGR from 23 to 26 and revenue up relative to before based on that incremental spending. So feel great about the business, a bunch of huge milestones in the year, and we're really happy with the outlook that we have.
We mentioned these originations. Do you think that points to a new chapter in the loan cycle?
There's definitely a more favorable backdrop for lending. We purposely took an approach in 2024 that was conservative and diversified the business. By the end of the year, our technology platform revenue and financial services revenue now accounts for 47% of our total revenue. So we're not a lender anymore. We're much more diversified. And we're also moving the revenue that we're generating to fee-based revenue. In the quarter, we had a record amount of fee-based revenue, up 63% year over year. That will be the growth driver going forward. It was 40% of revenue in the fourth quarter, and we expect it to be the significant majority in the future. So moving away from higher risk, capital intensive lending to fee-based revenue.
Anthony, Leslie Picker here. Good to see you. Within the tech segment, can you shed any light or share any color on what your pipeline looks like with regard to getting more big banks signing up?
Sure. Nice to see you, Leslie. On the tech platform revenue, the business is doing well. We would like to see it grow faster. 2026 will be a year of accelerating growth for revenue based on some deals that we announced today. We announced 3 deals. It's much more broad-based revenue stream, one of which is with the government for direct express benefits that will be integrated in 2026. And we also announced a large financial retail company that will be integrated in 2026. And when it is integrated, will be one of our top 10 revenue producers for the tech platform. And then we announced a deal with a national hotel chain to launch a white label debit card and checking and savings account. The pipeline of demand is very strong. The big financial institutions need to upgrade their technology. They're taking much longer to make those decisions than we anticipated, but we're still fielding many RFPs as well as performing proof of concepts as it relates to the financial institutions. But we don't have to wait around for them to make decisions, as there's other areas for us to drive growth, big consumer brands, B2B, as well as government services.
And you shut your crypto services business a little over a year ago. I'm curious, given the new regulatory backdrop, if you would be potentially interested in re-entering that business.
Yeah, absolutely. We've seen really strong member and product growth, 34% member growth, over 10 million members now, and over 14 million products. One of the most desired products when we launched SoFi's mobile app and all of these additional products outside of lending back in 2019 was, in fact, crypto. It was a big part of our invest business. Our invest business has continued to diversify its selection with IPOs, alternative assets, fractional shares, ETFs, and robo, and we'd love to be able to offer crypto again. So if the regulation changes, we will move aggressively back to where we were before, and then go even more broad than that, depending on what the regulation allows. So not just trading and buying things like Bitcoin, but also custodying and clearing, in addition to doing asset-backed lending, if all of that is permissible.
Anthony, there's a cohort that's worried about the low-end income cohort consumer. The percentage that are making only base payments on their credit card is rising. It's hard to build housing wealth because of rates. A lot of the excess savings from COVID are gone. Are you worried?
We're not. I saw that report this morning, and it's completely contrary to what we're seeing. We did see a normalization of credit performance, but it was back to where we were pre-COVID, and that's actually improved for 3 consecutive quarters. We've seen an improvement in our delinquencies, 90-day delinquencies. We've seen improvement in our net charge-offs throughout the year. So we're seeing really strong performance in lending. While we've diversified the business, we still offer 4 different lending products, and we're seeing really strong demand there. We also introduced what's called loan platform business, where we're underwriting on behalf of other people, and we had significant transactions in that area, about $1.2 billion. So it's not just the consumers that are performing well and borrowing, but the demand from capital markets is also quite robust.
That's interesting. In terms of your own margin guide, I believe it was slightly below the street expectations due to more investments. Where are you investing? And I ask in the context of today, where there's this whole question mark surrounding CapEx related to AI, CapEx related to that side of the infrastructure play. And I'm curious if you have any plans that are in that world at all.
Sure. We got into flat margins at about 26%. We're going to stick to that 30% incremental EBITDA margin. Where we're putting the investments is several-fold. First, our invest business is, we believe, the next business to scale the way SoFi Money has. SoFi Money now has more than 5 million members. It's very profitable. It's funding acquisition in the period and still profitable, and has been a huge tailwind in helping us diversify, such that tech platform revenue and financial services revenue is now 47% of total. So we want to invest significantly in our invest business to grow that to a similar level of scale and profitability. In addition to that, we're investing meaningfully in our technology platform to convert SoFi Money over to the core that we have at Galileo and Technisys. We've already moved 2 businesses in that direction. One is our commercial payment services, in addition to buy now, pay later. And so the core money business will move on to that platform as well, and that's a big area of investment. In addition to that, we're building out the credit card business, which is losing tens of millions of dollars. It's a 3-year type of investment, and then it's a great ROE business, so that will be another area of investment. And then in addition to that, we're also investing in insurance through our Protect platform, home, auto, and life through partnerships, as well as small and medium business lending, again, a referral business and a marketplace. So significant amount of investment. We're reinvesting 70 cents of every incremental revenue dollar to sustain that 30+% member and product growth and 25+% revenue growth.
I was going to sneak in one football question, given your history with the league. What a weekend, Anthony. And I wonder what it says about the power of marketing around football right now.
Listen, sports are where SoFi's members are. We have a great partnership with the National Football League, with the Rams and the Chargers in SoFi Stadium. We have a great relationship in the golf with the PGA through TGL, presented by SoFi. We're the official bank partner of the NBA. So sports are absolutely a medium in which we find our members, and we want to meet them where they are. And those have been great partnerships. The thing that's gating our growth long-term between where we are today and where we want to be over the long term in the top 10 financial institution is becoming a household brand name, become trusted and really high unaided brand awareness, and partnerships with the NFL and the other sports leagues I mentioned and the players themselves is a key part of that.
Anthony, as always, appreciate you coming on, talking about the quarter, helping viewers understand it. Good to see you.
Thank you, Carl. Appreciate it.
All right. Noto crushed it. Same as normal. Nothing to critique about that. That was a great performance by Noto. It was a good quarter. Again, he highlighted the EPS estimates might be something that the street's a little upset about, but more important than not is the environment that he's reporting in, which is obviously just not very friendly today. So look, he was pretty upbeat. He seemed pretty confident to me. Did not seem like he was scared or nervous or anything like that. He seemed pretty good. It's a tough day to report. It's a really tough day for SoFi to report. S&P down 1.8%. Tempest right here down 3.8%. The Q's down 3%. Hoodie down below 48, down 6.4%. And then NVIDIA is not catching a bid, bro. 120. Oh, we just hit a new low. We hit a new low for the day. New low for the day. 120.7. Bro, this is kind of insane. Like, you would think after 15%, the market's like, all right, we're done. But no. Like, if this is actually all BS, does NVIDIA just gap back up 15% the next day as soon as the market realizes it's not a big deal? Like, I feel like there has to be some validity to this given how serious the market's taking it. Because I don't know if you get a 15% day on a rumor or on something that doesn't question the existential nature of NVIDIA's moat at the end of the day. Yeah, Chris says right here, forward PEs are just estimates. These are just estimates on if they can actually get to that growth. So it could look cheap on a forward PE basis, but they have to put up that growth. The weird thing, the nuanced thing about this is last week, no one was concerned about NVIDIA's growth. Today, everyone's concerned because of this China thing. And again, the reason that's weird is because Jensen probably knew about DeepSeek. A lot of the NVIDIA researchers knew about DeepSeek. And either they knew and they were keeping their mouths shut until the market figured it out, or they knew and they really didn't care because it's not like they thought their GPU demand would be going away anytime soon. Wow, NVIDIA 120.3. Holy crap. This thing might go below 120. Goodness gracious. Goodness, this is like, dude, even the biggest of NVIDIA bulls, I don't think it's that easy to buy this dip. Because this is not like an irrational dip. It feels irrational, but there might be some rationality attached to the reasoning, which is why it's kind of hard to jump in. Unless you just know NVIDIA so damn well that there's no way you think there's anything reasonable here. All the semis as well following. Broadcom, 16%. Taiwan Semi, not a $1 trillion company anymore. Dell, 8%, Micron, 10%, AMD down 6%, and NVIDIA 11 cents away from going below 120. 11 cents away. VST, all the energy infrastructure, down 27.7%. And again, that's weird also because VST, which is what Nancy bought. Does she buy that and NVIDIA in the same week without having knowledge of this DeepSeek stuff? Or maybe she was caught off guard, right? Maybe Nancy actually legit didn't know. And that messed up her ability to buy. Wow, below 120. There you go. There you go. NVIDIA. Down she goes. Below 120. It's hard for me to imagine Nancy would have bought VST a week before it falls 30% if she knew about China. I think she didn't know. I think she got this one incorrect. Maybe not long-term she got it incorrect, but at least in the short term, her entry was horrendous on VST. And Nancy tends to have a really good entry every time. Every freaking time she tends to have an amazing entry. This one, there's no way. Objectively, she had a horrible entry. GE Veranova, down 20%. NVIDIA, down 15.9%, 119.7 on NVIDIA. No bells today, yeah. No bells today. The main fear now is that irrespective of the DeepSeek story, everyone is now worried that CapEx spending cycle is going to come to an end anytime soon. Yeah, and on Friday, bro, no one had that fear. Literally no one. Zuckerberg was making us think it was only going to go up and up and up. Same thing with Microsoft. Julian says, do you think if Jensen makes a comment saying it's not true, it rallies instantly? Yeah, I think if Jensen just says anything to get people to remember that the only reason DeepSeek is possible is because of their chips. And the only way we're going to get more advanced models is because of their chips. If he somehow gets a message out there into the world, does an interview, anything, it could at least stop a little bit of the bleeding. But as of now, this is different from August 5th, bro. August 5th was some stupid macro yen carry trade. This has nothing to do with the macro. This is everything to do with, does NVIDIA have a moat? Which the answer is yes. But the question is, does that moat then yield the types of earnings growth that the stock is hyped up to be able to receive? And that is the broader question that we are seeing right now. DeepSeek just had a large-scale malicious attack. CNBC is reporting it had a cyber attack. Interesting. So we thought they might have officially stopped Americans from onboarding. What's more reasonable to me is that there is a cyber hack. If that's the case, then who hacked the Chinese? Because usually the Chinese are the ones that are hacking. So I don't know if the United States hacked them. Is it Russia? Is Russia hacking them? I mean, that's weird, bro. They got hacked, huh? Malicious cyber attack. They hacked themselves. Could you imagine? DeepSeek cyber attack, huh? DeepSeek cyber. Yeah, large-scale malicious attack. Oh, it's on their website. It's on their web. It's not even CNBC. On their website, they write, due to large-scale malicious attacks on DeepSeek services, we are temporarily limiting registrations to ensure continued service. Existing users can log in as usual. Thanks for your understanding and support. It could be a DDoS. Yeah, it could be a DDoS. What if they're lying and they're buying a ton of GPUs right now because they can't handle all the demand, and they're like, they're saying, yeah, it's an attack. But in reality, they're on the phone with their plug in Singapore or Japan, and they're like, hey, buddy, we need some more GPUs. Who knows, bro? Who freaking knows? What a story today, man. What a story. NVIDIA 118. Are you kidding me, bro? Holy crap. 16%. I don't think we've seen this in like the past 2 years, down 16%. Last time we got this type of a decline was 2022. I don't think we ever saw 16%, more than even 15% in 2023. August 5th was like 10% max. I think it wasn't even 10. I think it was like 8.9%. It wasn't 16%. Anyone who bought the dip so far is underwater. Which is crazy, because you would think you buy a 15% dip and you're like, all right, we're done, right? Wait, like, this is good. We got the bottom here. 115 is the 61.8 fib from August 5th. All right, well, that means we have some more ways to go if it actually does get hit. Dude, there was this guy on Wall Street Bets that loaded up 140 puts, but he sold them, not bought them, for March 7th. So after earnings, it was like 200 grand. Oh, no, sorry. It wasn't puts. He bought calls. Sorry, he bought calls. He bought in the money calls. They're not in the money anymore, but he bought in the money calls at 142 for expiring expiring on March 7th. Now this guy bought puts actually. So this guy bought $140 puts. He bought 60 of them. He's up $85,000 today. So if you bought the puts, you did well. And then the guy who bought the calls, let me see if I can find it. I saw it last night. He bought a decent chunk of calls going into earnings, which is still far away, still about a month away. I'll see if I can find it, but yeah, he bought a decent number of calls. And NVIDIA was 145, so he bought them at 142. Damn, so hold on, let's look at the 142 call. The 142 call for 221 or for March 7th. Hood is down because the market's down. Hood's again a proxy on the market. So March 7th, 142 call, that's the one he bought. That is down 71% today. That means he put in 200 grand. He's down 70% on that 200 grand. He bought them on Friday. That's pretty freaking wild, bro. That is pretty freaking wild. Yeah, let me call Steve. Let's see if he picks up. He might be in a meeting. Let's see. Let's see if he picks up. Goodness, bro. NVIDIA not finding support anywhere. Not finding support anywhere. But it's only really NVIDIA, dude. It's the NVIDIA and the semis. Again, everything else is kind of ServiceNow's fine. Nike's fine. Yeah, Steve can't pick up. Meta's at 660 all-time highs. Like, it's more so an NVIDIA semis thing. S&P is down 2%. That's okay. Where's Palantir right here? Oracle is down 6%. Palantir is down. Now Palantir is getting hit. Okay, so now NVIDIA's dragging the rest of the market. Same with Tesla. Yeah, now the market's feeling it. It's starting to rotate. Even Amazon down about 1% right here. Starbucks is green. But see, that's weird, dude. If the entire market was getting hit, you would think Starbucks, everything else also just naturally gets hit. This is more so in the growth stock area. If you're in growth stocks, it's hit. If you're in semis, it's really hit. Arista Networks down 20%. Broadcom down 16%. Oh my gosh, bro. Should have stuck with my intuition. We had a long debate on Hood Weekly. 500 of you guys were there. It was like an hour and a half debate. And the debate was literally about this. Can NVIDIA keep up the growth? Is it cyclical? And will there be a moment where CapEx goes down? It was literally a 90-minute debate on this topic. And now here it is. The debate is manifesting itself. See, and the hesitation I have right here on NVIDIA is this is too dramatic of a decline. Tanner, I was just talking about you. I was just talking about the debate we were having on Hood Weekly about this whole NVIDIA CapEx cyclical thing, yes or no. And now we're seeing the downside of it. Wow, below 118. See, this is the problem I have with buying the NVIDIA dip right now. Why is it down this much? Like, there's a dip, and then there's a paradigmatic narrative shift. That sounded very intellectual. But there is a difference between a dip and a paradigmatic narrative shift. And what's happening right here, even if it's going to be short-lived, is a paradigmatic narrative shift on NVIDIA. A paradigm is how you value something. A narrative is the sort of conceptual framework you use to understand, at least in the stock market, a company. And 17% down feels like the narrative has fundamentally shifted on NVIDIA. It doesn't feel like a dip. It feels like the market is completely rethinking their thesis. And that's kind of scary. That's kind of scary. I'm not going to lie. That's scary. It's just a little scary on how we're thinking about this. But then again, is a freaking Chinese censored model the reason for this paradigm? Like, is the market that on edge with their NVIDIA profits that that DeepSeek with a stupid whale logo? Now I'm just being mean to be mean because I'm upset it's down 17%. But like, is that the reason, bro? Is a freaking whale logo on DeepSeek causing all this? Like, this is insane. It's all over an app. All over an app. This is wild. But you guys agree with me, right? It doesn't feel like a dip. This doesn't feel like a dip. This feels like a paradigm shift. Now, maybe this paradigm shift lasts for like a week, and then the market wakes up and they're like, yeah, this was stupid. I don't know why we were overreacting. But Steve said, I'm in a meeting with lawyers. I can't text. I bought NVIDIA because I'm not a pussy. Oh my gosh. Now he's making me feel like a pussy. Goodness gracious, bro. Well, Steve's been pretty convicted on the NVIDIA thesis for a long time. Pretty convicted on the NVIDIA thesis for a long time. So he's definitely going to buy this dip. 117.9. Oh my goodness. Is this a dip or is this a paradigm shift? Is this a dip or is it a paradigm shift? Even if it is a paradigm shift, dude, does NVIDIA deserve to be down 20%? Like, let's say their growth is not going to be 50%. Let's say their growth's 30%. How badly does that re-rate the stock? It could be rather bad. I mean, we have to go through the numbers and see exactly how they think of it. Tanner says it's over in a model that can be made up for the cheap, but I call BS. They were using NVIDIA chips. Tanner, do you want to get on the show? I can send you a link if you have 10 minutes. We can get your SoFi thoughts real quick as well if you want. Tanner says, but I call BS because they were using NVIDIA chips all along. No, I agree. They were using NVIDIA chips, but the question is the inference training from those chips. If they were using H800s, which are significantly less powerful than H100s, and they were able to come up with a copycat of GPT, that's where it gets a little scary. Because even if they had a lot of chips, if they had the previous models of chips, that's when the streets start thinking, okay, so what really is the difference between Blackwell and Hopper, right? And that's where I think you get a little wall of worry that we have to try to climb. But I don't think anyone has an answer yet. Jensen did not say anything yet. Jensen's not even on Twitter. Jensen has not tweeted anything. Nadella said that basically this is bullshit because he tweeted the whole paradox thing about why we're going to need more demand, more inference, more compute, more capex. So Nadella is probably still going to spend his $80 billion. I don't think that's going to change. Microsoft is down 3.7%, but NVIDIA, what a beating, bro. What a beating. Small caps are selling off too. IWM is selling off. Yep. Now it's everything. Meta's the only thing outside of the value names and Enphase and Uber that are green. Some of the software names like CRM, some of the fintechs like PayPal, all of the value names, and then Apple and Meta. That's what you're getting green today. Everything else that's growth or crypto or semiconductor is red. SMCI down 12.2% as well. Link. Okay, cool. I'll send you the link on Twitter, Tanner. Oh my goodness. Oh my goodness. You know what's so funny too? My dad this morning, I came up to him and I thought he would be, I was up really early today. I thought he would be upset because he usually gets upset when the market's red because he's 63 and he doesn't like losing money. And he was like, yo, we should buy some NVIDIA. I was like, what? I was like, who are you? He was like, we should buy. He's like, I've been waiting for NVIDIA. He said that at 125. Now it's at 117. But he was like, yeah, we should buy some NVIDIA. I was like, are you my dad? Like, you're not the guy who buys the dip. He was like, no, it's red. I've been waiting for this. So the fact that my dad was ready to buy the dip on NVIDIA just shows how bad NVIDIA got at 125. And now it's at 117. It's insane. Absolutely insane. Tanner.
What's up?
What the hell's going on? Please tell
me. One, this is the most amount of money I've ever seen leave my account in a day ever. So if we close this will be insane.
Oh no, we got to ring the bell for that. For that.
It's crazy, but you know, okay, so I don't know where to start. Lead me into this a little bit.
Okay, so you've been in NVIDIA for a very long time.
Yeah.
Have you ever seen a reaction to the stock on a headline like this? Let's start with that.
So yes, I've seen NVIDIA move massive swings. That's why I don't even think that this might not even be the end of it. Because NVIDIA has, like crypto, has had its time where it's been cut in half. That's for dang sure. Okay. But I think that the news is actually BS. I think that they were using NVIDIA chips all along. Okay. They can't say it because it's legitimately illegal. And everyone who's out there is calling it out. Zuck is saying it's bullcrap. Elon's saying it's bullcrap. So all these companies have no reason to defend NVIDIA here. Okay, it's in their best interest to not pay NVIDIA's prices, and yet they are reaffirming their capex. They're saying it's bullcrap. They're saying this was done at a way higher cost. So I think that this is an overreaction. People are thinking about there's other things too that I want to reaffirm. Everyone's talking about DeepSeek being only for mainland China now. This doesn't matter at all. It's not about DeepSeek. The idea is that can they make models on the cheap? And the thing is that this might be comparable to an 01 ChatGPT model. It's not comparable to an 03 model. So I think going forward, people are still going to have this crazy capex because they're not worried about the money of today or the models of today. They're worried about the models of the future. So I still think NVIDIA is going to dominate on earnings. Jensen's got to come out and say something. But yeah, my thoughts are all over the place.
Do you believe DeepSeek was able to do this for the amount of money they're saying they were able to do this for?
It's hard, right? No, no. I'm calling BS in terms of like just their overall cost. It's weird how they're phrasing it.
Okay, Let's say they did have a ton of GPUs, but they were older models, not H100s. People are reporting they had 50,000 H800s, and they were able to train this model because of being more creative with, just the innovation of training a model without using as much compute.
Which is getting better. Every single big tech company is saying that they are getting better training costs.
Okay, so if that's the case, then what is the bull case on NVIDIA? Because won't there naturally be less CapEx spend?
No, because the goal is 100x out here, 1,000x out from here. So yes, there's compression, but the goal is so high. That's the thing.
Right.
So yeah, if you want to get super bullish, like what Meta is saying, and they want to replace human coders with artificial engineers, then the goal is so much more than where we are. Now, people have modeled that out over many, many years, and they're seeing, okay, well, all these companies, the 35 big buyers of NVIDIA chips will, let's say they spend this amount over the next 5 to 10 years. Well, if DeepSeek is now proving that, smaller teams that get a little bit more, creative can then create models that are comparable to ChatGPT 01's reasoning, then are they going to need to spend that much? But I don't know, man.
It's easy. That's the problem, right?
But it's the TAM is too big. I don't believe it. I'm calling BS. I think they were buyers of of NVIDIA chips and importing it to somewhere and taking it over to China. I'm not sure, but it's bullcrap. And the fact that all these large tech CEOs are coming out and defending it is what's making me still bullish. But it can drop lower.
Do you think Zuck's on the earnings call this week takes back his statement of spending $65 billion?
No, they've reaffirmed it today.
How do you know?
That's what a source told me today. I thought they read it on here. I'm sure it's already out now.
He put it on Threads. Did Zuck's tweet it?
Yeah, I heard that they reaffirmed it today.
I don't see anything on Threads. Did anyone get any Zuck's tweets? Did anyone see anything?
I'll tell you who. I'll tell you who told me. I'll put it in the private chat.
Wait, source. You're acting like what? Someone at Meta told you this?
Well, I don't want to name drop them, but you know who they are.
How does this guy know?
I assumed it was a Bloomberg terminal thing, but I don't have Bloomberg terminal.
Oh, he has a terminal?
I assume so.
Well, look, we need something public, bro. We need something real from Zuck saying that they're gonna. Like, because Nadella basically did it. You saw Nadella's tweet, right, where he talked about the paradox.
Yeah, I think they're all going to come out and reaffirm CapEx. I don't know. I don't think that they are like their number one case is not to spend $65 or $80 billion. They are looking to lower these costs as much as possible. Okay. So I have a hard time believing that it's possible. I don't think that this is what the market's thinking, like, oh wow, the cost of training is going to go down by 95%. I think that's bullcrap.
Okay, so let's still be more skeptical here. Well, first of all, would you buy this dip as a NVIDIA long?
I haven't yet.
See, so this is my issue.
I do have to go at 1150, but so quick.
Yeah, my thing
Noto's going to be on Bloomberg, but
yeah, it's not about you not buying the dip, but it's rather everyone I'm seeing like feels a little antsy buying the dip when it should be an obvious 20% down. You buy the dip, but it feels weird today, right? It feels weird.
I'm just getting greedy. I think I've seen NVIDIA get real cheap, but who knows? Maybe 117 was the bottom.
Maybe. All right, Tanner's YouTube in the chat. Go cover Noto for SoFi.
Dude, thank you. Yeah. Although I'm in pain, I'm still holding, not selling a single share. I'm going down with the ship. All right. Bye.
See you. Oh boy, oh boy, oh boy, oh boy, oh boy. 119 on NVIDIA. Got a bit of a bounce from 117. Still down 16% on the day. Amit, in what universe do you live in where buying 70% dips is easy? You know, Doug, the easiest 24% dip I bought was hoodie at 23 after earnings. That was the easiest dip. That was not even like scary type of dip. This is different. Like usually on a stock you love down 20%, that should be an easy buy the dip. It should not feel scary. This one's a little different. This one's questioning the extent of NVIDIA's even ability to sell more GPUs in the future, which again, it feels silly to me, but at the same time, this is how the market's reacting. Then again, I love Hood a lot more than NVIDIA. I just know it a lot more. So obviously I'm not an expert on this stuff when it comes to the semiconductors, but you know, in general, this one feels a little bit harder to buy this dip. NBIS is down 35%. Yeah, this one, I know a lot of people have been talking about this one. I still don't know exactly what they do, but 35%. The NBIS is in the semiconductor space, right? They're in the semis, I think. I have not looked at this one. I know a lot of you guys have asked me. I have not looked at this one yet. But this one getting hit as well. Nebis Group. Yeah, I have not looked at this one for a long time. Wait, are they in the semiconductor? They're not in the semiconductor space, are they? Or maybe they are. Well, we'll look at them a little bit later. Did you buy more grab? No, my grab position is pretty full. I mean, I'm only buying grab now if it goes to like $4 or below. So, which could happen if we have crappy earnings. But that one is fully there. Amid H100s went into full production in September 2022. The export restrictions took effect October 2023. There's a year that they had legal H100s. Okay, so if that's the case, and again, that's what everyone's trying to figure out, but then this model theoretically could have uniquely been trained on H100s. Which again, this is the part where everyone's confused. That's bullish for NVIDIA, but then the question is, the inference training, if it required significantly less H100s than Microsoft, even though it still required H100s, that's the sort of innovation that the market's getting excited about from okay, there's a cost reduction that's massive here, that's significant. But no one really has those answers, and no one has the numbers from DeepSeek at all. I guess we'll find out. Buying Nebis is like buying Palantir at 25. Okay, I got to do some due diligence on this one. A lot of you guys like this one. I know a bunch of you guys have been messaging me about that one. 120.6 on NVIDIA, so it's up from 117. Found a little bit of support at 117.2. 120.6. Meta continues to get all-time highs, up 2%. Enphase giving up most of its gains, but still green. Google is red. PayPal's green. TFC is green. S&P still down about 2% on the day. VST, if you believe in the energy data center infrastructure plays, is a buy. The question is if you believe, NVIDIA's demand is real, which is in question today. And again, look, I think this is healthy. I think this is healthy to question if NVIDIA's demand is real. That is not a bad thing to do, especially in a bull market. It is absolutely healthy to be asking ourselves, hey, do we really need to spend this much CapEx? And then you make a decision based on the conclusion you come to on if 120 is a good price for that, 125, 110 on a sold put, 105. Like that is something everyone has to come to their own individualistic decision towards. It's not that it's unhealthy to have this conversation. It's that this conversation so rapidly changed from Friday night to Monday morning to the tune of $550 billion being wiped out to have this conversation. And that's what I think is making it more of an aggressive dip today. Bsoft said, I missed NVIDIA on the last two dips. I told myself if I ever got another chance, I wouldn't question it. So I was basically forced to buy NVIDIA today. Well, there you go. I mean, if you've been waiting for a long time, I feel like this has got to be the moment. Dude, we also know earnings is going to be good for NVIDIA. We know their earnings are not going to be we know their earnings are going to be good. There's no way their earnings shit the bed on NVIDIA. There's no way. Oh my gosh. Big boys wanted an excuse to drop the market. I agree with that. I actually do agree with that. We were going way too green for way too long without the big boys coming in. Dude, it's wild too, because it's like some of the most bullish analysts I listen to on NVIDIA, they think the thing's going to 10 trillion. right? And it's like now today it's even being put in question if it's like if it has a future, given it's down 15%. Guidance might be interesting for NVIDIA though. But see, guidance only gets interesting if the hyperscaler stops spending on CapEx. And if that's not happening, then I would imagine guidance is still in check. So one of the AI guys at Robinhood, he just commented under one of my posts. He said the market is probably pricing in a complete ban on all sales to data centers that Chinese companies can access. I didn't think of that angle. Did anyone think of that angle today? I didn't think of that angle. The market is probably pricing in a complete ban on all sales to data centers that Chinese companies can access. If that happens, it will hurt revenue in the short term. The AI war is long-term bullish for NVIDIA, but definitely weird in the short term. I don't think anyone thought of that today. Did anyone put that in the chat? I didn't hear that comment at all. If the Trump administration is looking at this DeepSeek thing as a security threat, and they're like, okay, these guys got chips somehow, which means we need to double down on our restrictions on selling to China. Yeah, that does hurt NVIDIA's revenue growth to an extent, right? He wrote, the market is probably pricing in a complete ban on all sales to data centers that Chinese companies can access. So for example, if there's some data center or warehouse in, I don't know, a neighboring country near China, and the Trump administration doesn't want China to get any illegal access to these chips, what if they have really harsh restrictions on NVIDIA's exports, and then NVIDIA has to tell investors, hey, the Trump administration said we can't sell as much as we wanted to, and for national security or whatever. And that takes away some of their revenue. Now, granted, China is not as much of their revenue as before, but I mean, it was a lot more 2 years ago. Steve is definitely not taking the opportunity to buy back his Palantir covered calls. I mean, this is not really a dip on Palantir either. Like, Palantir's got to get to the 60s for him to meaningfully get excited about that. And even at 60 2 weeks ago, he was not excited. Palantir at 74 is, I don't think it would be, unless your covered calls were like at 70 or 80. His covered calls are like 45. So he's got a lot more to go. They barely sell to China mid. Yeah, well, now they barely sell to China. So look, that's a good point because they don't sell as much as they used to China. Oh my goodness. All right, fuck it, bro. We're buying the dip on NVIDIA. We're doing it. We're doing it. We're doing 50 shares. I have 100. We'll do 50 at 120. Here we go. Let's buy the dip. Oh my God, it's done. There you go. There you go. Stupid fucking DeepSeek ruining my fucking portfolio today. Dumbass whale logo. There we go. Dip's been bought on NVIDIA. Next 50 we'll buy below 120 if we get there. Even though we were just there. Stupid fucking DeepSeek, bro. Ruining my fucking NVIDIA beautiful cost basis of 139. I should be happy about this, bro. Like, I should be happy. I'm getting NVIDIA at 120. Like, this is, I would have been ecstatic for that a month ago if I didn't have a position. It's just I did have a position. So now it's, now it's buying the dip. Nothing else looks that bad, though. Like, Meta's green, Hood is fine, Grab is fine, Tesla's fine. Like, it's really just NVIDIA. I don't really care about any of the other semis. Stupid SMCI calls are down 8 under $50. But that's okay. We don't have to take any accountability for this one. This one's an easy one to get away with. I do think SMCI is going to be fine, though, bro. I mean, like, the more I've looked into their accounting stuff, although I don't trust management, I do think their accounting is not going to be like, oh my God, this company's literally going to get delisted from the NASDAQ. Because if that happens, then everyone was wrong. Is it really that intense? I don't think so. I don't think so. So hopefully SMCI pumps as well. Meta does not have earnings tomorrow. Meta has earnings on Wednesday. Will it boost the stock higher? It depends. I actually don't like the setup of Meta going into earnings. I mean, this feels pretty ugly. Meta all-time highs going into earnings. I don't know, bro. That's you never really love pumping that much before earnings. But I think they're going to crush $47 billion in revenue. They're going to crush. They're going to beat on EPS. They're going to beat on revenue. The only thing I think the street's going to care about is how much they're spending on this CapEx now that we have this whole DeepSeek thing. And so I don't love the earnings setup given the stock's pumping, but I don't think it has to go down 20%. And ironically, if Meta says they're not spending as much on CapEx like they said on Friday, their stock's probably going to pump on that. NVIDIA's going to get hit. But I think it's highly unlikely that Zuck says we're not going to spend $65 billion because of some freaking Chinese company that made them think they would go up. Bsoft says, this is why I didn't want to buy NVIDIA last week, 1 hour later. So now I'm buying 50 more shares of NVIDIA. Well, dude, I feel like I have to buy NVIDIA over here. Dude, either I sell my 100 shares I bought at 139 or I buy the dip, right? Because it's just stupid then. Like, why do I even have the position? Either I go back to my intuition from 2 weeks ago about NVIDIA as a cyclical company and I get out of the position, take the loss, or I bite the bullet and I say, if you liked it at 130, you have to like it at 120. I mean, it's just, and I personally am not convinced that DeepSeek has ruined the NVIDIA thesis. And if I'm wrong about that, then I'm not going to be the only one who's wrong. There's going to be lots of people that are wrong about that. But I would imagine that can't be the underlying cause for the downfall of NVIDIA. But who knows? Maybe it is. Maybe it is. Maybe it is. That's when you start thinking, well, dude, I did make a lot of money this year already. So, might be time to, if this really hits the fan, have a nice little tax loss against some of that money. That's how bad it is, bro. That's how bad this dip is today. We're thinking of tax loss harvesting in fucking January. That's how ugly this dip is today. SoFi down 10%, Tesla down 1.3%, NVIDIA down 15%. Look, I think at the end of the day, we're not going to know much until NVIDIA earnings. I mean, we'll get a sense from big tech over the next couple of days what they say about CapEx. But if NVIDIA crushes it on earnings, this will all be a distant memory, and hopefully it's not something to be too scared of. What if Jensen starts laughing about this question on earnings, bro? What if Jensen's just like, are you guys serious? You guys really think DeepSeek is messing up the empire that I'm building? You really think DeepSeek's going to take away the $10 trillion empire that I'm building right now? You think I worked 30 years and developed all these patents and intellectual property for a company with a whale emoji to like ruin my legacy? Like, are you serious? Because, bro, I mean, you would imagine that if NVIDIA falls 80% from here, that would ruin Jensen's legacy to an extent. I mean, it would at least ruin the NVIDIA legacy, maybe not Jensen's legacy, because obviously he's phenomenal. He's an innovator who built all this stuff. But still, like if it falls 80%, 50%, it would be one of the biggest bubbles that we've seen in a while. And I guess the street would definitely think of it in a pretty not exciting way. Josh Brown's on CNBC. He's been long NVIDIA for a long time. Let's get his thoughts on this right now.
Owners of NVIDIA. And I'm wondering what you make of today's sell-off, how you're putting it into context, the kinds of questions you want answered, and what all of this means to you.
I think there's a component of today's sell-off where people are very reasonably recalibrating their expectations for how big the total addressable market for new GPU sales is. But then I think there's an even bigger component that's just speculators being unwound. This is the most over-owned stock in the market, and for good reason. People have absolutely gone crazy with options trading here, with leverage. We've got vehicles that are 2x NVIDIA. We've got all kinds of zero data expiration, weekly options. It's an absolute casino that's been built on the back of a legitimately amazing growth story. And so I think if you didn't have that circus in town, you'd probably see the stock down 5 to 10%. But because you have all that leverage, you're seeing much more. I think there are two very important things that people need to know about what's happening with DeepSeek AI and the way it's being interpreted on Wall Street. The first is, it doesn't matter if it's a Chinese government psyop or not. The technological innovation of having an LLM train itself through reinforcement learning is impressive. The cost efficiency of doing inference with only 7 billion parameters rather than 700 billion parameters is impressive. the possibility of being able to do more model training and inferencing with less usage of power and less chips is impressive. It doesn't mean, though, that chip demand is at risk. What I think it means is you're more likely to see an acceleration of AI everywhere, all over the economy. And I think that that's kind of becoming the default version of what's to happen here. The idea of LLMs becoming commoditized, Scott, has always been on the table. That's why Zuckerberg released Llama 2 the way that they did. We've seen this in previous technological revolutions. In the cloud, for example, Google gave us docs, sheets, and slides, which commoditized Word, Excel, and PowerPoint. But everywhere in the world you go, you will still see people using Word, Excel, and PowerPoint. I don't think there's a line of Fortune 500 CTOs who are dying to take a fistful of Chinese AI technology and shove it right into their cloud data. It's unfathomable. So I think this is a little bit overdone. And then the second thing I would tell you here, maybe the more important thing, most of this conversation about the impact of DeepSeek is happening on Twitter. If you know anything about Twitter, X, if you know anything about X, you know it's loaded with hedge fund managers and asset managers who absolutely loathe the Mag 7. They've been waiting for this moment for 2 years. These stocks, NVIDIA in particular, have been making them look bad for 24 straight months, and they're dying for this moment where small caps are up, Europe is flat, value stocks are outperforming growth, and they view this as comeuppance for the people who have been riding these giant tech stocks to huge gains. And I think because there's that desire to see these investors get beaten up a little bit, maybe that's why some of the rhetoric about this being the end of NVIDIA is getting so overdone. I think there's some wish casting happening here from some of the pseudonymous hedge fund managers.
Bryn, I mean, I think one of the most important words that Josh used in that answer was if, because there are a lot of ifs and there are a lot of unknowns, whether this is all, even possible or not. Stacey Rascon at Bernstein, who, by the way, is going to be on with me today on Closing Bell, says, we believe that the DeepSeek did not build OpenAI for $5 million. They say the panic he does. He says the panic over the weekend seems overblown. Kenner Fitzgerald today says this is actually very bullish for compute and for NVIDIA, almost certainly leading to an AI industry wanting more compute, not less. They'd be buyers of shares on weakness like you're seeing today, which is the worst day for this stock since March of 2020. Do you agree with that?
Do I agree to buy more shares today? I'm not sure. Let's see it flesh out. But where I do agree with Stacey, and I think that as an investors, this is what a good old-fashioned unknown looks like. It comes out of nowhere. No one's prepared for it. And this is what you see: NVIDIA down 17, Vistria down 30. But what I do know, if you read the technical paper, it says apparently in the technical paper that $6 million does not include costs associated with prior research on architectural algorithms, et cetera, et cetera. So I think that you have this, what I would call a fast follower, that took all of the success of ChatGPT, OpenAI, et cetera, really smart folks. The smart folks are not stuck in the US, they're all over the world, and they've done something incredibly innovative. And so I think that the overreaction is this like $6 million number, and to think that they did this out of nowhere when the paper actually says that cost does not include these other items, which we don't know. And so I think as an investor, you have to understand your positioning, understand, to Josh's point about the large language models. I'm a big fan of Alex Karp. I'm sure he's kind of laughing today at Palantir because he's been saying forever, LLMs are the commodity. It's what you build on top of that is what's going to create the return. And so if Masa and Larry Ellison and Sam Altman are building all these data centers to go just infer for OpenAI, I think you call that into question. But if firms like Microsoft, Amazon, et cetera, are building these to create, and Tesla, robotics and actually applications for us to use, then I think the story is very much intact. But for right now, since we are in this unknown situation that we came into the weekend, I think you have to take a step back, kind of see how it fleshes out. But I absolutely don't believe that this is the beginning of the end of NVIDIA.
Yeah, Weiss.
Well, got the carp mention. Got the carp mention. Yeah, makes sense. Carp has been saying this for a while when it comes to NVIDIA, or when it comes to these large language models. Here's another clip by Shyam Sankar as well, CTO of Palantir, speaking about this a while ago. It's 45 seconds on the concept of LLMs.
Criticisms are right that essentially, if you're just building a chatbot, it's a pretty thin layer. So what makes it a thick layer is what's the use of deterministic code or algorithmic reasoning in addition to the LLM? What's the integration into workflow? How do humans, are we still chatting here? Are prompts for developers or for users?
Why do LLMs need tools?
Because otherwise you're completely constrained to the parametric knowledge of the model. And I think that's a Sisyphean task. People keep trying to jam more and more knowledge into the model, but what they fail to recognize is that these models are actually very good at speaking regular grammars. JSON, code, it's a regular grammar. How do you use these models in their current state to manage and manipulate application state?
It's bullish Palantir. This whole thing, this thing is not bullish Palantir in regards to Palantir being a growth stock, high beta, and so the market's, tanking and Palantir's tanking with it. But the concept of the market waking up to GPUs or to models being largely irrelevant is good, because it puts more of a focus on the use cases of those models, given the models are commoditized, as they just mentioned. And, one of the winners there, I think, becomes Palantir. So it's annoying short term because Palantir's down because the whole market's down, but it's not like a thesis breaker. NVIDIA is struggling with, is there a thesis breaker today, which is why I think it's down 15.5% right here on the day. I had a friend who just texted me. He bought 77,000 shares of NVIDIA at $117.77. Maybe he got the bottom on NVIDIA. It's not Derek. So you do have some whales that are not on the freaking DeepSeek logo, actual whales, stepping in and getting a little bit of this dip here today. 120.13, not really showing strong support on 120. It was just at 121 for a second. Now it looks like it's struggling to stay at that 120 level. It's actually 77,777. He likes doing these numbers. When you're playing with this money, you just like having fun numbers, buying this stuff. Rich Buddy said I added 2,000 shares of NVIDIA. A bunch of you guys saying you added some more NVIDIA here. 500 shares of NVIDIA. Dude, but it's nice that she mentioned Carp, right? It's nice that she mentioned Carp. Really nice that she mentioned him. I mean, she literally said Auscarp must be laughing today, which he probably is, dude, because he knows these models, this is not the game. The game is the use case. A lot of these models, it does not matter. GPT, Anthropic, DeepSeek, whatever it is, it's a freaking model. That's all it is. It's just the model. The implementation of the model is everything. Dude, it really puts into question OpenAI's valuation, right? Forget NVIDIA. NVIDIA at least has somewhat of a moat in terms of the actual raw GPUs they create to build this stuff. But OpenAI, I think really, if you're a private investor in that company, you've got to be wondering, is this thing actually worth $150 billion today? I know people call Palantir overvalued, and I get it, the multiples extended, but Palantir is providing value to an organization. What is OpenAI doing? Where's the value? If I don't pay $20 a month, where's the value that they get? If I just go start using Llama instead, I know OpenAI is being used by a bunch of startups and API calls, but if those startups can use something else that's open source and they don't have to pay OpenAI money anymore per month, again, where is the value deriving from? It's almost like OpenAI raised all this money to build a model for everyone else, but they're the ones that don't actually get the benefits from that model. Or at least there's not a significant reason for why they would continue to get benefits from that model. Yeah, it seems more like the bear cases for OpenAI, not necessarily NVIDIA today. It was not Steve. Steve did not buy 77,000 shares. Let me text Steve that I bought 50 shares. I'm like, Steve, I joined you. I bought more. Who else bought NVIDIA? Put in the chat. Put in the chat if you bought the NVIDIA dip. I know a lot of you said you did, but that was like, I think I asked like 30 minutes ago. So put in the chat if you bought the dip today at all, at any price. 125, 120, 122, 117. Adam did, Storm did, Imperium did, Luna did. JJ's waiting for 113. Richard did. Man bought 720 shares. Trader Status bought some calls. Eddie bought some 10 debit spreads. What's the strikes on your spreads, Eddie? And are they leaps or are they a little bit more short term? Waiting for 95. Got NVDA. Oh, dude, NVDL must be hit even worse. NVDL, which is 2x long NVIDIA. Yeah, 30% down on the day. 30% down. 31% down. Yeah, NVDL is getting hit as well. Wow, a bunch of you. All right, so pretty much everyone took a little stab at NVIDIA today. The FUD farm said I bought 300K of NVDL. Okay, there you go. If we get a rebound on NVIDIA, these dips are going to look really juicy over the coming weeks. But, dude, the market's not acting like it wants to give a rebound that quickly. But you never know, dude. Jensen said one thing about quantum, and those stocks fell almost 60%. He just needs to come out and say one thing about this DeepSeek thing, and maybe that changes the perception. Maybe. But we're going to have to see. Wow, yeah, pretty much everyone bought NVIDIA. Dude, a lot of you guys bought NVIDIA today. All right, well, we're all in this together. We are all in this together. Spencer, thanks for the super chat. Alexa, play High School Musicals. We're all in this together. That's perfect. That is the right song to play on a day like this. Oh boy. Oh boy, oh boy, oh boy, oh boy. NVIDIA trying to stay in top support of 120. Yes, it's trying. Did a new model just drop for DeepSeek? Is that something? Hold on. DeepSeek new model. Did they just drop a new model? Holy crap. Did they just drop a new model? Oh shit, they dropped a new model. Whoa. Okay, DeepSeek. I've hated how many times I've had to say DeepSeek in the past 24 hours. But DeepSeek just launched an open source model which includes image generation. Oh shit. Janus Pro 7B. That's the name of it, which I think stands for 7 billion parameters. Okay, so there you go. More models by DeepSeek. I'm curious how much this one cost them to make it. The last one cost $6 million because image generation is a little tougher than just text. Especially, yeah, so this is a multimodal model. They're real active for just getting hacked. You know, that's facts, bro. We're having a malicious spyware attack. But hey, by the way, we released a new model. It's like, what? What is going on, bro? What is going on? Dude, if this thing's better than Sora, then can we access it? Janus Pro, can we test this thing? They wouldn't. They definitely wouldn't show us a Winnie the Pooh because the CCP doesn't allow Winnie the Pooh in China. So, oh, I have some pictures of the results. Wow, this is actually kind of good, bro. This is kind of good. Look at this thing right here. Look at this. This was posted on Hugging Face an hour ago. So that's the picture of a girl, Janus to Janus Pro 7B. Steaming cup of coffee on a wooden table. That's pretty good. That's not bad. A glass of red wine. This feels just as good as OpenAI or Grok. These don't look horrible. These look pretty damn good. And it's open source. That's the other thing. It's open sourced here. Wow. Oracle, thank you for the $5 super chat. Why does my Fidelity account say SMCI earnings are today? They are not today. They are February 4th. From my understanding, they are February 4th. So we're not going to get those results today. Wow, this is good. This is not bad. They delivered more stable outputs for short prompts with improved visual quality, richer details, and the added ability to generate simple text. The image resolution is 384 times 384, as you can see viewed right here. Again, like this is not bearish for NVIDIA. What's bearish is, did they use a lot of GPUs to make this or not? Because if they didn't, then that's the issue. If they didn't need to use as many as OpenAI did, then that's what's getting the street to start wondering what's happening here. 120 on NVIDIA, looking like it's going to go below 119 here. Looking like we're going below 119 or below 120. Yeah, there you go. 119. 119. Let me check SMCI's website. A lot of you guys are saying SMCI's today. SMCI. No, it's they don't even have when they haven't even released the press release that you release to say when you're going to have earnings, which every company does. So if they haven't released that today, I don't think we're going to get any SMCI. Not today. Oh boy. Oh boy. Oh boy. Boy. But again, outside of NVIDIA, it's like, it's bad, but it's not. I mean, Tesla down 2%. That's whatever. SoFi, that's just the bad environment they reported in. IONQ's down 3%. Uber's up. Again, it's not August 5th type of bad, but it's also not August 5th type of recovery either. I mean, some names you're getting a little recovery, but a lot of other names you're still seeing a perpetual decline. NVIDIA being the poster child right here, down 16% on the day. Let's get a little bit more coverage from this, and then we'll keep going.
What do you do?
Well, unfortunately, and fortunately today, but it's only today, NVIDIA is not a large position for me, as I've been saying. And
is for some. Many.
It is for some.
Is for many.
And what I would say is that the reason it wasn't a large position is because necessity is the mother of invention. So I don't recall any time in history of technology that I'm aware of where a company, and I've said this repeatedly, where a company like NVIDIA has been able to hold their technological edge. So I don't know what to do about NVIDIA now. To Brent's point, there's so much we don't know. This is the knee-jerk reaction, largely driven by the market that we're in, meaning that ETFs are 50% of it, lots of leverage. But here's what I do know. If this is the future, in other words, lower costs, then I will tell you that Google, that Microsoft, that Meta should be up today because their costs of building out new capabilities has just come down meaningfully.
Agreed. But the reason they're not up today outside of Meta is because I think the street's not fully believing that they're not going to have to spend as much on CapEx.
So it's puzzling to me. Now, Meta's up, maybe because of that. But all those CapEx budgets that analysts had a problem with, well, if this is true, it's going to take a long time to flesh this out. Well, then that's very positive for them. In terms of the NVIDIA, in terms of the Vertivs, in terms of all the others.
Which are all down. I mean, Vertiv's
getting
down like 27%.
Yeah.
A lot of the power providers to the AI story are getting hammered today.
Right.
It is certainly not limited to either NVIDIA or the hyperscalers themselves.
Right. So in order for those stocks to be down as much as they are, you have to believe that AI innovation is going to stop. Now, there's some technical nuances like, will the fabs and will the data centers run as hot, particularly the data centers run as hot? Will they need as much cooling? Well, that remains to be seen. My suspicion is that the cost now of building them goes down so that you will still need as much power because we're so short power. You will still need as many cooling systems. So on a day like today, I'm not doing anything because I don't really understand what's real and what's not.
That's the hardest part of the story. The fear, Joe, for the hyperscalers is that all of this
to do something really clever with training an AI on reinforcement learning. Everyone needs to take a breath And just understand there are fundamental concerns that maybe we won't need as many chips to do this in the future. That's real. But an outsized reaction like this is almost always going to be characterized as punk in hindsight. It's very rare that these types of moves represent the end of something. And we had a moment in September where NVIDIA was in a 25% drawdown. I forget what we were worried about back then. But in that moment, absolutely, there were people getting unwound. There were people who were too leveraged. There were people that were way too enthusiastic about NVIDIA. Either from a positioning standpoint, it was too big in terms of their allocation, or they had too much leverage or margin. That stuff has to play itself out. And in the aftermath of that, you're going to find out exactly how much this move was an overreaction. So let's say maybe half of it is, which is that's like my hypothesis at this point. If that's the case, there's opportunity here to not panic. And I think that that's what people really should be thinking about. Yes, there's an opportunity to do something, anything, just make the pain stop. Okay, sure. But there's also an opportunity to not. And a lot of that is dependent on how you went into today, how overly bullish you already were. And so hopefully for the people watching the show, they've heard the skepticism and they've heard us talk about how challenging technology valuations are right now. And they didn't come into this moment like fully leveraged to the hilt. Hopefully that's the case. They have the opportunity to not panic.
Well, I mean, you know, look, Dan Ives is out today, calls this a golden buying opportunity, says the threat is minimal. JP Morgan, their trading desk on DeepSeek, says the first major fundamental challenge to Mag 7 and the AI theme. Too early to abandon that. Those who are coming out in such stern defense, I mean, I don't know. Do they know any more than anybody else at this moment?
They don't.
They
Like,
don't. It's a little like to have to run to the printing press to put out a note in defense of all of this before we really have all the facts seems somewhat counterproductive for our viewers.
It does. It does. And, you know, I'm sorry, Steve, something that Josh said. I mean, Josh, you know this well enough. There are people that are in an uncomfortable position right now. There are people that have extended leverage. And you have to, at a certain point, have a process, a risk management strategy that you're relying on. I know you look at technicals. All right, you have a break below the 200-day moving average for the very first time. So you're not uncomfortable. I get it. I understand that. I'm not uncomfortable in my position either. But some people are, and those people, I think, have to address it. And I think for us to think that everyone right now has the right position in NVIDIA and then not extended in the leverage in an environment, Scott, like you're saying, where we just don't know, I disagree with that.
Well, because there are so many, you know, an answer. Hang on, Brent, I'll get you in a few. I promise you. I want to bring in Deirdre Bosa from San Francisco because she's been reporting really out front of many on this story, knows DeepSeek, what it is and why we're even having this conversation. And what I really see, Dee, as a few key questions that I hope you can shed some light on. Number one, did it really train the model for $6 million? And I think there's a fair amount of skepticism from those that I've been speaking with, and you, I'm sure, have been speaking with more people than me. Did it really, this model, outperform the benchmark? Did it really outperform OpenAI? Is it really the breakthrough that some are suggesting and the stocks are reacting to today? Can you really do that with less computing power? Do they have more NVIDIA GPUs than they're letting on? Those are the types of questions that I am getting from people that I talk to. So I throw it to you.
So let me break this down, Scott. There's unanswerable questions and there's answerable questions. Let me start with the unanswerable. We don't know if they trained this model for $6 million. The research paper says that they used NVIDIA H800s, which are essentially dumbed down H100s to do this, but it is possible. DeepSeek was born out of a hedge fund, a quant hedge fund in China that had access to GPUs and a whole lot of PhDs. Now, what we do know, yes, it is as remarkable as you hear. We've been covering this since that Christmas Day drop, which has really just shocked Silicon Valley. I mean, developers, VCs, founders alike, there is absolutely no dispute here. This is a remarkable model. How do we know this? Because it's open source. Everything most things are published and transparent. That's the beauty of an open source model. So people are quite thrilled. I just got off a conversation with Perplexity CEO Arvind Srinivas, and we were talking about the sell-off and the implications of all of this. And he was saying that, it doesn't mean that NVIDIA is not going to be okay, or the major American AI players are going to be able to recover from this and continue to have breakthroughs. But what it does mean is that the race has really been leveled. So there's things we don't know, there's things we do know, but you cannot dispute how impressive this model is. And let's say we take, what Alexander Wang, the CEO of Scale AI, said in Davos last week. He said that DeepSeek had access to 50,000 H100 GPUs. If that's true, they still created this for many times less. It was less expensive for them to create these incredibly impressive models. So this really does open up a new front. And I would also argue that we're seeing NVIDIA down 15%. We're seeing a lot of the impact on this in the market, but this isn't just DeepSeek. We've been talking about this in tech in Silicon Valley for a long time. What happened before DeepSeek is something quite remarkable also in the AI race. And that is we kind of plateaued when it came to pre-training advancements. We hit the data wall. So the game changed there as well, which enabled DeepSeek to do this. So there's a lot of different factors going on. But the point is that the way that we've developed AI over the last few years, which is throw billions and billions of dollars for bigger and better models, that seems to be over right now. OpenAI, Gemini, Project Stargate, they're going to continue to try and go that route, but it's a lot harder now. And I think that's what the market is taking stock of. They're waking up to it later than Silicon Valley has. This is something we've been talking about for a few months now.
Yeah, that's so good.
Oh boy, oh boy, oh boy, oh boy. NVIDIA not getting any little break right here. 119.6. It's crazy. We thought like 123, 124 would be support. Nope, not today. At least not right now. Everything else in the market, again, still red. Meta, the only one that's really green out of the Max 7. Palantir down about 5.7. Hoodie holding on to 48. SoFi holding on to 16, a little bit below 16. Hood a little bit below 48. Apple, wow, Apple goes green. We haven't looked at Apple in like 20 minutes. 3% on Apple. Oh, Bitcoin, yeah, Bitcoin just went below. Bitcoin just went below with the NASDAQ. Yep, there you go. That's going to hurt the MSTRs of the world. MSTR down 6%. Beautiful. Absolutely beautiful. Coinbase down 8%. Gorgeous. Beautiful and gorgeous. Amazing. Incredible. Guys, I didn't even get to do my new intro for you guys today. I made an intro over the weekend, but like today was not the day to have a super upbeat intro. But I have the intro. It's ready. So maybe tomorrow we will officially have the intro. Where's Grindr? Yeah, where's Grindr today? This one has to be getting hit. Grindr. Wow. Talk about a hedge. 1%. That's nothing. Grindr holding on. That is nothing. Grindr not experiencing any of the pain today. Palantir down 5.5%. Meta now slightly green, but still greened on the day. Dude, I feel like you're in two schools of thoughts right now. Either you believe in Javon's paradox and that more demand means more compute, means more chips, means NVIDIA does not die anytime soon. Or you are in the second camp, the camp being the camp that sold NVIDIA today, and that's why it's down 16%, where you are fundamentally questioning the paradigmatic narrative around if this company will live up to the growth estimates that Wall Street has put on it, which is why it's even worth close to $3 trillion right now. You're in one of those two camps. And it's either you believe it or you don't. And if you're not in any of those camps, then you're just kind of watching from the sidelines and trying to figure out what happens. But the thing is, even if you're on the sidelines, it's going to affect you. Because if NVIDIA takes a hit or NVIDIA goes up, it kind of moves the market, given how much of a weighting it is in the S&P. But I do agree with one of the points we just heard, and Kris made this point as well. If it really is just a chip thing, then the other guys should get a ton of free cash flows and buybacks and excess capital. Net income margins should go up. And this should only be a semiconductor/NVIDIA issue. The rest of the market theoretically should be okay. Maybe the market's not going to pay as big of a premium as they've been paying in the past, but it's not like we should see Meta go down 80%. Whereas the market's acting like right now, NVIDIA could fall that much if this DeepSeek thing is true. My still gut feeling, and I've got a lot of reading and research to do, but my gut feeling is that this Chinese model is not destroying the NVIDIA empire. It is creating a hiccup. It's a nasty hiccup today. Probably a hiccup that has been needed for the past couple months throughout the entire market. A little bit of a re-rating and questioning of the CapEx AI trade in general. But it's not destroying what we all know is inevitable when it comes to these GPUs. At least that's my take right now. Thank you for the $20 super chat. Selective use case data curation and partial parameter activation and training gives reason to suspect that DeepSeek is optimized to excel in narrower domains, in my opinion, and advanced for specific apps, not general intelligence by the dev. Yeah, and that was Tanner's point, right? Tanner's point was like, we are trying to get so advanced when it comes to AGI, and we're trying to go 100x the levels that we're at right now, that even if the economies of scale are taking place and the commoditization of models are happening, we still need to get to GPT-15, and we're only at GPT-4, that it still will require so much damn compute that is the bull case. That is the bull thesis for NVIDIA. Which, to be honest, if anyone believes in the AI revolution, I think that is the answer. Again, there's a lot of nuance to that answer, but still, if we're trying to get to AGI, we're not doing that with $6 million. There's going to be a lot more infrastructure that is involved to get there. $500 million in volume for NVIDIA, dude. That's crazy. It's wild. 500 million shares. 482 million, so just about 500 million traded today. It's got to be one of their largest days in volume. It's got to be one of their largest days. All right, guys. I think that's it for me. First 5-hour stream in the books. Thank you, everybody, for being here. I'll be back on the market close at 3:45. We'll try to get some updates, try to get some guests on the show to help us understand this stuff. I will also be doing some research over the next couple hours to inform myself around what's happening. But yeah, this is a story that unless we get a reversal in the next couple hours, it looks like there is going to be definitely some issues with this thesis, and issues in the context of it's a thesis that's now getting challenged, which is healthy, but it's definitely getting challenged today. It is definitely getting challenged today. For those that are down on their portfolios today, first of all, just some words from me. Number one, everyone's down today. I'm down as well. So let me check exactly how much I'm down right now. I am down on the day, 34 grand. So everyone's down. You're not alone, especially if you're new in the markets and you kind of feel like this is one of your first big red days. First of all, congratulations. Your first red day, your first really big red day is a good thing, because it means you're growing up in the markets, and it means that you are going to be more prepared for the volatility and the swings that happen and what it takes to be an investor. So I would embrace it. And then number two, it's everyone's struggling with you, right? No matter what stock you're in outside of Meta, pretty much today, maybe some of the value names, everyone's getting hit. It is what it is. It happens. You live through these days. We went through phenomenal 2 weeks of January, getting a dip today. It happens. It is the nature of investing. And it's one of those things that it's okay. You know, most people don't know what it feels like to be down 33,000 in a day, right? But then again, most people don't know what it feels like to be up 75,000 in a day. And I've experienced both. And so like, it's just to go through, it's like this, to go through the gains, you need to go through the pain, right? And as you can see in the chat, Phil's down 70K. I'm sure a lot of you guys are down more. Like, it is just, it's the nature of investing. If you don't check, are you really down? That's a good question. If you don't check, are you actually really down? Vanui says, Amit, I wouldn't be surprised if DeepSeek spent $6 million on their LLM. If the US can't match China's energy output, more GPUs won't matter. Yeah, and you know that means that the energy trade comes into question as well. I think a lot of these trades get into question: infrastructure, energy, GPUs, and the street's going to be trying to figure that out over the next couple of weeks for sure. All right, that's it for me. 3:45. I'll be back. Thank you, everybody, for joining. Hopefully, you guys got some value out of this. We'll have a lot more to cover in the market close. Please make sure you guys get some food, breathe, get some water. Things will be okay. Life is okay. At the end of the day, numbers on a screen, and numbers on a screen that still should be relatively up for most people if you've been investing over the past couple of years. It's been a lot. It's been a good couple of years. We're going to have some choppy days. Quite frankly, 2025 is turning like 2024, where 2024 you had some really choppy days. Those dips got bought. Now we have to see if 2025 actually fulfills the 2024 prophecy and buys this dip, which is a pretty nasty dip on NVIDIA. But nonetheless, I think we got to give it a couple weeks to see if the dip gets bought. And if it does and earnings growth is intact, macro is intact, then we'll see kind of how it plays out for the rest of the year. It's down a whole Model Y today. Yes. A little bit less than a Model Y, but still, yes. Word of the day. Let's see what the word of the day gods give us for today. Oh, this is a good one. This is a good one. There you go. This is a good one. Shilly-shally.
Shilly-shally.
To show indecision or hesitation. Be irresolute. Talk about a word about, basically the feeling everyone probably has on buying the dip, right? Shilly-shally. Having a bit of hesitation here. I know I am on different stocks. The jury appeared to be shilly-shallying on the verdict, delaying the final decision. There's no time to shilly-shally. We need to go now. So either you're shilly-shallying on this dip or you're not. I see the question in the chat, so I'll just say it before I end off. What I did today, I sold puts on SoFi, 1350 strike for a month out. I sold puts on NVIDIA for $110, which is another reason I'm not heavily buying the dip. I already sold 2 puts on NVIDIA for 110. So, I mean, I already allocated basically 40 grand of capital or 20 grand of capital for NVIDIA. So that's another reason I'm not being as aggressive, because if it gets there, all right, I'll be obligated to buy those shares. And then I bought 50 shares of NVIDIA. So that's what I did today. Bought 50 shares of NVIDIA, sold 2 puts on NVIDIA, and then sold about 20 puts on SoFi for 1350, expiring in about a month. All right, that's it. Thank you, everybody. I will see you guys at 3:45 on the market close. Bye, everyone. Have a good one.